side, 1.6 lakh contracts on the short side more recently, just around 10 trading sessions ago. So the FI is short, but not aggressively net short like we've seen in the past. What about the options data? Two strikes call for attention, 26,300 call, the 26,100 put. Premium on both those two, around 50 to around 60 rupees on an average in Friday's trading session. And writers have been making money because the markets have gone into a bit of a range-bound mode. So you just punch in, both these two premiums, and you'll see on the upside that 26,350 going by the options data becomes a bit of a resistance. The recent high is something that you'll be tracking, 26,310, and we could visit that at some point, at some part of the day during today's trading session. In terms of support, the options data suggests 26,000, 26,050. That's going to be the first support level, while the 20 DMA, that becomes the important level that you don't want to breach on the downside. The Nifty Bank has been leading the way. That needs to continue to do so. The 20 DMA is rather deep on that particular one. Cues that we're looking forward in this week itself, the domestic cues that I'm talking about, auto sales numbers start trickling in, gives us a sense about, how the markets are looking. So we'll have to focus, on that in terms of the auto space. GST collection number as well will be due today, so we'll keep an eye out on that. And towards the end of the week, the RBI policy will be coming out. So hopefully we get that rate cut from a stock market perspective. But more than the headline index, you need to keep an eye out on the broader markets because that's been crumbling actually. Stark underperformance is what you've seen from the mid as well as the small cap index. And if you ask me what would be on your wish list, I wouldn't mind the Nifty consolidates a little bit, but we start seeing performance from the mid as well as the small cap space. Given that we have big central bank action due in the next week or so, both on the domestic as well as on the global front, you'll keep an eye out on base metals, and overnight you have silver that's moved to a record high, so that's going to be important. The plays are Hindustan Zinc, the only direct play out there, and Vedanta because it's a parent of Hindustan Zinc, and since copper as well has made another high, we'll keep an eye out on Hindustan Copper. So base metals and metal-related stocks will be on my radar.
Okay, fair enough. So those are the cues to watch. By the way, while we're rejoicing that strong GDP print, the macros out of China this morning are not that great. The private sector manufacturing report has come in. It's lower than estimates for the month gone by, and also it's showing some contraction. So a lot of the Asian markets have turned. The mainland Chinese market and the Hong Kong market. Hong Kong is still up 0.5%, but it's well off the high of the morning. And Japan, for instance, some of the big markets like Japan, down almost 1%, So mixed picture across Asia. We'll pull up the implied open. The question is, will the bulls find their mojo back? Because last week, while we hit that all-time high, the momentum was missing. So will that momentum come back in? That remains the biggest question. Also, what remains the biggest question is what next for the India-US trade deal? And here we've got some clues. Commerce Secretary and India's chief trade negotiator, Rajesh Agarwal, has highlighted that two parallel negotiations are underway with the United States. In a conversation with the CNBC TV18's Shireen Bhan at a FICCI event, Agarwal said that they were optimistic about a framework trade deal by 2025 end to address the reciprocal tariff challenge.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India. The stocks are still on, and it is because these are two negotiations also. There's a larger one also which is going on. So talks are on. Our teams are engaging virtually on a regular basis. There are virtual sessions every week on some issue or other. Just wait for some time. You may see the visits can happen either way. Whether we visit them or they visit us. They were in pretty lockdown for some time, 45 days or so. Now they are out of lockdown.
Okay, so that is the Commerce Secretary telling us that maybe we can expect some positivity on the trade deal in this calendar year itself. So before December ends, that would be quite the Christmas present. Well, let's discuss this and more with Rahul Chadha, Founder and Chief Investment Officer at Shikhara Investments. Rahul, thank you so much for joining in. It's not been the year of India, but we are hoping that 2026 turns out to be different. So let's get your broad thoughts in. We had this very strong GDP print come in, though economists are highlighting that the second half might not be as strong as 8%. And then this hope that was a missing link actually. Exports, even in the Q2 number, exports were obviously weak. So then there is this hope that we finally get that trade deal done, at least knock off the additional 25% tariff. How are Indian equities placed, you think, at this point?
Yeah. So I think, Sobi, as you said, the Indian markets underperformed the region considerably. And coming into the Q4 of this year, we were taking some money off our China exposure and adding to India, and somewhere closing those underweights. And again, one saw in the October data, after a long time, we had good earnings beats from banks, from Reliance, and across the board pickup in consumption, which came through the GST rationalization. So that was positive. Again, questions remain that, look, can the recovery build on this and be stronger next year? So that's to be seen from here. On the strong GDP print, I think what matters for corporate revenues and earnings is the nominal GDP with a multi-year low inflation that we have in India. We've seen nominal GDP, as you guys also discussed before, in a high single digit. So somewhere that limits the corporate revenue growth and kind of limits the earnings growth here. But again, I think India is done with the underperformance vis-a-vis rest of the region. Now the performance is going to be in line with the region. The important thing is that, look, everybody was expecting this trade deal to happen first by Diwali, then it was almost by November. Hopefully, the additional 25% tariffs are withdrawn by the end of this year.
Uh, yeah, no, absolutely. Rahul, hi, good morning. Prashant here. And you're right. Actually, the by December, from what the Commerce Secretary said, it's going to be the penal 25 and then, of course, the other 20, reciprocal 25 as well. So he was hopeful that both will be negotiated lower by the end of December. We'll see something. But the BTA will take a lot of time. The treaty itself, a trade agreement itself will take a lot of time, is what the indication was. Rahul, the other factor is this the slightly more macro-ish point here, but I mean, we've all been, the GDP numbers are strong, but the tax collection growth, did you look at it? April to October, tax collection growth is 4.5%. The budgeted number is what, 12%? So there's a big shortfall. So, it'll have to be made up via some, I don't know, a disinvestment or RBI dividend or what else, Rahul? And any implications for markets?
What you're saying here, Prashant, is coming out in currency. If you look across the region, most Asian currencies have appreciated against the dollar. So we've only had rupee, which has depreciated 3-4% against the dollar. This is despite having seen reserves move up considerably over the last 12-15 months. I think this higher deficit, some pressure on the tariffs is coming through the currencies, and which is why despite India being a strong structural story, despite government doing all this, which is we saw whatever's happened again on the GST rationalization, the labor reforms recently. So it's a policy overdrive over the last couple of months. The FIs are yet to be that exuberant. So I think somewhere one needs to see this recovery fully kind of a play out. Look, I think the bigger is for us going into 26 is what does this AI-led disruption do to job creation in the formal sector? Any which way we've seen over the years, it was hard for the formal sector, large companies to create jobs in India. A large part of the jobs were created in the gig economies. So, do you see a big displacement coming through? That's to be watched for 26.
All right, Rahul, final question before we let you go. Since you briefly spoke about the FIs, the good news is at least that selling intensity has come down, and people argue that, the flows actually have been coming into the primary market. But do you expect FIs to turn buyers in the Indian secondary market? Because that's going to be important. Otherwise, most of the liquidity that we're getting is being sucked up by all these IPOs. So that's point number one. And point number two, just wanted clarity. So you're working with an RBI cut at the end of this week?
Yeah, I think that's still a mixed bag. With this strong print, maybe if not this week, then in the next meeting. So we've seen RBI being slightly proactive with the cuts this year. So the economy seems okay. There is a good demand momentum back in the economy. So maybe they'll keep some gunpowder dry for future. From a FI perspective, I think FIs will see how the demand momentum continues in Q1. We see a strong rural recovery kind of come through. If we see that come through in urban consumption plays also, if somewhere the tariffs are reduced to 15-20%, which the rest of the region kind of pays, I think that's where FIs get bullish. And again, the broad view is money moves out of developed markets where the sovereign debt crisis is really kind of coming to the forefront. So money moves to the emerging markets. And then depending on wherever the strong fundamentals are there, wherever the earnings trajectory is strong or is inflecting, those markets will get higher allocations.
Rahul, just one last quick, briefly, if you can run us through as a fund, as a long-term investor here, what are you doing now? Are you dramatically changing how you allocate as we head into 26? And where are the big opportunities if there are?
Yeah. So if you look at, I think the growth comes out in semi-urban India, tier two, tier three cities. So the opportunity to play that is through mass consumption plays. I think there's a big opportunity in manufacturing, and this manufacturing would be companies, obviously, which are catering to the local economy, but more importantly, catering to the exports market. So you see. You hear a lot more incidents of European OEMs, whether it's in the aerospace, whether it's in the automotive, looking for alternate suppliers apart from their local suppliers. And I think the Indian companies, which have a good 10, 15 years background history, can gain share over there. So that's a story which is there. We continue to like the healthcare space. Hospitals is something we've liked. I think what one wants in these names one is playing is an added export optionality, because look, growth is not going to be as strong as it was for last 4 5 years. It's going to be better than rest of the region, but again, valuation in India are also at a premium to rest of the region. So you want somewhere of an added optionality of either exports or new segments such as aerospace or something like a power infrastructure place for these companies.
Okay. Good chat. Thanks very much, Rahul. Appreciate you coming on here this morning on CNBC TV18. Look forward to the next one. Well, I think we're going to just spend 2 minutes talking about the GDP numbers and how to interpret it for those of you who are wondering what this means now for the monetary path, etc. as well. But Lata is here with exactly that. Lata, over to you.
Well, the GDP numbers are stunning. No taking away from that 8.2%. It gives a first half average of 8% because Q1 we got 7.8. And individual verticals, like for instance, manufacturing and services, both of them have fired at 9%. Within services, you have, a big sector called finance, real estate, insurance. That one's grown by 10.2%. Government services, public administration, health, education, defense, that category has grown by 9.7. I mean, these are all very good numbers. You want to look at GDP from the expenditure side. Are you spending it on investment or consumption? Both have done well. Consumption has grown 7.9%. Investment, or what you call gross fixed capital formation, 7.3%. It's extremely difficult to argue against these numbers. And that is reflected in the fact that almost all brokerages are now upping their full year forecast. I just give you a sample. SBI and Kotak have pulled it up to 7.8%, HDFC Bank to 7.3%, ICRA to 7.5%. So across the board, this is the full year number, okay? 8% is the first quarter, so people are expecting the current quarter also to be very good because of the GST-led consumption. So where is the worry? The first worry is, as you know, nominal GDP. You count many things in today's prices and then you deflate it. So this nominal GDP is what is seen in corporate earnings, because there you don't have a distinction between how many goods and services extra were produced, how much was it because of prices. You just get the profit number. So if the nominal GDP is growing at 8.7, it can depress earnings. What was the Nifty EPS growth? It was like 2 to 3%. In second quarter, that is where we are talking about a nominal GDP of 8.7. But then again, mid-caps grew at 30%. So, there is confusion as to what really this nominal GDP can do to earnings. The second worry is this 8.2 very reflective? Because like I told you, about 40% of GDP is counted in real terms. How much iron and steel was produced, how much crops were produced. There is no problem of prices. But something like finance, broking, insurance, health, education, you take the current prices and then you deflate it. You only have a WPI number, which is about, for services, they've taken about 1%. Now, we all know that services, school fees, tuition fees, how much those have risen. So there is a kind of a disbelief. Is our real GDP really 8.2? Maybe it is a little less. The third worry is, of course, what will the Reserve Bank do? Can you really go to a rate cut when the economy is firing at perhaps the fastest growth in decades? When did we last see, 8.2 and 8.1, probably between the 2004-2008 period? So that is not a rate cut. Those were rate hike periods. Should you cut now? That is the big quandary. And actually, after the GDP numbers came, the bond yields went up by 5 basis points on Friday. So that's genuinely something which will roil all the consumption guys, autos, real estate, all of them will worry now, is the rate cut coming or not? That can be the dampener for the stock market point of view.
Oh, absolutely. Though, I mean, I saw some notes. Some of the economists are quibbling, saying that second half may not be as strong. So maybe...
Almost everyone believes the second half won't be strong because, you had capex was complete, government capex was completely a first half thing.
Front-loaded, yeah.
And there won't be money, as, Prashant has been saying, tax collections in the second half are likely to look weak, so that will not come. Exports were front-loaded.
Yeah.
Base was very low in the first half. So, definitely we are not getting an 8%. But then full year is still going to be above 7.
Yeah. So, well, let's see if the RBI does want to oblige with another cut or not. We will have the answers by the end of the week. Thank you very much for that, Lada. Well, let's quickly tell our viewers what all we have lined up on the show today. Coming up at 8:35, the management of Studs will join in. Recent listing, and they've come out with their first earnings after the listing. We'll find out how the corporate performance is like. At 9 a.m., we'll be having with us Deloitte India's MS Money to talk about a likely cess on sin goods. It's a new bill altogether. National, health and security cess that's likely to be introduced in the winter session of Parliament. We'll talk about that. At 9:20 a.m., Dheeraj Agarwal of Ambit Investment will be joining in. He's our market master of the day. At 9:35 a.m., we get chatting with the management of L&T Finance, talk about the company's outlook for the rest of the year. After that, NSE's Sriram Krishnan will be with us. We'll talk about the exchanges, of course, Q2 performance, but more importantly, how are business trends looking like, volumes, transaction charges, all that and more coming up with the NSE top management. Towards the end of the show, Lata comes back. Today, with the CNBC TV18 Citizens Monetary Policy, she will, of course, discuss what else, but the expectations from the December 5 RBI policy. Okay, we'll take a quick break on that note. Coming up on the other side, our research team standing by with the key stocks to focus on today. Welcome back. As we've been telling you, cues are a little mixed across the Asian region, but the implied open is telling us that the bulls could be back to their winning ways. Look at that, 100 points higher. The bulls have to take out 26,300 convincingly for the conviction to set in that indeed these are all-time highs and the momentum is coming back, because that was the one thing missing last week. That was momentum. Let's talk about stocks, and plenty of them on the radar as always. We've got our team standing by with the latest. Vinny, good morning. Let's start with you. Speaking of recent listings who are coming out with their numbers, Lenskart is topping the list today. Tell us, how was the performance?
Hi, so good numbers that have come in from Lenskart in Q2 FY26. Obviously, the first quarterly performance post the listing. When you look at it in terms of revenue, around 20.8% growth in terms of revenue on a year-on-year basis. EBITDA margins have come in at 19.8% versus 16.5% last year. And profits of the company have seen a growth of 20%. Obviously, international business, when you look at the division there, what has done well for the company? International business has seen a very good revenue growth. Margins have come in at 3.5%. Last time they were in an EBIT loss in the international business, so that has also turned on the EBIT positive side. Even the India business, that has managed to see growth of 31%, and margins have seen an improvement over there as well. Now, when you look at it in terms of the profit growth, why is it just the 20%? That is mainly due to higher depreciation and lower other income. That is the main factor that impacted the profits of the company, but still a very strong performance that has come in there. The eyewear units sold, that has also seen an improvement. 143 stores, that is something they've added in Q2. H1 same-store sales growth came in at 15.3% as well. And they're targeting more than 550 net store addition in India. Strong growth trajectory in terms of revenue and EBIT for Q3 FY26 as well. So positive commentary that's come in there. And good numbers, we'll expect green on the screen for Lenskart.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Sud. He's here to tell us some stocks that are on the news today. Sud.
Good morning, guys. So auto sales have started trickling in. First company which has reported numbers is SML Mahindra, which was earlier known as SML, issued a strong set of numbers, but we'll have to see if these numbers also have the details of Mahindra and Mahindra's commercial vehicles. That we'll get to know only once the details are out. But as far as total sales are concerned, it's up 102%. It has come at 1,087 units. Cargo vehicle sales have increased by 83%, and passenger vehicle sales are up more than 116%. Coming to Sterling and Wilson, it has bagged 5-year order from Adani Green Energy, and that order is worth 1381 crore, and it's in the region of Gujarat, that is Khavda Renewable Energy Park, and total with this total increase would be of 6 gigawatt, of which 5 gigawatt will be completed in this fiscal. Lupin has received US FDA approval for biosimilar Armilup-Peg, which basically reduces the infection. But good part is total estimated annual sales for this biosimilar is more than $1 billion. Godrej Properties has emerged highest bidder for 5-acre land parcel in Hyderabad and will offer 2.5 million square feet sellable area, and estimated revenue potential is more than rupees 4,100 crores. So all the stocks with green.
So thanks very much for that. Well, more stocks with news flow. Upasana is here with just that. Upasana, morning.
Good morning. First up, let me start with Brigade Enterprises. The company has signed a joint development agreement to develop a premium residential project in Hyderabad, and the estimated revenue potential from this project is about 800 plus crores is what the company has indicated. Next up is Dodla Dairy, the company to receive IT refund of 22.2 crore for assessment year 18-19 and 21-22. Next up is Quick Heal Technologies. Company has entered into a contract with NFSU Research and Innovation Council for implementation of integrated cybersecurity solution, and the term of contract is about 5 years here, and the contract value is about 64.2 crores. Next up is Tejas Networks on our radar. The company receives 85 crore from PLI from the Ministry of Communications. And lastly, coming to NCC, on the back of order win, the company has received 3 additional incremental orders totaling 531 crore during the month of November 2025 is what the company has indicated. So all in all, going with green for all these stocks.
Okay, all right, got it. Thank you for that, Upasana. So we'll keep all of them on our radar as the market opens out today. For the time being, let's move on and figure out what the commodity cues are looking like this Monday morning. Manisha is joining in with the latest. Manisha, good morning. What's the headline?
It comes in from silver, absolutely, because we have extended rally into this one, trading at a record highs above $57.5 an ounce. And with that, it brings us to almost 1,75,000 rupees for the Indian markets. Well, MCX as it opens, we'll see newer prices coming in there. But it clearly has to do with a very strong investment buying. Chinese inventories are at a decade lows, and that clearly has been supportive. For the year, we are up by 98% when it comes to silver. Strong gains is what we're looking at in copper as well, with LME trading at all-time highs, U.S. copper at around 4-month highs. Here as well, it is about planned production cuts, series of mine disruptions, which are keeping the prices on the higher side. What is also trading in the positive has been the crude oil prices. After 4 months of decline, December has started on a positive note after the OPEC Plus meeting on Sunday, deciding against earlier planned production rises in the first quarter of the 2026. And that clearly has been supportive for that one as well.
Okay. All right, Manisha, thank you very much for a quick roundup. So that's the commodity market action and the cues as we kickstart trade. Take a quick break. Coming up on the other side, we'll have Dharmesh Kant, Head of Research at Chola Securities, joining in. We'll discuss some fundamental stock ideas for the day.
Welcome back. Well, Stars Accelerators reported its first quarterly numbers post its listing. We have Siddhartha Bhushan Khurana, the managing director of the company, who joins us on the show. Hi, good morning, Sid. Thanks a lot for joining in. Well, you've done pretty okay, actually, in terms of growth. There's a good growth that we've seen, high teens, with the margins as well holding at around 19% or thereabouts. We're going to be focusing on the top points that we're tracking: strong auto sales numbers, premiumization in focus, and finally, the company's growth strategies. So give us a guidance for the year then. What kind of growth number should we be looking at? And margins sustainable at around 19%? Is there an upside risk out here?
Thank you for having me on the show. Yeah, I think it's been a pretty good quarter for us and also the half year. So if I compare H1 25 to H1 26, on the growth side, on the revenue side, there is a growth of about 6.5%. And on the PAT side, there is a growth of almost like 23%. So there has been a margin expansion. I think going forward, we think that the margins are sustainable. And I think on a year-to-year basis, it could be anywhere between 9 to 10% on the top line, that the growth we're seeing right now.
Okay, all right. And if you could give us some more color then. Penetration is still lower here in India. How do you see the trajectory move up? Give us a sense in terms of exports as well as average selling price. How do you see these parameters move in the time to come? Because this is something that will fuel growth. And in turn, if you get better sales numbers or average selling price, then that flows down into your margins as well.
Absolutely. So I think as you talked about, right, penetration in India has been pretty low. It's at the moment about 0.6 helmets per biker, which globally is at about 1.52. So we are actually less than half as compared to the global average. So going forward, we see an upside on the penetration in India. And I think on the export side, as you mentioned, right, there has been a growth year on year as well. And we're seeing a lot of traction on the export side as well. So I'll just give you a number. The helmet market globally has grown by about 6.5% over the last 5 years, whereas out of India, the exports have grown at 21%. So we expect these kind of numbers to continue for a while. And I think in terms of ASP, right, export helps ASPs. Our ASP on the domestic side is about close to 730 rupees, whereas on the export is close to 1600. This is the blended ASP across both the brands. So as exports increase, we see margin expansion and also revenue growth happening because of exports.
Siddharth, morning, Prashant here. You know, right now, a law says that with every two-wheeler, you need to, there's one helmet, right? Which has to be a part of the sale. Is there any change, I mean, mandating two helmets? And so that is one. And any other regulatory sort of imperative, which, because of road safety, etc., because of all the accidents which you foresee happening at the center or state level, which will be consequential for your business?
So at the moment, the law says that with every motorcycle sold, you have to give one helmet to the consumer who's buying the motorcycle. So it's currently implemented in about 9 states. And there was a draft regulation in June 2025, which said that now 2 helmets have to be given to the consumer while buying a motorcycle. Although it's a draft regulation, we don't know when the regulation is going to come into effect. But sooner or later, we think it's going to come into effect, and that's going to have consequence on the industry as such. The industry is going to grow because you're giving 2 helmets in the same house.
Yeah.
So
Why is it implemented only in 9 states, you said?
So it's, I think the implementation is a state subject right now. So that's why recently Uttarakhand came into this thing as well. They implemented this rule as well. So now when you have 2 helmets being given with every motorcycle, so you're actually addressing the same house. That means you're addressing a pillion rider as well. So we expect the industry to grow as well.
No, absolutely. I mean, it's a huge tailwind for you as if more states implement a law, and with every motorcycle, it's not 1 but 2 helmets. That's a massive fillip, right? But Siddhartha, to go back to your exports point, because exports obviously are going to be very lucrative from a margin expansion perspective as well. Can you share some timelines with us? I mean, what is your export ramp-up timeline? Which markets are you looking at? You also, I think, entered into a tie-up with Decathlon, but I'm not sure if that's only for local sales, or will you be supplying to them globally as well?
So for Decathlon, at the moment, the first production will roll out in the final quarter of this financial year, and that will be primarily for the domestic market. But eventually, the plan is to also export to various markets for Decathlon. And in terms of export strategy, I would say that there are a lot of large markets that we are addressing right now. So Colombia is one, Mexico is another one, Indonesia, Philippines, Spain. And as a part of the strategy, we would be opening a warehouse and a subsidiary in Spain this year, just to be so that the time to market is much faster. At the moment, if somebody places an order, it takes almost like 60 days door to door after the order is placed. So once you have your own warehouse, you're much faster to the market, and you can gain market share as well.
Okay.
It's a lovely location for a warehouse, I must say. And obviously, it cuts down your time to market to Latin America.
Yeah.
So it makes full sense.
All right. And Siddharth, I need to compliment you. Some of the new helmets that you've launched are quite good. That day I was, driving back from work. I stopped at Dadar and I looked at the collection. Next few days, I'll be picking up a new helmet after a few years. So all the best with regard to business. Your shareholders will track the numbers. I'm tracking the, the new variants that are coming out with as well. Wishing you a good day ahead, and we catch up rather soon.
Thank you.
Well, let's focus on the markets then. The Nifty has scaled new highs, but the broader markets have been in pain. Nimesh puts out a very, very interesting piece on the pain that we've seen in broader markets. Nimesh, take it away.
Well, as you rightly said, while the Nifty is at Bank Nifty is at record highs, there is a bigger pain in the broader market. So that's been a struggle point as far as markets are concerned for this year. Just look at the data now. I've looked at so Nifty at all-time highs, broader markets in pain, and a lot of the stocks in the broader markets are down 50 to 70%. Now, let's look at the individual, which represents the broader markets, the BSE Midcap, Microcap, and the Small Cap indices. 50 to 70% of those constituent stocks are down or have given negative returns Y2D. So that's the kind of pain we've seen in the broader markets. The first will be the BSE Midcap Index. I've just identified some names which are down 50-70%. This is a list. Ola Electric down 52, Brainbees is down 52, so is Vedant Fashion, Kalyan Jewellers and Oracle down almost 35-37%. This is a small list of big mid-cap losers. The second list is much higher, the BSE Small Cap Index. Look at the kind of pain in the small cap stocks. Sadhana Nitro is down 86%. Vishnu Prakash is down 72. Dreamfuchs is down 60. So is Pakka and MobiKwik, one of the recent listings, down 68%. The list is much higher there. Even the quality names like Praj Indices is down 60%. Tejas Networks down 60. So is Pravek, Protein, and Ganesha Eco. And all these names have got a decent institutional holding as well. And they are down Y2D 60-70%. So that's the small cap index. The third is the micro cap. Even this list is quite long, but I've just identified 5 big losers. Jindal Worldwide is down 60, Ease My Trip, Orchid Pharma, KNR Construction, Route Mobile, all down 50-60%. So that's the kind of pain in the micro cap as well. Now I'm looking at the BSE Midcap 100, which is the so-called large cap liquid Nifty names, mid-cap names. Even there, the list is quite long. Swiggy is down 25, Supreme Industries, NTPC Green, Godrej Properties is down 25% Y2D, and so is IRB Infra. So that's the kind of list which is there in the mid-cap index as well. As I pointed out, while the Nifty and Bank Nifty is at all-time high, there is a much bigger pain in the broader markets, and a lot of the individual broader market stocks are down between 50-60%.
Oh, yes, absolutely. And that is why that, broader market enthusiasm is missing, Nimesh, I guess. That's why it doesn't really feel like an all-time high. Perhaps things change. Perhaps if the Nifty itself decisively crosses 26,300, then everybody starts participating and the momentum really comes back. We'll see. Thank you very much for the details over there. Dharmesh Kant, head of research at Chola Securities, is joining in. Dharmesh, let's start right there with that point that Nimesh was just making, this lack of broader market participation. What's your sense? And for some of these mid-caps, which you just highlighted, which are well off their peak, any picks, any bottom fishing that you'll do? Names like Kalyan Jeweller, for instance, have done so well in the past, generating great growth, 30% plus growth for quarters, many quarters. But obviously, the stock is off its peak levels.
Yeah, good morning, Survi. Thanks for having me for the show. If you track 50-60% have not performed, or they are down from their peak level in the broader market, and same has been the case with the earnings. It's reflective of what the earnings has been. So we did an aggregate of top 500 market cap earnings analysis, and there 33% was a negative growth for Q2, and almost 50% was underperformance from the broader market, which performed well, around 20-21% kind of a growth rate was there. So as far as the picks are concerned, I think chemicals is shaping up very well in the broader market space, specifically the specialty chemical space. There, Navin Fluorine or SRF, the specialty chemical division has done very well. Ether Industries, another case in point, PV industry. So this space is looking attractive, followed by pharmaceutical space, where again there were a couple of good earnings reported by. Lupin is a case in point, followed by Jadis Life, or there were a couple of others as well. So one has to be very selective for the broader market space. Where the outperformance is there, they can continue to do so. But sectoral wise, I think auto ancillaries, followed by chemicals and pharmaceutical, are looking pretty good at this point of time, by a couple of names which I just mentioned.
Okay, all right. Hi, Dharmesh. Good morning. Good to see you in. What else are you all tracking? There are plenty of stocks that are looking up, actually. What about the metals pack? You have the dollar index that's softened. We just highlighted that, silver has moved to a fresh all-time high. It's a tricky one because you can only play it via Hindustan Zinc. And, and you have that impending demerger for Vedanta. So how do you all playing the metals pack? Because when base metal prices move up on the back of a weaker dollar, then it provides an opportunity, at least in the near term. Anything you like from metals?
Yeah, good morning, Nigel. Metals are for brave-hearts. It has its own share of volatility playing out, and much has to do with international prices moving in tandem with the dollar index parity play. But demand-wise, as far as international market is concerned, the demand has not picked up in the metal space, though the prices have moved up quite significantly, particularly for the copper. So there are select metals where the prices have been moving up quite dramatically, and copper is the case in play, followed by silver. Both have industrial use, and that's the reason why you are seeing such a pickup, and renewable energy is one play which has been helping them. So as far as Indian metal scene is concerned, we have recently added Hindustan Zinc in our large cap high conviction portfolio. So but that I think it's a good chance, and the valuations are also very attractive compared to the others. So Vedanta, after this Jayaprakash Associate deal not playing out, I think this has been augured well for them. It's a blessing in disguise for them, and there the value is deep value is there. So financial re-engineering or engineering the promoters play can still be a overhang on the stock, but going by 8% kind of a dividend yield with solid business in play and the metals seem looking up in Indian segment. So Vedanta, Hindustan Zinc, Hindalco, and JSW Steel. So these are the four plays which we have been consistently recommending to our clients, and any declines there are likely to be bought into.
Dharmesh, Lenskart came out with numbers. Now, I mean, numerically, you really can't find fault. Things are looking good. Let's just put up the Lenskart numbers again. Revenues moved from 1,700 to almost 2,100. The margins expanded to 19.8%. So solid margin expansion, EBITDA expansion. And a couple of brokers last week, Dharmesh, also came out with buy calls, saying that 500 is possible on the stock. I think it was Jefferies. Your thoughts?
Yes, so I mean, they have no choice but to come out with such kind of an updates. So I will give you a perspective on how we are seeing Lenskart. Nothing wrong with the business. Business will continue to do well. But look at the numbers. I mean, FY24, the top line growth was 43%. FY25 it came down to 23%, and this quarter it is 21%. Our sense is for next 4-5 years, this 22% kind of a top line growth will continue with margins somewhere around 19 to 22%. That would be the margin band. But the profitability, the best case scenario for FY26 can be 400 crores. And if you compound that at 25% CAGR for next 5 years, so FY30, the likely, PAT would be around 970 to 1,000 crores. And at 71,000 crore of market cap, it's still available at, 70 P multiple with a CAGR of PAT CAGR of 25%. So, I mean, that doesn't gel well. The question to be answered here is, will the stock price also compound at 25% CAGR for the next 5 years? To which I don't think so it will be a case. It can go to 500 or 550, couple of more quarters of good earnings, but then I think it will cool down. So if you are looking at 3, 4 or 5 years kind of a perspective, wealth creation from current investment in Lenskart, we have our own doubts. So we have been, neutral to negative on this counter.
Okay. Got that. Dharmesh, coming back with more questions, have to take a quick commercial break here. There's about 12 minutes to go for the pre-open session. Sudarshan is going to be with us, and so is Mitesh. Stay tuned. Welcome back. There's 10 minutes to go for the pre-open session to kick off, and lots to discuss this morning. 100 points higher is the indicative open as far as the GIFT Nifty is concerned. Hormuz is here. Just to rewind the clock back and look at the big movers from Friday, and can we look at carrying over some stuff into today? volumes and what's behind the price action. Hormuz, over to you.
Morning, Prashant. And auto ancillaries have been on the radar over the last couple of months now, and Rico Auto is one such name. In Friday's session as well, it was the third straight day of gains for the stock. The stock had double-digit advance as well, 13.5% higher on Friday. The volumes were the highest in the last 4 months, and it was the 8th instance in 2025 when more than 1 crore shares were traded on the stock. 7.5 crore shares traded on Rico Auto on Friday, the 20-day average being around 46 lakhs. And out of those 7.5 crore shares, only 60 lakh shares were marked for delivery. Here too, the 20-day average here is only 8 lakh shares, and the Friday's turnover 883 crore, and that is higher than the company's free float market cap, which is around 790 crore. Eureka Forbes also had its biggest single day gain since August of last year. It was the 4th straight day of gains for the stock, and during this 4-day gaining streak, the volumes have been on an increase every single day. And Friday was no different, that 47.5 lakh shares traded on Friday, the 20-day average being around only 3.2 lakh shares. And out of those 47.5 lakh shares, 14.5 lakh shares marked for delivery, the 20-day average only 1.5 lakh. So significant delivery-based buying seen in Eureka Forbes as well. Reflex Industries was an order win. The stock cooled off from the highs of the day, still ended around 8% higher. But the volumes on Friday were the highest on record, with close to 3 crore shares being traded on the stock. The 20-day average is only 3 lakh, and here too, out of the 3 crore shares, only 18 lakh shares were marked for delivery. The 20-day average just over 1 lakh, and Friday's turnover was around 50% of its free float market cap. And lastly, EPAC Durables, the stock fell to a 52-week low on Friday and then staged a rebound, ended over 8% higher. The biggest single day gain in 4 months, close to 40 lakh shares traded, 8 lakh shares marked for delivery, but the stock still is down over 60% from its 52-week highs.
All right, Harmas, thanks a lot for that interesting list as always. Dharmesh Kant is still with us. Dharmesh, today we'll get the auto sales numbers that will start trickling in. What's the call out there? If I remember correctly, you were fairly bullish on Mahindra & Mahindra. I think that call has worked out quite well. And you could correct me, but Hero MotoCorp as well is something that you'd liked. You could correct me on what it was, and what are you bullish from here on?
Yeah, thanks, Nigel, for remembering that. So Hero MotoCorp and M&M we have been riding since the month of May, but as of now, for last 1 month in the month of October, we have not recommended any fresh buy on both of them. Though I mean these are the two stocks which have done fairly well and has gone up above the September last week highs post the GST implementation came through, and Eicher Motors is the third company which was able to do that. Others have been languishing at the top end of the band. Our sense is, see, the numbers we have to see today how it pans out, but anything above 15% kind of auto sales number growth for the month of November would be pretty fine with all of these companies, be it two-wheelers or four-wheelers. But anything below that, I mean 10%, 12% kind of a number, if it comes through, then definitely there will be a serious profit taking happening into the space. We are structurally bullish on this space, just waiting for some sort of a correction to come by to buy these counters or recommend fresh buying to our clients. But it has to be seen. If you are holding it, continue holding it. And if you are looking for, say, a year or so kind of a perspective, then M&M and Hero MotoCorp continues to be the top bet in the sector space out there.
Okay, all right. Thanks a lot, Dharmesh, for joining in and filling us in with your calls on a whole host of stocks. Have a good day ahead, and we catch up in the coming days. Well, time to slip into a short break. You come back, pre-open rates will be with us. We'll also be joined by Deloitte India's MS Money to discuss about the likely new cess bill on sin goods. And we'll connect with our technical experts. Sudarshan and Mitesh are waiting for us as well. Couple of minutes and we'll get the pre-open rates that will be coming in. But for the time being, let's welcome our technical expert, Sudarshan Sukhani of Technical Trends, and Mitesh Thakur of Bonanza Portfolio, who join us on the show. Good morning, gentlemen, and good to see you all in. December is already here, Decembering, so to call it. Christmas is around the corner. But will it be a good one for the bulls? Mitesh, you go first. Last couple of days, we've seen some sort of consolidation. How would you trade the Nifty from here on?
Yeah. So, Nadir, I think, we've been actually calling for a consolidation over the last few days, very clearly, believing that the market will require some effort before it gets past the all-time highs. Today, we'll get a gap up, which should take us again back to this 26,300 mark. And I maintain that once we get a closing about that, we'll get some kind of confirmation of a breakout, and then we can look at possibly 26,850, 900 zones as the minimum target on the upside. So I think today, in that sense, we'll be watching the action closely. But looking at the fact that we are getting past the earlier highs with a gap should be a positive sign. So we'll be inclined to trade very clearly with a long bias. On the index, I think we'll decide once the market opens. But on the stock side, it's clearly an all-long list.
Okay, so prefer to trade with a long bias. Got that, Mitesh. Morning to you, morning to Sudarshan as well. Sudarshan, what about you? What's the approach for the index?
Yeah, good morning. Well, the approach is the same. For the last 10 days, I've been saying we are in an uptrend. Let's go and buy and hold long positions. We had two sharp corrections, dips, not corrections. And I had said we have to suffer through them because the levels are not being broken. So the trend is intact. So those who have long positions should continue to hold them. Just move your stops to 26,100. The problem comes with people who do not have any positions. For them, the minor correction or a minor consolidation intraday is still a buying opportunity. There's more to this up move than today's gap up, but they have to be positional traders, not intraday traders. If you take a position and take a view on the trend, go long and stay with it. Your stops are already available, 26,100.
Okay, all right, got that. Those are sales numbers coming in bang in line with estimation for Bajaj Auto, that is almost 4.5 lakh units. They did 4.2 lakh units same period last year. So there's some improvement there. Okay, so total sales at 4.5, and we'll put up the individual two-wheeler numbers as well. They'll be flashing on your screens. Gentlemen, let's quickly get to stocks. Sudarshan, what's on your list today?
Well, because we are either long in the Nifty or I'm suggesting go long still. So it's a mid-cap list, all buy. Granules is a buy with a stop under 550. Vedant is continuing buy with a stop under 520. Laurus Lab is a buying opportunity. It had a good day. I also have a disclosure. I have some trading positions in it. It's a buy with a stop under 1010. And Phoenix Limited, which has been going through a very strong rally, has now come in my list finally with a stop under 1705. Stay long in the Nifty, stay long in the Bank Nifty, focus on mid caps.
Okay, got that. Stay long and focus on mid caps. Mitesh, what about you? What's the stock list for the day looking like?
Again, all long list, as I said. Good morning, Suvik. On the first name is Dr. Reddy's. Keep a stop below 1239. Look for a target of around 1300. M&M, I think, has been consolidating at all-time highs. So a breakout would happen today with a gap. So buy here with a stop at 37.29 for targets of 38.20. HUL showing signs of revival. So that's a buy as well. Keep a stop at 24.49. Look for targets of 2,500, and also a buy on KPIT Tech with a stop below 1,200 for targets of 1,270.
Just a word, Mitesh, since you brought up auto stocks, Sudarshan was telling us and the auto sales numbers have started flowing in. He was telling us that on the CV side, the market is expecting a good performance. And we saw last week, in the middle, there was a bit of a flutter on stocks like Ashok Leyland. Any trades there?
So, in fact, I've had some long positions personally on Ashok Leyland, and given the SEBI regulations, you will not comment on stocks which have traded in the last 30 days. So I think I avoided, but yeah, given the fact that we had some positive long side positions, clearly means that the bias is on the positive side.
Okay. All right, got that, gentlemen. Thanks very much. We'll come back to you closer to market open. Now let's address all the important ongoings in the national capital. The winter session of Parliament begins today. A total of 13 bills are listed to be taken up in this session. This includes the Insurance Laws Amendment Bill, the Jan Vishwas Amendment Bill, Insolvency and Bankruptcy Code Amendment Bill, the Atomic Energy Bill, the Corporate Laws Amendment Bill, to just name a few. But the one interesting one to watch out for is the Central Excise Amendment Bill and the Health Security, National Security Cess Bill. Now, these are two which are likely to replace the GST compensation cess with a higher excise duty on tobacco products. And then, of course, there's a new security cess on pan masala as well. These bills signal a major shift in the way taxes are levied. And that's why we've got Mr. Money joining in from Deloitte to give us his first thoughts. Mr. Money, thanks very much for joining in. You know, this was always the discussion. The compensation cess is going, now what? You know, what happens? How will the states be compensated if there is any revenue loss, etc.? So, first, what we understand, what Timsy has been telling us, that on tobacco particularly, at the end user level, this is going to be net neutral. It doesn't increase the incidence of tax. But the manner in which the taxes are going to be levied, I mean, what would your first take be? And how should we understand this?
Okay, so I think the biggest aspect is that the suspense that was surrounding the taxation of tobacco products post September 22nd, that suspense is gone now. So we know what's going to replace. You are absolutely right in saying that the incidence on the end consumer is presumably going to be the same, maybe some marginal changes here and there, but it's largely going to be the same. The key aspect that I observed in what is, proposed now at a broad level is the fact that while a health cess was always on expected lines, we also now have it called a health security cess. Now, this can possibly be linked to the fact that a couple of days back, the Defense Ministry requested for an allocation of 20% more for defense purposes in the budget. And therefore, since the cesses once collected for a particular purpose can be used only for that particular purpose, there is now a feeling that the amount that will be collected through this cess over the next few years will be high enough to take care of the health expenses arising from tobacco usage and also the additional security budgets that will be required. So that is one key aspect that I picked up when I, looked at this. The other aspect is in respect of the central excise levies also, because bear in mind, GST is levied on tobacco products. There's also a central excise levy on tobacco products. And now there's going to be a health, national security cess also on tobacco products. So for tobacco product manufacturers and pan masala gutka manufacturers, the level of taxation and the number of taxes they are going to pay is going to continue to be humongous. That's not going to get, simplified. Since this is going to be levied on the basis of the production capacity and not on the sale, which is the norm with respect to all other products which are subjected to GST, it is going to be very interesting to see how they are going to enforce this. Because bear in mind, similar measures have been taken in the past, even pre-GST, on certain products of steel, etc., where they felt that there could be more of likelihood of evasion. So when something gets levied on the production capacity, typically the manufacturer has no option but to pay the tax, in this case the cess, on the estimated production capacity and not necessarily on how many goods leave his factory at that point of time.
Mr. Money, if I can just come in, so say ITC, just as an example, right, say operates at a 80-85% capacity utilization. So what will companies do? Will they bring down their rated capacity? What is to kind of, companies will look to reduce the tax incidence, otherwise tax incidence goes up.
Yeah, I don't think companies will be given a choice to reduce the production capacity, or the rated capacity, for any purposes, because to a very large extent, the capacity will be as certified by the manufacturer of the equipment and not necessarily only by the user of that particular equipment. So if there is an issue on account of which they need to run it at 80% capacity, they need to take the GST officials and the GST commissioner into confidence, explain to them the reasons, and then maybe the production capacity based levy will be levied on that revised amount. The onus is on the manufacturer to demonstrate that. It is not on the GST authorities to do that.
Okay.
So the GST authorities will levy the cess assuming that the entire capacity is being utilized. So if ITC has capacity to produce 100 cigarettes a day, irrespective of how many it is producing, the cess is going to be on 100.
Absolutely. So it is a presumptive levy in that sense. And if the presumptive levy is based on an aspect which is not possible, could be due to a commercial reason, could be due to a technical reason to do with the machinery, The onus is on the organization to approach the GST commissioner and get it down-rated.
Got it. Sorry, Surbhi, I know you have one more question. Why don't we finish this? I want to talk about the other one, which is the tax collections. Go on, but.
Yeah, so just a last point on this. So while for the end user, this is largely, the tax incidence neutral, for the sin goods manufacturers, does it complicate things in terms of, asking for any credits? I mean, it just sounds very complex, Mr. Money. So we're just trying to understand from the corporate perspective, does it open up a whole new Pandora's box?
Okay, so whether these products can be called sin goods any longer or not, I don't know. But tobacco products and pan masala, and because the people who are consumers of these don't consider them to be sin goods in any case. And that's why there is a huge demand for them and there is a taxation on them. But to your point, in terms of does this complicate things? No, it doesn't complicate things any further, but it does not simplify things either. Because the expectation that many people had post 22nd September, where the GST level taxation on many products was simplified, was that some simplification can be attempted here also. Okay. The amount of tax collected can be the same, but possibly it need not be collected under so many separate heads with so many separate compliances.
Sure.
To that extent, the complication continues.
Got it. So the complications continue. And my last question, which kind of feeds into what Prashant is coming to, which is overall tax buoyancy and collections. This cess, which is the health, say, national security cess, this will be entirely in the centre's kitty. I mean, with the compensation cess, the usage of that cess was very clear, the distribution to states. What happens now? And that feeds into what, Prashant, maybe you want to take it further on overall tax collections. How much tax are you collecting and how are you going to share it with the states?
Yeah. Mr. Mani, let me just supplement that point. So 4.5 April to October, Centre's total tax collection has grown 4.5%. The budgeted number is close to 11%. So there seems to be a shortfall. So my pointed question here is, they'll have to make it up, right? Either capex spends moderate, maybe excise on fuel, I don't know, I'm just thinking aloud. Given the government stance that they will not let the fisc slip, right? So something else has to happen. What will that be?
Absolutely. So when we are talking of the cess, we have to bear two things in mind. The fact that they're doing this in December, to me, indicates that the amount that they were required to collect to compensate for the borrowings during the pandemic have been completed. And therefore, technically, even if they continue collecting the compensation cess on tobacco products as it is, they will not be use it for the intended purpose for which the cess was levied. And on that, as you are aware, in the past, we have had the Supreme Court saying that when you levy a cess for a particular purpose, it can be used only for that purpose. It can't be deployed for any other purpose. So compensation aspect is over. And now they are coming up with a cess which is going to take care of two things, health and security. Now, to your point of, is this going to help in managing the fiscal deficit? We'll have to wait and watch when this is introduced in Parliament. And in terms of the explanation that the FM gives when this particular bill is introduced.
Can you answer the other question, which is, irrespective of this cess, this 4.5, the gap is large in terms of collections. What do you think the government will do?
I think that we still have 4 months and there is a lot of buoyancy that has come in because of the GST rates being lowered. So the GST collection data that will come out later in the day today is going to give us a very key indicator of how the collections are going to stack up. Because as you are aware, GST collections have been very, very buoyant in the last 8 months or so.
What is the growth, April to, do you have the number? GST collection, April to October, or April to September, right?
So I don't have the data in front of me right now, but on a monthly basis.
Okay. You're saying that, well, because
it's
GST...
been going up month on month.
Sure. Be a GST, but I think it's low single digits if you look at like to like, the growth. Same period last year. I mean, this
9% roughly is what I recollect. 9% roughly year on year.
9% growth. And Mr. Money, I mean, since you brought that one, that's really important. We need to see, because the government's argument was that any loss in tax will be made up by just the buoyancy, by higher consumption of goods and services, right? So, and if I remember correctly, when the cuts were announced, the notional loss was supposed to be somewhere close to maybe, I think, 1 lakh crore. If you could just revise the numbers and what your estimates would be. This will be the first full month that we get the GST data post the GST cut. So any expectations in terms of how much we should expect?
What we have been seeing in the marketplace is that there has been truly a consumption boom across products. And when I'm saying across products, many of the products which begin the largest kitty in terms of GST. So automobile sales, for example, where there is a large amount of GST collected, have been very, very buoyant. So to my mind, we should just wait till, maybe 4 p.m. today when the GST collection data is expected and see how it has performed for the first full month. And that will give us an indicator in terms of how it is panning out.
Yeah.
Just bear in mind just one more aspect, that the concept of a festive season or a festive sale is now coming down a bit. So the dependence on the festive period for collections is coming down a bit because consumption is more evenly spread throughout the year.
Okay. All right. Got that, Mr. Money. Thanks very much. So two important things we need to watch. One is what is the GST number as it comes out today? And two, when this bill is introduced with this new cess, National Health and Security, this is no longer a compensation cess. So the money doesn't necessarily have to go to the states. So will it be added to the center's kitty? We'll watch out for this as well in the fine print. Thank you so much, sir, for joining us today. Very quickly, going back to our technical experts for final trading calls. Sudarshan, which stock?
Granules, buy granules with a stop under 550.
Okay, and Mitesh, for you?
M&M could be an interesting pick for the day. I think I'll go with long on that.
Okay, all right. Gentlemen, we'll watch those names. Markets, of course, opening at record highs as the pre-open is indicating. I think we can go across to Nimesh now. Navin Fluorine is on his radar. Nimesh, tell us why.
That's right, Prashant. So, interesting report from UBS. They have a buy rating, but they've sharply raised the target price on Navin Fluorine to 7,000. Now, UBS believes that while first half was quite strong for Navin Fluorine and they've done well in terms of growth and margins, that momentum is likely to continue going forward as well for two reasons. First, improved CDMO visibilities. So, the first phase of GMP4 is operational, and they expect repeat orders for the high growth products as well. So that's the first reason. The second being higher performance in the HPP as well as the specialty chemical growth. Now, the balance sheet is quite strong after the QIP fundraising that the company has done. So that means that the capex driven growth is likely to continue. Despite the 75% stock price rally, UBS believes that the street is not fully pricing in the big growth in the CDMO facility and the CDMO growth. So that's the reason why, while they have a buy rating, they've sharply raised the target price now to 7,011 Fluorine.
All right, we'll get the rates coming up 1% higher in the pre-open. Just a couple of seconds to go for the market open, and we'll take it from there. First rates in just a bit. We'll look at, of course, the Nifty Bank, mid and small cap indices, and then we'll look at the broader market as well. So, yeah, I mean, it's a new all-time high, I guess. Yeah, it is. 26, is it? 26,288. So I don't think it is a new all-time high, at least on the Nifty. But I think we hit 300 and something, right, on the Nifty. We're at about 26,289 at this point in time.
So the high that we hit is 26,325. So indeed, at the open, for what it's worth, we did make a fresh high. So the latest all-time high, 26,325.
Okay, so
we need to then sustain there, go above it, and not slip.
So the open was at a new all-time high, absolutely. So yeah, I mean, and the Nifty Bank, of course, as well, 59.9, I think almost at 60,000 levels, right? 59,973 or so. The small cap index is not at a new high, or is it? And the mid cap index is up on your screen as well, about 0.25% higher. The small cap index was a little behind, but we'll see. The broader market, 1,400 up and about 500 lower. That's the advanced decline ratio, about a little over 2:1 in favor of advances. Nifty heat map will give you a quick sense of where we are starting. We'll pick it up from there. What do we have? Bulk of it should be in the green. It is. JSW Steel, Shriram Finance, Tata Motors passenger vehicle business are on one end. ITC is on the other end. Maybe we should just start with the ITC stock. And in the pre-open, it was, I think, lower, but not by much at all.
It's down 1.5%
so,
now.
Yeah, 1.5% lower at this point. But let's get to individual names now. Surabhi.
So on ITC itself, I guess, as Mr. Money just explained, that it doesn't change the final incidence of tax, but any expectation of a reduction or a simplification in the manner in which that tax is levied, that is taken away. And we need to watch out for the actual operational details of how this will be levied, because it is on manufacturing capacity, not necessarily how much you manufacture out of that capacity. So ITC is lower, but the rest of the market is positive. So let's look at the winners. And JSW Steel, about 1.5% higher. BEL, 1.2%. There is Tata Motors, which is up and about. Even Bajaj Auto came out with a very steady set of numbers, about 8-9% growth year on year on total sales. Stocks up about 0.7%. State Bank of India is contributing. Lever is contributing 0.5% up. L&T is up. Reliance is up. So all the big batters, they are pitching in quite nicely. Kotak Mahindra Bank, Axis Bank, some of the banks also doing well. The Bank Nifty itself is up about 0.4%. On the downside, really, there's not much to worry. It's only ITC, and that's about it. Some tail enders like Tata Consumer, but those stocks are not even down 0.5%, so not really worth counting. Looking good, the Nifty steady, just under the 26,300 mark, Nigel.
Well, you know, on Friday morning, I had said one thing, that silver is making fresh all-time highs, if you recollect, you know, at around when markets opened itself. So there's only one play, it's Hindustan Zinc. And the thing is that silver is very, very volatile, but you have a couple of central bank meetings, and the optimism is that we'll get a rate cut both in India as well as by the Fed. And the Fed one is the one that will, you know, trigger base metal prices to move up as well as precious metals. Explains why Hindustan Zinc is up, and all the ETFs as well, Tata ETF, all the other ETFs as well, they have moved up. So that's one of the big movers. Hindustan Copper has seen more than a 10% correction from the recent peak, but copper prices have moved up. You'll argue about valuations, but the stock is up 1.5%. Sterling and Wilson, that's a big order win that they have out there, and that's why that stock is up and about. Likewise, NCC, big order win out there as well. So that's why that stock is moving with very, very good momentum in today's trading session. Tilak Nagar Industries, they have gone ahead and they've closed that long-awaited transaction with Imperial Blue. That hit the exchanges just a few minutes or so ago. And that's why that stock, in fact, is up close to around 2%, because now it moves them from a brandy to a whiskey player as well and gives them pan-India presence. Announced some time ago, the street was waiting for this to close out, and that's precisely what's happened. So net-net, a good start to trade. You have a lot of stocks that are moving up. The Nifty up 90 points. Breadth of the market in favor of a number of stocks advancing. And the Nifty Bank, ooh, it's on its way to 60,000 odd. What a move out there on the Nifty Bank, moving from strength to strength. And the metal index, that's the one as well that we highlighted earlier today. And that's the one that's, you know, putting on some weight, up 0.7%.
Well, you know, 90 points, right? So this is a good-looking screen overall. Market breadth is about 3:1 in favor of advances. 26,290 is where we are at. I mean, it'll be good to see these gains hold out for the rest of the session, but the start is certainly good. Silver Bs, right? So 5% higher, and it's actually Silver Bs are the number one volume traded. Ticker on my screen right now, across on the NSE. Hindustan Zinc is number 2. So 5 on Silver Bs, 2.5 on Hindustan Zinc. M&M Finance is up about 3%. AG's, which is the newly listed business, the demerged entity, 5.5% higher on that one, 275. Tejas Networks, completely bombed out name, but is slowly starting to come back from the lows, right? So 470 odd was the low. Stocks at about 520 now. Sterling Solar Wilson about 4.5. I think there was an order on Friday or Thursday. 4%. Okay, I think there's an order today as well. So 4%. JM Financial is up about 4.5%. Natco Pharma is up 3.5%. K Fintech, I think we mentioned. And all of these silver ETFs are coming up. And Tata has one. HDFC is one. So they're all up 4%, 5% on, of course, the underlying silver rally that we're seeing. Poonawalla FinCorp is up as well at this point in time. Welspun Living had this massive move on Friday. You know, moved up from 130 to 150 on that Friday. It's coming back a little bit, 4.5. It's got volumes on it on the downside. 4.5% give back. Stocks back at about 142. Capillary is a recent listed name, 2.5% lower on Capillary. 63 moons went up like a rocket to the moon. So, you know, that NCLT case, the issues at NCLT, I guess, have been resolved. And, so from 700, it went up straight to about 940 in about 3 sessions. It's coming back, it's giving back some 2.5% lower. Whirlpool, of course, you know, that block being sold, it's at a new low. Now, 1,038 on Whirlpool. Again, this one has got volumes in it. ITC, Godfrey Phillips, both are down about 1.5%. Excel Soft, which is the recent listing, I think listing of Friday or Thursday was it? It's down almost 5% right now. You know, some of these names like Kiri Industries, again, right? Kiri had a big move last week and it's giving back about 5.5%. I can mention more names, but volumes are a little thin at this stage. Dheeraj Agarwal is with us, Managing Director, Ambit Investment Managers. Dheeraj, great to have you with us here on the program. Thanks very much. Are you in the camp which believes that and mostly people are, especially on the sell side, the things are looking a lot more constructive as we look into 2026, and there's money to be made here.
I think things are looking constructive, yes. I'm a little bit of the same camp at this point of time. Although I will add a little bit of caution there. I'm cautiously constructive. I don't see a huge up move. It will still be a stock picker's market. At the index level, we will see the markets grind up rather than explode up. So that's where I may differ a little bit from the rest of the market. But yeah, that's where I am.
Now, Dheeraj, I must actually compliment you because that caution was ahead of the curve. It was sort of well taken because you've been maintaining a cautious stance on the market for several months, for the better part of this year, if I remember correctly, talking about, concerns like earnings, and valuations. So, yeah, kudos, that call has played out. But now that you are turning, from totally cautious to cautiously optimistic, tell us what's shifting. And let's start with the earnings trajectory itself. Having heard a lot of the corporate commentary at the end of Q2, I mean, at the macro level, look at those GDP numbers. They look fantastic, right? But we need to get sustained double-digit earnings growth. Do you see that happening this year onwards?
So let me start with the controversial topic, which is the GDP number, right? I mean, the real GDP growth reported this quarter, or September quarter, is 8.3%. But the nominal GDP growth for September quarter is actually slightly lower than the June quarter at about 8.5, right? The corporate earnings and corporate sales growth actually track nominal more than real. And there is a little bit of a hot debate going on at this point of time that some portion of our GDP under the new methodology is calculated as nominal and deflated by the deflator to arrive at the real. So maybe the low deflator is artificially inflating the real number at this point. So let's just focus on the corporate earnings growth. For September quarter, Nifty earnings growth is just 6 or 7%. BSE 500, X of OMCs is only 7% to 8% range, which is all very weak. So the reason for being cautiously constructive is the two big triggers that we have seen recently. One is the large GST cut. Second is the continuous decline in interest rates. Both these put together hopefully result in sustained consumption revival in the second half, and hopefully results in better earnings trajectory in the second half. The jury is still out. Some of our channel checks are indicating that in few pockets, demand has already started weakening post-Diwali, which is not a very good sign. But there are reasons to be cautiously optimistic.
All right. Hi, Dheeraj. Good morning and good to see you. Ben, let's leave eternal to the side. Let's focus on the next one that I want to focus on, right? Let's look at it with a lens. I recall when the Lenskart IPO came out, you were a little bit more positively biased on it. And to be fair, the stock sold off 10% on listing day. And after that, there's been a lot of interest. We know there's a big market out there. Valuation debate continues, but otherwise the business appears to be shaping up well. What's your view on the name from here on? It's held up actually, though we have a fair bit of the float that's limited, at least as of now. Your view on this name?
So honestly, I don't have a very concrete view on Lenskart at this point, but if I take the discussion a level higher in the current environment, markets have become valuation sensitive as compared to valuation agnostic for even high growth companies a little while ago. And you started this discussion by quoting internal. You can see that pressure on internal stock price also in the last 1 or 2 months. And it's across the board. Many of the high growth companies where valuations were extraordinarily high are not able to move up anymore. And the primary reason for that is, when I spoke about earnings slowdown. So while there is earnings slowdown, there is no earnings crisis. This is a very important distinction to be made. Last time we saw earnings slowdown between 18 to 20, there was an earnings crisis as well. And hence, the few pockets where earnings growth was strong, valuations kept on rising. This time, the same thing will not happen. And that's why we need to be cautious on valuations too.
Yeah. Dheeraj, allow me a minute on this. And I just want to tell viewers as well. I think, this was 7th November. Ambit did come out with a sell call. And the 12-month price target on Lenskart now that Ambit has is 337, which is probably one of the most bearish targets on Lenskart. Remember, on the other end of the extreme, you have someone like Jefferies. Jefferies is calling for 500 on Lenskart. So, Dheeraj, this is not a stock call discussion at all, but I think this also highlights the kind of market we are in, which is why as investors, it's really important to understand what's going on. Lenskart reported numbers are fine. There's margin expansion, around 19% margin. EBITDA has gone up. Revenue's also gone up, a fair bit. But the market clearly, between your very cautious view now, Ambit's cautious view, and someone else who's calling 500, is very, very polarized. Yeah. So how should investors navigate a situation like this, where technically earnings are fine, there's nothing wrong, there's no corporate governance issue in the company, but you just don't know how to understand the valuation debate? And Lenskart is not the only one, right? We have a whole pipeline of new listings that's coming up ahead, from NSE to Meesho to whatnot. So this is important for viewers and investors to understand. Just help us through this.
Yeah, so we tend to be a little bit more purists when it comes to valuations. Sometimes it works, sometimes it doesn't. So let's say during the 18 to 20 period, when a number of consumer companies were just continuously going up despite valuations, our analyst calls, at least on the stock price, appeared to be going wrong, because we took a purist view on valuations, and many of the stocks we had sell calls on. In the current environment, looks like the market has become a little bit more valuation sensitive, and exactly for the reason which I described, that you are able to find reasonably growing companies at much better valuations today in the market, and hence investors are not willing to pay exorbitant valuations for a similar growth or slightly higher growth.
So the Lenskart downgrade was a pure valuation call.
It is. It's a pure valuation call. And in fact, that's what makes the market. At all points of time, you need a buyer and a seller in the market and simultaneously. Otherwise, stocks would just go up circuits or down circuits all the time, right?
No, absolutely take that point. Okay, so let's talk about what you are liking. I mean, you've liked financials in the past, but give us some more color. With the index at all-time highs, where should we train our lens, buying lens, that is, in terms of new ideas?
So it's a continuation of the thought which I just expressed. Across sectors, it's possible at this point of time to identify companies where the growth rates and the fundamental metrics look either similar or better, and then you focus on valuations, which is relatively cheaper. So we are back in that kind of an investing time zone. So you mentioned BFSI. Take BFSI as an example. So all large banks at this point of time, the credit growth is similar, 10-11%. Earnings growth is similar, 10-11%. ROEs are similar, around 16%. And hence, one is better off choosing a stock which is relatively cheaper. And which is exactly why names like SBI, Canara, some of the second-line banks like Federal, CUBK have been performing significantly better than the frontliners like ICICI, Kotak and HDFC, because it's similar growth or better growth with slightly better valuations, right? So we're seeing that happen in IT. LTI with a better growth than TCS, Infosys, etc. has done better, and so on and so forth. So it's one has to slice and dice growth, some of the other fundamental metrics, obviously like ROC, free cash flow generation, and then compare the valuations. You can't just buy the best and the largest, unlike in 18 to 20 cycle, and hope to outperform.
Okay, all right, got that. Dheeraj, we'll leave it on that note for this morning. Thank you so much for joining in. Good to get the perspective on the market with you today. That's a view from Ambit coming in, and they're turning cautiously constructive on the market for this time. Let's just take a look at the screen before we move on to our next guest. It's still very steady, 88 to 90 points higher and just under 26,300. That's the story on the Nifty. It's been a good opening, you'd have to say. And lots of stocks are, of course, moving around on news or otherwise. Well, as promised, let's get to our next conversation then. And we have with us in the studios Mr. Sudeep Leroy, Managing Director and CEO at L&T Finance. And we have three main points that we want to focus on with the company today. AI has become a big talking point for L&T Finance, and they alluded to this in some of their conversations with investors earlier, caused a bit of a flutter on the stock as well. So we'll understand more about this. And then, of course, we want to understand the usual metrics, the ROA, NIMs, all of the usual metrics in the outlook for H2, and an update on what's happening with asset quality as well. So let me straight away get to point number one. with our guest. Sir, thank you so much for joining in. It's great to have you with us, Mr. Roy. Let's start with the AI, because what you, I think, mentioned to the street earlier was that now you're adopting AI in a manner that it improves your collections and your yields. I think that was really noticed. What exactly is happening? Is it beginning to make a meaningful difference? And then if you could give us some numbers, I mean, typically from wherever yields and collections are right now, how do you see those numbers improving? Over what period?
Thank you, Survi, and thank you for the opportunity. Obviously, we have been one of those institutions who have started to adopt what I call AI at scale. And if you look at our sort of 4 areas where we are piloting multiple solutions, first is obviously onboarding, underwriting, servicing, and last but not the least, collections. Now, the place where we started to deploy it very, very early was underwriting. And we look at AI at a 3-step process. Most people think when you talk about AI, think about Gen AI. But we look at machine learning, deep learning, and Gen AI obviously at the pinnacle of it. Most of our underwriting engine, for example, which is almost now 20 months into running and version 3, is deep learning based. And we deployed it for the first time in our two-wheeler business. We started with maybe about 14 models running. Now we have close to about 18 to 19 models running on that. And the fact is that if you look at the impact of that, and as you know, in the industry, two-wheeler industry, through the door bounce on underwriting, especially when portfolio bounce is anywhere between 23 to 24%. In exactly 20 months of running, and full-fledged implementation happened in January of this year, so I can say 9 months, our portfolio bounce is down to about below 15%. And our through the door bounce is now coming about 7 to 8%, which is almost equivalent to a prime personal loans bounce. What it does, and we actually also validated it through CIBIL. If our portfolio risk on our non-AI model underwritten portfolio was, say, at 90 plus at 12 month on books was 4.5%, my current portfolio, which is underwritten through Cyclops, which is our deep learning based underwriting model, is currently running at about 3.2 to 3.3. So almost 150 basis points has got shaved off. Right. So obviously it will take some time to show in the full book, because I still have a back book which is there. But as we progress forward, the portfolio will clear. And we have implemented now in two-wheeler, SME, tractor loans.
This is at the underwriting level.
Yes, December,
So also the question of cost has to come in, right?
Yeah.
I mean, to what extent has your software cost or technology cost gone up? And there's a cost-benefit analysis.
Yeah, absolutely.
And what should your investors watch out for over the next 12 months as you apply this to the rest of the portfolio and to other areas like collections, like,
So very good question. We spent overall 80 crores to build this underwriting tool. And on our automated portfolio management tool, we have spent about 25 crores to do that, right? And obviously, as this builds across all lines of products, the cost will. But we amortize this cost because these are literally software products, right? So we amortize this cost over a period of time. And what is not normally visible is that you have a credit cost. But the cost of credit administration on top of the credit cost is almost equivalent to that of the credit cost.
Basically, to recover 100 rupees, you need to spend...
You need to spend 50, 60.
So that goes
actually
down
160 rupees. So, for example, I'll give you the example of the two-wheeler business where we have the maximum experience. If your credit cost was, say, pre-Cyclops was 3.5%, your cost of credit administration was 2.5%. You total it up, it comes to about between 5 to 6%. Now, directionally, your credit cost can go down to close to 2%, and your cost of credit administration becomes about 1.5%. So you actually save 200 basis points on that. Though you front load the cost in building the tool, you tend to
the tail is long in that sense.
Plus also in AI in collections, an average physical call and human call, right? Okay, call conversion rates in human call, etc., roughly about 67 to 68%. But average human call fully loaded cost can vary between 600 to 900 rupees, depending upon the length of the call. An average AI call for us is 38 rupees in terms of collection cost. And success rates are lower.
The conversion
55% success rate, 55% success rate.
But even adjusted for that, I think it's
you're adjusted for that. And the fact is that some of the new sort of models which are coming, right? You actually cannot make out the difference. In fact, the AI tool interrupts you in between, and that's almost human-like.
We'll come back to AI. Just Mr. Roy, thanks for dropping by first of all. And I must say, in a market which has been tough, Survi, the L&T Finance stock has doubled this year in 2025. And
so
you you're completing 2 years, Mr. Roy?
A little more than 2 years.
A little more than 2 years.
A little more than 2 years.
So, okay, let's just, I want to start with microfinance. I'm sorry, I'm diving straight into some segments here. It's about 25% of your book?
Yeah, almost, 25, 26% of our book.
Okay. Now, this was highlighted to us by an investor that while, and we spoke about this at the NBFC event, that things are turning. I mean, we are at perhaps the cusp of an upcycle in the microfinance space. Is that panning out? I just wanted to get a status check because some of the data indicates otherwise, that things are still deteriorating. I mean, it's not moving up. The pace of change is actually deterioration, not improvement. So just wanted your sense.
See, I am in the business and I look at the numbers daily, right? And I'm sort of biased by the numbers that I see for my
that's what we want. I mean, what's your numbers?
My organization. So, at least L&T Finance, we are doing pretty well, right? In this, the fact is that our disbursements have been growing with every passing month. So, in fact, we just finished a month yesterday. And the fact is that we have been above 2,000 crores of disbursements steady state for the last 3 to 4 months, right? Collection efficiency for us has been improving secularly month on month. And when I say secularly in a month on month, about 6 to 8 basis points upward stick every month, right? So, last month when we ended last month, we were at about 99.57.
This is all microfinance?
All microfinance.
Okay, please.
99.57 pan-India. Now, this month we are a little higher, right? So, and Karnataka, for example, which actually was sluggish for a long period of time, actually broke through about close to 99.4% this month, right? So, which is not exactly near normal. For us, near normal will be between 99.65 to 99.7. We're still 10 basis points as my organization away from normal, which is about 99.7. See, the industry again has been improving, and I've been talking about in the industry. So the industry has been improving, but the pace of improvement is not that fast to the extent that we would have liked. Plus, also the industry has a liquidity issue, right? So the fact is that there is a lending gap in the market, right? And some of the larger, stronger players are able to lend, and that is why MFIN has made a request to the government for having a refinance facility for the entire microfinance NBFC MFIs to see whether the government agrees to that or not. And but the fact is that the industry, I would say, is out of the woods, if I might use the term, out of the woods. It is in that long tail normalization period, a little bit of liquidity will help, because what happens is liquidity also starts the cycle also. But couple of points. Rural wage growth rate has been good, 6 to 8%. Rainfall has been good, right? Kharif crop arrivals are good. So I expect H2 to be significantly better than what we saw in H1. And I think Q4 is when you will see normalcy in this industry, subject to liquidity coming back.
All right. Hi, Mr. Roy. Good to have you in the studio. And I recall the last time we chatted with regard to that Karnataka issue. You told us that efficiency will improve in October. You've been spot on. October, November is when things have been improving out there. And most of the guidance as well you have gone to. And that explains why from March itself, I think the stock is up 75%. That said, let's focus on a few numbers since, you were drifting us towards that. The return ratio, that's going to be important. You're guiding for better ROAs as well as ROEs. So give us the number with the timeline and what the levers you have in place to take you up. I think on ROAs, you're guiding for a 40 basis points improvement. Tell us by when and the levers as well.
So we're currently, last quarter we were at about 2.41.
Yes.
So what we have guided the markets is directionally we should be in the range of between 2.8 to 3%. Exit FY27, which means around March of March 2027 is when we will be at that particular level, right? So, and obviously a couple of things here obviously has to work. The credit cost has to come down. As you know, our credit cost was 2.4. Our ROA and credit cost actually were the same last quarter, 2.41 and 2.41, right? So obviously the credit cost has to come down, and the various initiatives that we have been doing is obviously showing a positive impact on the credit cost trajectory. The microfinance sort of industry also has to stabilize. The fact is that we got a burst of sort of NPA coming in from the Karnataka sort of challenges, right? And obviously we delayed the recovery.
Right.
Now I expect FY27 to be a period, every quarter will improve the trajectory on the credit cost, and we have said that the credit cost will directionally move towards 2%.
Right. Because of the AI initiatives also. You said 2%.
Yeah, it will.
All of it put together.
It will take time to show up because we have a drag of a back book, right? So for us, the situation is peculiar. We have a newly generated book through some of these tools, which is showing excellent results, and there is a drag of a old legacy book, which I called. This will take time to sort of show up in numbers, and it will do so in Q1 and Q2 of next financial year. And I'm very, very confident that, and it will also have an impact on the collections costs as well. So on the cost, etc., cost efficiency, you will see an impact. NIMs and fees, we have guided that, NIM plus fees together, we will try to guide between a corridor of 10 to 10.5%.
Okay.
We'll try to maintain that. And with microfinance coming back, and it's a high yield product, and plus also we have added gold loans. We are adding 200 branches this year. We'll add 300 to 350 branches next year. So basically for the next sort of 1.5 years, we'll be opening one gold loan branch every day.
All right. Tell us a little bit more about that gold loan portfolio, because you have tapped that market just in the recent past. And I think the book as of now is around 1,300 crores.
1,500 crores.
1,500 crores. And as you're saying, you're looking at opening more branches.
Yes.
And you're looking at penetration out there. So going by all these estimates that are put down, what should the book look like, say by FY27 and from thereabout? Targets on the size of the book and timeline as well.
So we expect to be anywhere between 4,500 to 5,000 crores of book exit FY27. That's what we intend to do. And by that time, we should have... See, we got 130 branches. We'll be at 200 branches this year. So we'll be about 330 branches by March. We'll add another 350 branch by next year. So we'll be about 700 branches odd.
So I mean, clearly, microfinance is coming back. You're building the gold loan business as well. Retail has been anyway doing, fairly okay for you. In terms of just growth of the book overall, AUM growth, I think you've guided for 20 to 25% for this year, whether you're on track for that or not. And even next year, I mean, what is the steady state growth rate you're looking at now with microfinance issues largely perhaps behind us?
See, festive periods was good, right? And the fact is that, I'm reasonably confident that, and microfinance is coming back, gold loan disbursements are good. Two-wheeler, we saw a very good month in October, though this month it has sort of stabilized to a large extent and come into a normal trajectory. I'm pretty confident that overall for this year, we should be at about the 20 to 25%, benchmark. Next year, again, we have to see, next year, again, if you see microfinance, I think this business, the safe speed for this business is between 10 to 15%, right? But, we will have a couple of high growth businesses. Personal loans has been growing at 40% plus for us. And if you look at our digital origination of personal loans, we probably are growing at about, on a quarter-on-quarter basis, about 30-40% on that as well. So personal loans will continue to grow well. Micro-LAP, small book is growing well. Gold loans will go strongly. SME business for us, small base, but it's been growing well. We saw a little bit of risk on the lower end, sub 20 lakhs, but that's not a very large part of our portfolio. So we continue to grow well on that as well. So overall, again, next year, overall, and as we sort of announce our Lakshya 31 targets, right, in the month of April of 2026, we will want to be within that corridor, because the fact is the targets that we are taking, between 20 to 25% is a safe speed to grow any sort of retail lending business. And the fact is that in our Investor Day, we articulated there, we are a risk-first, tech-first, diversified financial player. So we will grow to the extent that we are comfortable with risk. Now, if that means that shaving a couple of basis points from the growth rate, so be it. But 20 to 25% is good enough.
And I think that'll be good enough for the market as well. If you're able to do that consistently, I think the key word is safe speed.
That's right.
Safe speed. You don't want roller coasters.
And just quick, last 10 seconds, allow me to add this. The Japanese are lining up with money. People from the West Asia are lining up with money. When it comes to Indian BFSI, there are deals galore. Some of your larger NBFC peers, there's still a lot of buzz that they could be looking at.
You've warmed him up. He knows what's coming.
You know what's coming. I mean, and you have so many growth plans, right? Plus you're spending on tech, all of that. Capital needs, would you look out for a fresh equity partnership?
Not really right now, because you see, we had a equity partnership with Bain for a long period of time. They exited, and after that, I think we are well capitalized. Our parent, obviously, has got deep pockets to attend to any of our capital needs. So as of now, I think our focus is on execution, execution, and execution.
All right. Thank you very much for dropping by, sir. Really appreciate it. And thank you for joining us here on CNBC TV18. Great chat. 80 points, by the way, on the Nifty. We're at about 26,280. It's looking solid at this point in time. We'll take a quick commercial break here. we'll stay with the financial services business, but talk about a very different kind of financial services business, exchange business. So the country's dominant exchange, NSE, National Stock Exchange, on the other side, for a chat on, of course, timelines to a potential IPO. Sriram Krishnan is going to be with us, and of course, individual segments, how they're holding up, etc. Stay tuned, coming up. Okay, welcome back. We've got the market, which of course is at a new high, 26,295 as we speak. So, great occasion to actually speak with, the dominant exchange in the country. National Stock Exchange is, with us. And we're going to talk about numbers, segments, and of course, when we will see the NSE IPO. Sriram Krishnan is Chief Business Development Officer at NSE. Sriram, great to have you with us here. We talk about Nifty all the time, morning till afternoon. So good to speak with the exchange behind it. And I'm assuming it's been busy with primary market action, a lot of secondary market action. Trading volumes have been pretty good. The one thing which you would acknowledge is a great deal of interest to everyone is timelines to a IPO from NSE itself. So talk to us a little bit about the background. Where is it? Where it is at? Have things moved? And just that'll help.
For NSE, I think more than our own IPO, it's the existential objective to help other people raise capital. I think we've done that so effectively in calendar year 2024, where 268 companies got listed on NSE, raising about $20 billion. This year is no different. The fund mobilization seems to be quite aggressive. And already we've seen more than 1.1 trillion raised in equity and about 12.5 trillion raised in bonds. And this year looks very, very exciting as well, with many, many large IPOs lined up in the next weeks and months. As far as NSE's IPO is concerned, that's dependent upon the regulatory clearances, and it will happen when it has to happen.
Little more than that possible, Sriram? Have things moved with, the SEBI settlement fees for the co-location case, right? What's the provision behind it? What's the timeline? 1,300 crores provision was made. Some sense will help.
The information available in the public domain is all that I can refer to, but there's nothing more as such that I'll be able to say on this one.
Sriram, if I could just ask, so are there any other approvals from any other agency that are pending, or all the requisite approvals for the IPO, are they already in place?
Normally, for a company to go public, the regulatory clearances are important. We are waiting for that.
And these are clearances from SEBI or any other? I'm just trying to understand from a regulatory perspective where things stand.
The industry regulator has to approve first, and then SEBI has to approve. In our case, SEBI is both the industry regulator and the capital markets regulator. So that's what we are waiting for.
All right. Hi, Mr. Krishnan. Good morning and good to see you, Ben. Let's talk about business then. How's the market share holding up? The erstwhile smaller player, BSE, is making a bit of a push in the options side of things. What's the updated market share, both in the cash as well as the F&O market, if you could help us out with the recent numbers?
Sure. Now, in the cash market, our market share continues to be about 93-94%. With almost all the large marquee deals happening on NSE, it's been a bit, busy, actually. So cash is doing well. As far as equity options are concerned, if you look at August 2025, our market share was 76.9%. And I'm picking August 2025 because effective September 1st, 2025, we changed our expiry day for index options from Thursday to Tuesday. But if you see since then, if you look at November 2025, for example, our market share in equity options has gone up about 10% to 87%. So I think the market participants have accepted well to the change of expiry day from Thursday to Tuesday. And Tuesday seems to be working well for us. Particularly if you look at each of the days as well, I think we are gaining market share significantly. And that's a good direction to get into. If you look at the other segments as well, electricity futures, for example, which we launched in July 2025, our market share is consistently anywhere between 75 and 80%. And electricity futures is a great example of how NSE makes products actually work for the value chain participants.
All right. So just to clear the air, you're saying that the equity options out there, the change in the weekly expiry has actually made a difference with your share going from 75% to 87%, if I got that number correct.
Absolutely. 76.9 to 87. Yeah.
87%.
76.9 in August, 87% in November.
Okay, got it. If you could also help us out with any kind of communication from the regulator, because there was that fear that the weekly expiry will be pushed back. There'll be some kind of regulations that will come about. Have you all heard anything? Or do you all have, a few months now where at least we continue to see the weekly expiry? Just wanted an update on that front.
I think on your channel, I saw the SEBI chairperson clearly articulating that if at all any changes were going to be made, that would be based on a consultation paper and due process, etc. So we have not seen any consultation paper yet. And I think whatever happens will happen after due consultation.
Have things, Sriram, have things moved at all? Have they asked you for more data? We've been reporting and over the last many months that maybe it's not going to be that hammer blow which many were expecting. The SEBI chairperson at our event, as you said, at the Global Leadership Summit, on stage said, well, and on other occasions as well, that we've done a lot in terms of what needed to be done, and we will continue to evaluate as we go forward. Is that the right kind of interpretation from your perspective? That
I think so. On the contrary, many brokers have in fact gone and represented to SEBI, requesting that Bank Nifty be allowed on Thursday, because that used to be the biggest product in the whole world within the umbrella of equity derivative contracts. And I think the market participants have been missing Bank Nifty for a while now. And, as an additional weekly expiry, if that's permitted, let's say on Thursdays, I think that will really help the market. And, hopefully, SEBI can permit one more weekly expiry per exchange. and that can, in fact, make things even more better for the market participants. If you see the broking revenues, they've gone down almost 50-60% for most of the large brokerages. There are a number of changes we have gone through in the last couple of years. I think it's time to recoup and recharge a bit.
So brokers have made representations. You have as well?
No, we are here to deliver what the market wants. We know that the Broking Industry Association had made a representation, and that's why I refer to that.
So on this, any indication? I don't know if you have heard anything from the regulator. Is there a timeline? Are they reviewing these proposals over how many weeks, or is it months? May they come out with some sort of a view? Any indication on Bank Nifty specifically?
So we are not aware of any specific developments or indications as such after the representation was made. But we know that the broking industry wants one additional weekly expiry per exchange and if possible Bank Nifty to be allowed on Thursday.
So there is a possibility that a second product will be allowed, but it won't. I'm guessing if at all the regulator is looking at it, it won't be limited to just one exchange. Then it'll be available to all exchanges to allow a second product. You believe that can happen?
No, this is the representation made by the Broking Association. We don't know if the regulator will approve it or not.
Sriram, there are other exchanges looking to launch products, etc. as well. NCDX, for example, they've raised 2 rounds of money. There's one more, the Metropolitan Exchange. I mean, just how do you see all of it, and any perspective you can share there?
No, I think it's an interesting development, and the other exchanges obviously have a big task ahead of them. They have to obviously do well in the cash equities first to be able to succeed eventually in equity derivatives. I think that was the regulatory thought process as well. So it'll be interesting to see how they come out with their strategies and try to win market share in this space. India is a growing country, and there's enough space for more exchanges to grow and thrive. And we are very keen to welcome all of them.
Just last question, Sriram. As you look ahead into 26 and beyond, what product innovations, any particular segment which you will focus on to build out as the next growth driver? What should we expect?
So a couple of things that I will highlight here. This is a very important question. And, in the last couple of years, a number of market participants have been asking us to build more racks in co-location because most of the players today are technology oriented and want to be present in our co-location. So we have actually moved employees out of the NSE building and are slowly turning it into a full data center. And we've now turned rack surplus. So anybody who wants a rack can immediately get it on demand. So that's one. Secondly, we have approval from the capital markets regulator to launch a few contracts, a couple of contracts, particularly the 10-gram gold futures contract and the Indian natural gas contract. So the natural gas contract based on Indian prices. So these two are approved and ready to go live. So we will announce the launch of these products very soon. Apart from that, we have also applied for the launch of the Brent crude oil contract, which will hopefully get approved soon. We also await approvals for launching corporate bond futures and government bond futures. Hopefully, these two are interesting and exciting products, given that the specialized investment fund framework has also been launched recently by SEBI and has gone live from many asset managers domestically. So there are a few products that are coming in, and we can also look for some exciting participation from retail customers in particular.
Okay, all right. So lots lined up, and I think that's what your shareholders would like to hear as well. Thanks very much, Sriram, and always great speaking with you. I hope we do this more often. Thanks very much for coming on CNBC TV18. Good luck. All right, well, 70 points, markets, there, roundabouts there. 26,277 is the index value at this point. Siddharth Rai is with us of Stockbox Technology. Siddharth, good morning. Great to have you with us here. Just a quick look at the price action and what would you recommend for viewers?
Hi, Prashant. Good morning, and thanks for having me on the show, first of all. See, Prashant, if we talk about Nifty, today's the last 45 minutes or so on the index just seem to be an extension of the momentum which we started building, started building up in the index in last week. We just discussed it on Friday that no matter how many dips or consolidations we see in Nifty from here, as long as the index is above 26,200, 26,100, these two important levels, we must be staying bullish on the index. My view remains quite the same even now. Now that we are also trying to touch 26,300 again and again, Nifty seems to be very well positioned to be moving towards 26,500 and 26,600 just in the next couple of days. So this is a very good time to be staying bullish on the index.
Okay, so time to be bullish on the index. Siddharth, what about stocks?
Yeah, sure. So I see two stocks. Both of these we have to buy. The first one is Uno Minda. The stock has been on a weekly basis. The stock has been making higher highs for the past 2-3 weeks. So the momentum looks very good, and the stock seems very nicely placed for an up move, good up move from here. So Uno Minda can be bought right now. The spot is trading around 1334-ish. You can buy it here. The stop loss will be at 1310, and the targets being the first target 1375 and the second target 1395. The second stock is from the two-wheeler space. The name is TVS Motors. See, the whole two-wheeler space has been buzzing for the past couple of months now. And TVS Motors now, I think it will be one of the outperformers in this space, as today it has almost made an open low. It started running just from the point where it opened. So TVS Motor looks very good right now. It can be bought. The spot is trading around 3620, somewhere around that. We can buy it here. The stop loss will be at 3590, and the targets being the first target 3680, the second target 3720.
Okay, all right. Thanks a lot, Sid, for joining in and giving us those calls. For the time being, we slip into a short break. On the other side, Manisha is waiting for us. She'll tell us what's going on in the commodity markets. Stay with us.
Welcome back. Equities are having a steady morning. Most of the gains are intact, 70 odd points up on the Nifty. Let's find out what's happening in commodities. And it's all sparkles, as Manisha was telling us, in these precious metals. Silver has indeed turned into gold. Should I say that, Manisha?
Yeah. And I want to say your markets may be steady, but look at precious metals and absolutely making all-time highs onto that one. I want to start with silver, really, because we're looking at an all-time high onto this one. It's trading at record highs. 57.80 is what we've done. If we can show the latest prices, we'll know what we're trading at right now. But the Chinese inventories have dropped to a decade lows, and that clearly seems to be supportive. If you look at the Chinese silver exports, they surged to an all-time high for the month of October to the tune of 660 tons there. And also US has added silver and copper in its critical mineral list, and that also has given it that re-rating where you're looking at silver running up, and that is exactly what we are looking at in sense of copper as well. So while the US copper prices are trading at a 4-month high, you have the LME London copper prices trading at an all-time highs above $11,200 a ton there. I mean, we've seen very, very strong gains come in for copper most part of this year. This is on the back of planned production cuts that we are seeing coming in from Chinese smelters. There are a series of mine disruptions that we have seen come in from major producers in Chile and Peru as well. And then apart from that, the fatal incident that we saw in Indonesia's Freeport-McMoRan's Grasberg mine, the reports there indicate that the full resumption of all of this trade perhaps would happen only by 2027. And then you have recurring protests happening in Chile and Peru. And then Codelco has offered record high prices to Chinese buyers as well. So they're trying to sell more to US and less to China. And is the reason you've seen that disparity come in the international markets. But then again, it's not just about silver and copper. Take a look at palladium and platinum as well. It has to do with thin London inventories that has led to these two PGM metals trading on the positive side as well. It also has to do with uncertainty surrounding US trade policy that has led to safe haven buying coming in. And then it has been about private investors increasing allocations. So when you look at fund allocations for 2026 as well, the expectation is that the precious metals, base metals, minor metals perhaps could be looking at more money rotating there. The mining is concentrated in South Africa and Russia, and we have seen concerns there is another reason that you have seen the prices go up. And then when you talk about the demand prospects, well, whether it has to come in from EV, data centers, renewable energy, you are going to need many of these metals, and that would continue to keep it in good favor. Take a look at the prices now, and that really is a sparkle. Silver is gained up by 98% in this year until time, so almost doubling from where we started in this year. It's been a 90+% gains in case of platinum as well. Palladium and gold almost equal with 60 to 68% of gains coming in there. And then take a look at the other metals also, because we're looking at copper gaining by 32%. It's a 30% gain coming in for tin, which is trading at a 3-year highs right now. And then you have aluminum prices up 13% as well. What the markets will watch out for going forward from here is going to be that 87% of a probability of a 25 basis point rate cut. That meeting is happening on 10th and 11th of December. But ahead of that, it also is going to be about the US manufacturing and payroll numbers that are expected in this week. That is going to move all those markets as well.
Okay. All right, Manisha, got it. Thank you so much for that. So silver indeed shining bright. That's the big commodity headline this morning. We'll take a quick break on that note, but coming up on the other side, Lata will be speaking with the CNBC TV18 Citizens Monetary Policy Committee on what to expect from the RBI on the 5th of December.
Welcome to the CNBC TV18 Citizens Monetary Policy discussions. The upcoming RBI policy has become a deeply divided debate after the second quarter GDP growth came in at a strong 8.2%. Yes, the governor said Reserve Bank has space to support growth, but is there a need to support growth has become the new question. Joining me are Citizens MPC members Soumyakanti Ghosh of SBI, Samiran Chakrabarti of Citi, Sonal Verma of Nomura, JP Morgan's Sajid Chinoy, and our chairman, Dr. Pranab Sen, the former chief statistician of the country. Gentlemen and Sonal, thank you very much indeed for your time. Actually, let me start with the lady. Sonal, 8.2% growth. How can you justify a need for a rate cut? Will that pull back the MPC's hand?
Yeah, Lata, I mean, clearly it's a tight decision this time around. I think taken at face value, the 8.2 and for FY26, where we are now tracking closer to 7.5, does not suggest there is a need. I think we need to sort of dig a bit deeper, though, and a more nuanced analysis in terms of to what extent do we take these 8+ readings on GDP at face value? What is the role of low deflators in actually accelerating the real growth? Do we think that the output gap in India has turned positive based on the broader swath of economic data, including the credit gap, current account gap, momentum in core inflation, etc.? And I think the forward-looking view as well, I mean, as the deflator is going to drop even further into the negative territory in Q3, and that will again hold up real GDP in the next quarter. So we'll be having the same debate 2 months later. And therefore, I think, the forward outlook in terms of do we think steady state growth has stabilized in the 7.5 to 8% range? If not, if growth is going to revert back to 6.5, 7%, then the output gap is not significantly positive. So I think at face value, yes, there isn't a need, but I think we need a deeper analysis and discussion on the nominal growth slowdown and whether we think output gap has turned positive. Our view is it is not positive, and the deflators are exaggerating the real increase.
Okay. Sajid Chinoy, if you have joined us, a similar question to you actually. Is there not increasing conviction, at least for the last 3 or 4 quarters, GDP is coming higher than market estimates. So maybe we are in a higher potential growth. Or do you think this is a one-off blip because of the low WPI and we will revert back to 6% and growth needs help?
Well, Lata, good morning. I'm not even sure we need to go into those assessments when deciding what the RBI should do. What is the RBI's mandate? The primary mandate here is to keep inflation close to 4%, right? While keeping an eye on growth or while supporting growth. But it's very clear that the primary mandate is on inflation. And, 10 years into an inflation targeting framework, it's very important from a credibility perspective to implement the mandate symmetrically. If overall headline inflation was tracking 6%, which is the upper end of the RBI's corridor, most analysts would say the RBI needs to hike rates here. This year, overall inflation, even if before the GST cuts kicked in, was running at about 2.2 or 2.3%. If you look at underlying inflation, which is to look at core inflation, correctly adjusted for gold prices and fuel prices, that's been running at less than 3% for a year. So if your primary mandate is to keep inflation close to 4, inflation is currently at 2%, underlying inflation is running at 3%, suggesting that there is still slack in the economy, it's very clear to me that, the decision is clear that you need at this point to cut rates to maintain the primacy of your mandate. Judgments about, output gap are harder to make, but if underlying core inflation is running at 3%, that still tells you there's slack in the economy. And so the RBI needs to be supportive of that at this point in time. So I think taking a more puritanical view of the inflation targeting framework, which I think is the right thing to do at this point in time, avoids, some of the questions that Sonal raised.
Okay. No, I agree. But, the RBI has not been all that symmetrical. During COVID times, even when inflation was above 6%, they did not hike with good reason. So, I mean, there have been exceptions to the rule, but we will leave that to the official MPC. Let me get to Soumya. Shaubhya, the RBI also looks at forward inflation. And that, given the low base, may be close to 4% or even higher. So do you think we can run away, assume a rate cut simply because the last number was 0.25%?
No, I think we are living in a world of uncertainty, and a new uncertainty is the GDP, strong GDP growth, which has now become a certainty. So my sense is that I think let's dissect it into the following points. The first thing to note is that I think inflation, forward guidance of inflation in a situation when there is significant uncertainty is always very difficult to give. I think we started the year, the central bank started the year with an inflation forecast of 4% in April. It went down to 3.7, 3.1, and now there is a 2.6. Now there is every possibility that the final inflation number could be closer to 2%. Next year, we have started with 4.9. We are now at 4.5, but with the new CPI base and given the current inflationary trends, I think I will not be surprised if it runs decisively below 4% also for the next year when the MPR report is published in April. So having said all this, I think so the 1 year forward guidance at this point of time, looking into it and making, even though that's actually the mandate of an inflation targeting central bank, is very difficult to make. Okay. So my sense is that while I agree with the point that inflation is going to undershoot significantly, but you also have to admit that growth has been strong. Last year, we were having a debate that why the GDP is so high from the GVA. That was because of indirect tax collection. This year, we are having a debate that whether the GDP is high because of deflator. Whichever way we can argue, we need to understand that the GDP growth has continued to be strong. We can also look into the arguments in terms of a glass half full. For example, the nominal GDP growth rate could have been higher and the GDP growth could have been lower, but that's not been the case. So we need to take a sacrosanct view. Yes, inflation will significantly undershot, but at the same point of time, in a world of uncertainty, you have to keep the gunpowder in your arsenal over a longer period of time, and there is no harm if the rate cut cycle or
साथियों, आप भी मौसम का मजा लीजिए। साथियों, ये शीतकालीन सत्र ये सिर्फ कोई रिचुअल नहीं है। राष्ट्र को प्रगति की ओर तेज गति से ले जाने के जो प्रयास चल रहे हैं, उसमें ऊर्जा भरने का काम ये शीतकालीन सत्र भी करेगा, ऐसा मेरा पूरा विश्वास है। भारत ने लोकतंत्र को जिया है, लोकतंत्र के उमंग और उत्साह को समय समय पर ऐसे प्रकट किया है कि लोकतंत्र के प्रति विश्वास और मजबूत होता रहता है। गत दिनों बिहार में जो चुनाव हुए, उसमें भी मतदान के जो विक्रम हुआ है, वो लोकतंत्र की सबसे बड़ी ताकत है। माताओं बहनों की जो भागीदारी बढ़ रही है, ये अपने आप में एक नई आशा, नया विश्वास पैदा करती है। एक तरफ लोकतंत्र की मजबूती और इस लोकतांत्रिक व्यवस्थाओं के भीतर अर्थतंत्र की मजबूती, इसको भी दुनिया बहुत बारीकी से देख रही है। भारत ने सिद्ध कर दिया है, डेमोक्रेसी कैन डिलीवर। जिस गति से आज भारत की आर्थिक स्थिति नई ऊंचाइयों को प्राप्त कर रही है, विकसित भारत के लक्ष्य की ओर जाने में ये हमें नया विश्वास तो जगाती है, नई ताकत भी देती है। साथियों, ये सत्र संसद देश के लिए क्या सोच रही है, संसद देश के लिए क्या करना चाहती है,
संसद देश के लिए क्या करना चाहती है, संसद देश के लिए क्या करने वाली है।
विपक्ष भी अपना दायित्व निभाएं, चर्चा में ऐसे मुद्दे उठाएं, मजबूत मुद्दे उठाएं, पराजय के निराशा में से बाहर निकल करके आए। और दुर्भाग्य है कि एक आध दो दल तो ऐसे हैं कि वो पराजय भी नहीं पचा पाते। और मैं सोच रहा था बिहार के नतीजे इतना समय हो गया है तो अब थोड़ा संभल गए होंगे, लेकिन कल जो मैं बयानबाजी सुन रहा हूं उनकी, तो उसे लगता है कि पराजय ने उनको परेशान करके रखा है। लेकिन मेरा सभी दलों से आग्रह है कि शीतकालीन सत्र में पराजय की बौखलाहट का वो मैदान नहीं बनना चाहिए और ये शीतकालीन सत्र विजय के अहंकार में भी परिवर्तित नहीं होना चाहिए। बहुत ही संतुलित तरीके से जिम्मेवारी के साथ जनप्रतिनिधि के रूप में देश की जनता का हमसे जो हमें दायित्व दिया है और हमसे जो अपेक्षाएं हैं उसको संभालते हुए हम आगे के लिए सोचें, जो है उसको कैसे अच्छा कर सकें। अगर बुरा होता है तो उसमें सटीक टिप्पणी कैसे कर सकें ताकि देश के नागरिकों का भी ज्ञानवर्धन हो। ये मेहनत का काम जरूर है लेकिन देश के लिए करना चाहिए। और मैं आशा करता हूं, मेरी एक सबसे बड़ी चिंता रही है पिछले कई लंबे समय से, सदन में जो पहली बार चुन करके आए हैं या जो छोटी आयु के हैं, वैसे सभी दलों के सभी सांसद बहुत परेशान हैं, बहुत दुखी हैं। उन्हें अपने सामर्थ्य का परिचय कराने का अवसर नहीं मिल रहा है, अपने क्षेत्र की समस्याओं की बात बताने का अवसर नहीं दिया जा रहा है, राष्ट्र के विकास की यात्रा में भागीदार बनने के लिए वो अपनी कुछ बात बताना चाहते हैं, उस पर भी रोक लगा दी जा रही है। कोई भी दल हो, हमें किसी को भी हमारी ये नई पीढ़ी के आ रहे नौजवान सांसद, पहली बार आए हुए सांसद, उनको अवसर देना चाहिए। उनके अनुभवों का हमें सदन को लाभ मिलना चाहिए। इस नई पीढ़ी के अनुभव सदन के माध्यम से राष्ट्र को भी लाभान्वित करेंगे। और इसलिए मेरा आग्रह रहेगा कि हम इन चीजों को गंभीरता से लें। ड्रामा करने के लिए जगह बहुत होती है, जिसको करना है करते रहें। यहां ड्रामा नहीं, डिलीवरी होनी चाहिए। नारे के लिए भी जितने नारे बुलवाने हैं वो पूरा देश खाली पड़ा है। जहां पराजित होकर के आए वहां बोल चुके हो, जहां अभी पराजय के लिए जाने वाले हो वहां भी बोल दीजिए। लेकिन यहां तो नारे नहीं, नीति पर बल देना चाहिए और वो आपकी नीयत होनी चाहिए। साथियों, हो सकता है राजनीति में नेगेटिविटी कुछ काम आती होगी, लेकिन अल्टीमेटली नेशन बिल्डिंग के लिए कुछ सकारात्मक सोच भी होनी चाहिए। नेगेटिविटी को जरा अपनी मर्यादाओं में रख करके नेशन बिल्डिंग की तरफ ध्यान दे, ये मेरी अपेक्षा रहेगी। साथियों, ये शीतकालीन सत्र एक और कारण से भी महत्वपूर्ण है। हमारे नए माननीय सभापति जी आज से हमारे उच्च सदन का मार्गदर्शन उनका शुरू हो रहा है। मैं उनको शुभकामनाएं देता हूं। साथियों, जीएसटी रिफॉर्म्स एक नेक्स्ट जनरेशन रिफॉर्म्स के लिए देशवासियों के मन में एक श्रद्धा का वातावरण पैदा किया है। इस सत्र में भी उस दिशा में बहुत सारे काम होने वाले हैं। हमारे देश का एक हमारे मीडिया के मित्र कभी अगर एनालिसिस करेंगे तो उनको ध्यान में आएगा कि पिछले कुछ समय से हमारे सदन को या तो चुनावी का वार्मिंग अप के लिए उपयोग किया जा रहा है, या तो पराजय की बौखलाहट करने को निकालने के लिए उपयोग किया जा रहा है। अब मैंने देखा है कुछ प्रदेश ऐसे हैं कि सत्ता में रहने के बाद इतनी एंटी इनकम्बेंसी है कि वो वहां जनता में जा नहीं पा रहे हैं, वहां लोगों के बीच जाकर के अपनी बात बता नहीं पा रहे हैं, और इसलिए सारा गुस्सा या सदन में आकर के निकालते हैं और सदन को अपने उस राज्य की राजनीति के लिए इस्तेमाल करने की नई परंपरा को कुछ दलों ने जन्म दिया है। अब उन्होंने एक बार चिंतन करना चाहिए कि पिछले 10 साल से ये जो खेल खेल रहे हैं, देश स्वीकार नहीं कर रही है इन पद्धतियों को, तो अब थोड़ा बदलें, अपनी रणनीति बदलें। मैं टिप्स देने के लिए तैयार हूं उनको कैसे परफॉर्म करना चाहिए, लेकिन कम से कम सांसदों के हकों पर तराप मत लगाइए, सांसदों को अभिव्यक्ति का अवसर दीजिए, अपनी निराशा और अपने पराजय पे सांसदों को बलि मत बनाइए। मैं आशा करता हूं कि इन जिम्मेवारियों के साथ हम सब चलें, लेकिन मैं देश को विश्वास देता हूं कि राष्ट्र प्रगति की राह पर चल पड़ा है, राष्ट्र नई ऊंचाइयों को पार करने की दिशा में आगे बढ़ रहा है, और ये सदन भी उसमें एक नई ऊर्जा, नया सामर्थ्य भरने का काम करेगा। इसी विश्वास के साथ बहुत बहुत धन्यवाद।
All right, that's the Prime Minister, of course, a reference to the historic Bihar mandate and invoking all political parties to, rise above differences and work towards nation building. Interesting remarks coming there from the Prime Minister. The market, in the meantime, is again not able to really build on too much of momentum, but it's still very early in the morning, so we'll see how this plays out. For the time being, the Nifty is holding on to a gain of about 80 odd points. We'll take your leave on this edition of Bazaar Morning Call. Many thanks for watching. Chartbusters coming up next.
The Indian market extends its record run. The Nifty Bank opens about the 60,000 mark, while Nifty scales 26,300 levels. The broader market also gains in line with the benchmark indices.
Silver prices hit record highs on the higher likelihood of a Fed cut and depleting inventory in China. Hindustan Zinc, the sole pure equity play on silver, is up close to 2%.
Hopes of a rate cut by the US Fed also spurs copper prices to record high. The metal index is the top sectoral gainer, led by Vedanta and Hindustan Copper.
Lenskart rallies after delivering a strong growth in the second quarter, led by international business. Brokerage Jefferies also issues a buy rating with the target price of 500 rupees per share.
SML Mahindra hits a 5% upper circuit on a very strong show in the November sales numbers. The total sales were up by 102% year-on-year basis.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, and with me is Vinny today. Hey Vinny, yet again you're joining on the show, and yet again the market's trading.
Record high, Nigel, again today. So no complaining. I'm more than happy. Bulls are more than happy as well. Green on the screen. No one wants to complain. But whether this continues is something that I will be keeping an eye on.
Well, that's right. Good to hear that you're happy. Even the Vinny fans are happy to see you at around 10:30 a.m. today, and the market's holding in the green. By the way, we have auto sales numbers that are trickling in. The total CV sales numbers have come in higher by close to around 17%. That's the number that I read. Exports mildly higher by around 5%, or that's the total exports number. And I think one more data point, I think, is what was flashing on the screen. Total auto sales itself is up close to around 19%. Remember, this is a stock that's at a 52-week high. So, you may not see a very outsized reaction out there, but the numbers appear pretty good. And the tractor sales number, that's encouraging. 32% higher. I recall having a chat with Mr. Anish Shah when he had visited our studio, and he said that they continue to go from strength to strength and they continue to gain market share as well. So, that's the stock that's on the radar. 25% higher in a market that's been more or less flattish in the last 12 months or so, Vinny.
Absolutely, and we'll keep an eye out on these other auto sales numbers that trickle in as well through the day. But as of now, M&M is what we're keeping an eye out on. But let's welcome Shivangi Sarda from Motilal Oswal Financial Services for a check on the market, on the technical. Shivangi, good morning. Thank you so much for joining us. 26,300 new highs. What are the levels now we're keeping an eye out on? Is it a bit of a worry that maybe we could see a bit of a fall or from the levels that we are currently trading at, Nifty as well as Bank Nifty, Shivangi?
Very good morning, Vinny and Nigel. Thank you for having me. So we've seen that, the indices have been cheering at lifetime high levels, and what better way to start the week? And of course, we've seen that there is some bit of profit booking at the higher levels, but again, it is quite healthy, because we've seen this rally continue in the last, few sessions. And we've seen that the index has been, continuously making, trading in an upward sloping channel from the last 16 odd weeks. So overall, the trend is quite positive, even on the larger time frame, and we're expecting this trend to continue and extend towards 26,500 levels for Nifty, with a support, of course, at 26,100 immediately, and 26,000 as a make or break zone here for the index. Now, of course, talking about Bank Nifty, this space has outperformed in this entire rally, and we've seen that PSU names have been one of the star performers. Bank Nifty, of course, continues to cheer at lifetime high levels with strength as compared to the broader market. And we are expecting 60,500 here for this one, with a support of 59,800 odd levels for Bank Nifty. So buy and decline for both the indices, with all the other factors, contributing to the positive side.
Okay. All right. And what about your stock pick, Shivangi?
So talking about stock picks, of course, we've spoken about the outperformance in Bank Nifty. So the first, stock idea would be from this space. Bank of Baroda is what I'm talking about. This stock has come out of its consolidation of the last 14 sessions, and we've seen, a Poland flag pattern kind of formation breakout over here. And RSI is showing positive divergence, and we've seen quite, good amount of rollover here. from the previous series, which is adding to the strength. So this one is on radar for the next up move towards 310 levels with a support of 290 zones. And the second pick on my radar is TVS Motor. We have seen good amount of short covering trigger here. And we've seen that the stock has actually bounced back from an important retracement level on the weekly basis after taking support near 3350 odd levels. And from the last 5 odd sessions, we've seen higher top, higher bottoms. Momentum is slightly building up, but today the volumes have also shown strength. So this one is on radar for the next up move. We are expecting 3,800 levels for TVS Motor with a stop of 3,540 levels.
Okay. All right. Thanks a lot for that, Shivangi. And we look forward to chatting up with you soon. By the way, keep an eye out on Maharashtra Seamless, one of the stocks that have actually underperformed. But in the last week itself, or the last 2 trading sessions, that's on November 26th as well as 27th, the promoter has gone in there and shown some faith, has put in, closer on 0.5%. 0.44% has been bought from the open market. That's closer on 5.82 lakh shares. And if you look at it, in the last 2 years, 2 to 3 years or so, the promoter has bought closer on 2.5% from the open market itself. So Maharashtra Seamless, one of the stocks that are actually year to date not given too much of returns, but now the promoter entity going in there and chipping in and buying some shares from the open market in the last 2 days. And we pull up a longer time horizon, you'll see that they've been consistently buying. The promoter holding was at around 67%. And now it's moved to around 69.5% or thereabouts. They won an order as well over the weekend, and that's another piece of news coming in there. Stock still down year to date, but promoter buying is normally taken as a bit of a positive sign. Well, let's move on then. Let's focus on our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk about a stock that he's tracking rather closely. Sachin?
Cera Sanitary, which is a leader in both faucets as well as sanitary ware in the domestic market, posted a muted final performance in the first half of FY26, primarily due to the weak consumer sentiments in the building materials industries. Revenues for the first half grew almost 2% year-on-year to 910 crores. Margins, on the other hand, came in weaker on a year-on-year basis, primarily due to a sharp rise in brass prices as well as other raw materials. Well, the management remains hopeful of a demand recovery in the overall domestic environment, primarily led by the GST rate revisions, the income tax cuts, as well as the liquidity injection measures being undertaken by the RBI. And is also targeting a revenue growth of almost 10 to 12% in the second half of FY26. Well, that being said, the company has put its capex plans on hold for the timing, primarily due to the weak sentiments overall in the industry. Nonetheless, the stock has also corrected by almost 20% in the last 1 year and currently trades around 27 times FY26 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
Thanks so much for that, Sachin. But on that note, we're going to slip into a very short break. On the other side, we have the management of Allied Blenders and Distillers joining us to discuss the ABD Maestro and Osprey duty-free deal that has taken place. What does this mean for the company? What should we be watching out for? Stay tuned for that. Welcome back. You're tuned into Chartbusters on CNBC TV18. Now let's shift focus to allied blenders and distillers. They have expanded their presence at the Mumbai airport, the duty-free side of it, with its super premium portfolio. Alok Gupta, Managing Director of the company, is joining us now to talk to us about the duty-free deal, the tie-up that has come in, what it means for the company. We'll also talk about the outlook in terms of FY26, if there's any change in that, as well as the expected contribution now from Prestige and Above going forward, what we're keeping an eye out on that. Mr. Gupta, good morning. Thank you so much for joining us on the show. Let's just start by talking about this tie-up that has come in, right, with the company as well as in terms of Osprey Duty Free. As of now, you all are starting off in the Mumbai region. So from FY26 for this second half of the year, how are you going to see this shaping up in terms of your numbers? What are you expecting from this now?
Yeah, thank you so much for inviting me today. I think you have to see this as part of a much larger scenario that's emerging. The to and fro traffic, international traffic in India has grown faster than domestic. It's roughly 70 million passengers who fly out of India and come back to India. So it creates a massive base of consumer through whom you can start building your brands, both for the domestic market and for the international markets. I think presence in Bombay gives us, it's the largest air traffic coming out of India. I think it gives us a great presence for all our super premium and luxury brand, both for those who are living in India and those who are coming back to India. As I said, I mean, this is part of a larger game plan as to how we can use duty-free channel to build our luxury portfolio.
Sure, but obviously this will build more in terms of your duty-free channel, but this is more going to be on the premium side, right? So then does that mean margins, at least in terms of FY28, you were given a guidance previously, would that be much better than the guidance that you were talking about of around 17-18% then by FY28?
No, absolutely. So I think if you look at our guidance, the guidance that we've given is on the back of our exit EBITDA margin this year, on back of our CapEx program, and on back of the entire premiumization that we're doing. What we've really not factored is the impact our luxury portfolio could have in the global markets, because we are in the process of just about setting the brand and the distribution in place. I think we need maybe 2 more quarters to be able to really assess the impact it'll have on our margins. So the margins could look better than our guidance, but I think it'll take another 2 quarters for us to come back and sort of talk about it.
Hi, Alok. Good morning. Good to see you win. Besides this, the other factor that caught your attention was Mr. Ranveer Singh unveiling Rangila vodka. Quite a launch all had out there. What's the target? What's the expected sales? A lot of hype with regard to vodka. If you could tell us the next few years, how do you see the brand scale up? And ABD, I think Allied Mastro, I think that's the subsidy where you're launching all these new brands, small in size, but with a tremendous potential. So run us through that.
Absolutely. The name of the subsidiary is Allied Blend, ABD Maestro. That's the name of the subsidiary.
Yeah.
And I think what we're doing with Rangila, and of course, Ranveer has been completely involved. It's pretty much sort of his vision of bringing a very bold Indian brand to the world. He has a global reach, 48 million, followers all across the world. He represents multiple luxury brands across the world. So the attempt that we are making with Rangila is to bring the sort of the more contemporary, today's side of Indian luxury. It will continue to be a whites brand, currently a vodka, but can be any other white flavor. And idea is to bring the bold flavors of India. So even if you look at the cocktail menu that has been curated, it's bringing very bold Indian flavors. So, in time to come, can we do a Bhoot Jaloka, which is the second hottest chili in the world, as an example, a cocktail out of that. So the whole, I'm very excited about it because it's sort of bringing a new face of India to the global markets. Whites is a very large category, both in India and in overseas market, and going back to Osprey, a brand like Rangila really fits in very well. So quite excited about it.
Any numbers you want to give us in terms of targeted, cases that you'll look to sell or something on those lines?
Absolutely. I think we've been fairly consistent that the luxury market in India is about 3% of the 410 million cases, so roughly about 12-13 million cases. We believe this market could be up to 20 million cases in time to come. We have taken a more portfolio forward approach and not just a brand forward approach. From Zoya, Art House, Rangila, Woodburn, Sagrado, we are looking at the entire portfolio because this consumer is very experience driven. So we are looking at a meaningful, let's say, a single-digit market share of this possible 20 million case market. That's how we are looking at the entire approach towards the luxury segment.
Okay, all right. And just one more word. I recall when we chatted last, you were telling us about the dues from the Telangana market. If I remember correct, I think it was around 400 crores or thereabouts, and 100 crores was received. How are things moving on that front?
Let me just give you one data point on the luxury portfolio. We are currently running at an ARR of about 40 to 50 crores. We expect to close the Q4 at about 100 crore ARR, and we see that run rate doubling in the next financial year. So that will give you a sort of sense of how we are planning to move the revenue for our luxury portfolio. Quickly coming to Telangana, we did receive, the numbers are absolutely right. We received over 100 crores of the overdue, and the total overdue is about 400 crore odd. Last month was a little slow on the collection front, but we're hopeful December will look better.
Okay, Mr. Gupta, thank you so much for joining us this morning, talking to us about the outlook of the company as well as the new tie-up with Osprey as well. Thanks so much for that. But on that note, we are going to slip into a very short break. And here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app from the Apple Store or the Google Play Store, or you can just scan the QR code on the screens for y'all.
Welcome back. We still have green on the screen. You know, all the four indices that are top of the screen, they're all in the green. However, the Nifty has come off. We were up close to 100 points at the start of the trading session. We're up 30 points. Even the breadth of the market, still number of stocks advancing are close to around 1,500. But the number of stocks that are declining have moved up from around 500 to around 1,200 odd. So the crisscross lines coming a little bit together. But that's it from Vinny and myself and the entire team of Chartbusters that put this show together. You stay tuned. Trading Hour is coming up next.
Hello and welcome to Trading Hour. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I am Reema Tendulkar. With me always Hormis Fatakia. And look who's joining us today on Trading Hour. Ritu, she's a name you're all familiar with, but now donning the hat of a market anchor. Ritu, great to have you in the...
It's great to be here. I'm thrilled to be here with the two of you. I've heard the morning team's quite fun, so I'm very excited to join in on all of the action.
And what a day, right? It's a strong start to the month of December. The Nifty is currently hovering at 26,230. So we're up close to about 0.3%. The intraday high today, the all-time high level on the Nifty was about 26,325. The Sensex is also holding up in the green with a gain of about 100 odd points. We've come off from the session highs, but it's a new record nonetheless that markets have hit in early trade. It's a new milestone for the Nifty Bank too, as it topped the 60,000 mark for the first time ever. Broad-based buying seen in banks, autos, financial, that's fueling the rally. And Ritu, I think it's that, I think the momentum was building over the weekend once we got that GDP print of 8.2%.
Absolutely, and nobody would have guessed that 8.2% number. That was positively a stunner and way above what the street was estimating. And you have the economy firing on all cylinders. So you can't really find any fault there with the numbers, the 8.2% kind of a growth that we've seen. But
It just complicates the RBI situation, right?
very
when
much.
You've
It
got
puts RBI
growth
in a
at
tough spot.
8.2%, inflation at record lows. Let's see what the RBI throws up. But let's get it down to stocks.
Yes, and Hormaz is standing by with all that's buzzing in trade. Hormaz?
A little nugget on the Nifty Bank, though, just before we get on to stocks. From the COVID lows, just looking at the Nifty Bank at 60,000, it's up 250% from the lows that it made back in 2020. So that is the kind of moves that you've seen on the banks. And of course, that has had a cascading effect on the Nifty as well. We may be off the highs of the session, but there are plenty of movers in the broader markets as well. Start off with JM Financial today, and it's the top gainer on the Nifty 500, 7% higher on the stock today. It's gained in 4 out of the last 5 sessions. In already the first couple of hours of the trading session, the volumes are the highest in the last 4 months, and over 3 crore shares have been traded already on JM Financial. And take a look at the 20-day average. That's just 20 lakhs. So it's 15 times the 20-day average already in the first couple of hours of the trading session. IEX is making a move on the upside today after ending at the lowest point of the day last Friday. The stock is up 5% and it's gaining on very strong volumes as well. Last week was a bit of a forgettable one for the stock as it had gained only once all through the week. But today's session already 1.2 crore shares traded, 20-day average of close to 24 lakh shares. So that is also 5x of the 20-day average. So moving higher on very, very strong volumes is IEX. And the last one on the list today is Salzer Electronics. That is the top gainer on the small cap index today. 9.5% higher on the stock. They snapped a 2-day losing streak. The stock was up around 13% a couple of weeks earlier on the 13th of November, and the volumes are all set to cross that number already in the first 2 hours of the trading session. We have had 13.5 lakh shares being traded on the stock in this 9.5% up move. The 20-day average here is only 50,000 shares. So broader market names, although the indices are off the highs, there are stocks that are moving and are moving on very, very strong volumes as well.
All right, Hormaz, thanks very much for taking us through that. But the big story of the day, it has to be the strong GDP numbers that Rima was just referring to. 8.2% kind of a growth in the second quarter. That takes the first year's average now to 8%, making sure that for the full year, we're probably set to cross about 7% or so of the rates, and how that makes RBI's job difficult. That and a whole lot to address. So we'll bring in our guests. Aditi Nair, the chief economist at ICRA, is joining in. Also with her, we have another economist. We have Madan Sabnavis, chief economist at Bank of Baroda, with us. Aditi, Madan, both of you, thank you so much for your time. Aditi, first, this differential between the nominal and the real GDP, thanks to that 0.5% deflator that people have been talking a lot about over the weekend. It's come down, I think, from a wide difference from 2023 to now where it is currently. What was some of your additional reading on this? I mean, is that still somewhat of a negative, the fact that nominal GDP is still at 8.7%?
Thank you so much. Well, the fact is that with inflation levels being so low, both for the CPI and for the WPI, there was no option but for the deflator to be as narrow as this, and I think this trend is going to continue in the current quarter as well. In fact, the deflator may be even lower in the current quarter than what it was in Q2. After that, as the inflation prints normalize, particularly for the CPI, we should go back to relatively normal looking deflators in Q4 and in Q1. So because of the deflator being low, as the real GDP growth number, we're expecting it to show some amount of base effect-led moderation in the second half of the year from the 8% real GDP growth that we've seen in the first half of the year. So, we will possibly be looking at real GDP growth coming off in Q3, nominal GDP growth being very, just slightly higher than that. And then in Q4, at least, the deflator being a bit higher, which would take the nominal GDP growth up in Q4 as compared to Q3.
Aditi, what is your sense for FY26 for the full year? We've already crossed 8% now with the first half. What would that number look like?
So we're looking at 7.4% now. Definitely, we got a very high and an unexpectedly high growth in Q2 and also in Q1, which was on a lower base. But if we look at the kind of quarterly trends that we had in FY25, we saw the real GDP growth going up very sharply in Q3 and in Q4. So that is possibly something that's going to be a negative. A couple of other headwinds that we're looking at, we really don't know how finally the export situation will pan out given the tariffs related to the US, both for goods and for services. Is there going to be more pain ahead? In any case, a lot of upfronting has happened for exports. So, possibly whatever good news there was is in the past, and the second half of the year may not look very good in terms of exports to the US. And also, specifically, when we look at the government fiscal data, for the government of India, the headroom which is left now for capital expenditure as compared to its budget for this year implies a 15% contraction in the second half of the year. We're hoping that there will be some sort of reallocation or an increase in allocation towards capex in the second half of the year, so that this doesn't really turn into a headwind. But these are the things that we'll be watching out for. As of now, our full year real GDP growth forecast is now 7.4% after the higher than expected growth that we got for Q2.
Okay, just want to get both your opinion on what we should expect from the RBI this Friday. Does this Q2 GDP stunner push forward expectations of a rate cut, alter that? Aditi, you go first and then Madan come in.
So we thought that before getting the real, the GDP data on Friday, we thought that the balance was slightly tilted towards a final cut. But I think now after looking at an 8% average growth for H1, possibly we're in for a pause on Friday.
Okay, Madan?
In fact, we believe that the rate cut cycle is over even before the GDP growth numbers came in. The reason is that whenever you're talking of a rate cut, the question to ask is what exactly are we trying to achieve? Are we trying to bring about growth? I think that definitely is not the case, because we're talking of India's GDP growth rate being in the region of close to 7.5% per year. Inflation, we all know, is something which has been down primarily on account of the base effect as well as food prices coming down. Now, this is something which will get reversed as we go towards the end of the year. And by the time we go into the next financial year, we are actually talking of inflation in the region of around 4 to 4.5%. So going on the basis of the real repo rate, which I think is going to be the final kind of a target, it may not be overtly stated, but that is something which is going to play around. I think 1.5% is the kind of real repo rate which we're looking at. And at 5.5%, I think we seem to be well priced. So therefore, end of the cycle, we remain at 5.5% for the year.
But Madan, call it me being the devil's advocate here or greedy for more. For the acceleration, we heard a lot of experts saying that for an acceleration to push towards the $5 trillion economy target, you need to grow at 9.5–10% on a sustainable basis. But if you would believe that an 8% growth would halt the rate cutting cycle, would another 25 not accelerate that push? Or do you believe that there are enough headwinds in place for the second half for the RBI to stay on cautious mode right now and then use that gunpowder when the need arises genuinely?
See, there are two things here. One is that we should remember that companies do not borrow money merely because it's cheap. So we saw during the pandemic where the repo rate was 4%, companies did not borrow just because money was coming cheap. So the important thing is to look at how demand is evolving. So as of today, there are signs that demand has taken off, especially in the consumer goods space. And there is reason to believe that capacity utilization rates could be improving here. And therefore, there could be some incentive to invest. And even in the past, we have seen that interest rates have really been the limiting factor for investment. When you see buoyant demand, you will tend to invest and possibly pass on the higher cost of interest costs to the consumer. But when we are talking of excess capacity, demand just about picking up, that's what we're expecting in Q3 on account of the GST 2.0 reforms. I think there is still a lot of space for investment to take place, notwithstanding the fact that the repo rate could be at 5.5%. Because finally, at the end of the day, RBI will also have to balance what happens to savings, which I think was mentioned in the discussion of the minutes, which was released for the last policy.
Madan, quick word on what your number for FY26 is. We've seen a spate of upgrades after the Q2 numbers came in, median pointing to around 7.4, 7.5% kind of a number, whereas RBI is still at 6.8. What sort of a revision do you expect there, and what is your own number?
Yeah, our number is 7.4 to 7.6. This is the number which we had when the GDP for second quarter was out. I would tend to believe that RBI would also probably revise it in the upward direction. It would be in the 7% range. They normally tend to be a bit conservative, so I don't expect them to go to 7.5. It will probably be 7.2, 7.3%.
Okay, so not a steep up move there from RBI, but a 7.2, 7.3% kind of a upgrade. But Madan, quickly, your comments also as well on what I was asking Madhvi, essentially this 0.5% GDP deflator. Are you worried that would be exaggerating the real growth numbers that we're seeing? Because in the second half, without the base effect, without this, export up move, what sort of a number are we likely to see?
So actually, if you look at the way in which GDP is calculated, you get the value of commodities, which is always only at current prices. So when we're talking of real GDP, where we want to remove the price effect, that's when the deflator really comes in. So I don't see anything inappropriate or anything which is untoward when we're looking at 8.7 and 8.2%. I mean, that is what is bound to play out when we're talking in terms of reducing anything at current prices into real terms. And since our inflation numbers have tended to be negative for WPI, very low for CPI, it's but natural that this number comes down. Now, is it going to create a problem, except maybe an academic discussion as to we are used to maybe around 2.5% to 4% difference between the two growth rates. Now it's going to be very much narrow. I think the issues will actually come up when you're looking at other kind of ratios. You're looking at the fiscal deficit. You're looking at the current account deficit. Those are the numbers which would tend to be under pressure on account of the denominator not growing at a very high rate. But the difference between the two, I think, is something which is perfectly all right. I don't see anything wrong in the methodology or in the approach taken by the CSO when they are computing these numbers. It's but natural because we've had very unusual inflation numbers, which all of us know is more because of statistical reasons. Because if you go to the market today, I think none of us can really believe that vegetable prices have actually fallen. They've actually gone up. But the CPI is going to continue to show that vegetable inflation is in the negative region. So I think these are the kind of anomalies which are there, but I don't think there is anything to get worried about.
All right. We're done with the first half of the year with an 8% average. We'll see what the rest of the year looks like. Aditi, Madad, both of you, thanks very much for joining in here. I guess, Hormaz and Rima, the real question really is on Friday. Yeah. How can RBI justify that rate cut when the economy is firing at 8% kind of growth rates? I think it's going to make RBI's job real hard.
Real hard, no doubt about that. We will slip into a short break. On the other side, we'll discuss crypto markets with Manisha Gupta on the other side. Stay tuned.
Welcome back. Shifting focus to the crypto markets now. Manisha is here. And Manisha, it's a new month, but it's the same old soft sell-off story.
It is. And, you know, while we haven't just seen sell-off that's come in Bitcoins and altcoins and all those platform one exchanges, but it also is about meme coins. And that's what I'm talking about today. Well, we are trading at the lowest level in sense of market cap for meme caps into 2025 there. If you look at the daily trading volumes on the decentralized exchanges, well, that's declined 70% on a year-on-year basis. So that's exactly what is happening here. This has been an interesting year, by the way, because as we saw institutional, retail and corporate adoption coming in, they went in for blue chips and not so much for meme coins. And that was another reason that you saw prices decline. So blue chip cryptos did quite well. And one of this money, a lot of reports say, has moved into AI projects as well. So no takers really when it comes to meme coins in this year, especially. What are meme coins? Well, these are cryptocurrencies that are inspired by internet memes, pop culture, viral social media trends. Also interestingly, well, meme coins generally lack any substantial utility case or real world assets, etc. And that is the reason you only see people enjoying that. No serious investors is what you would perhaps see when it comes to meme coins there. Primarily, it is community driven, and that is what makes it very, very highly speculative. And the prices are driven by hype and speculation. That's another reason that we have seen a very sharp decline at a time, especially when you have almost everything else declining as well in sense of within the asset class there. Take a look at the prices there. And, you know, the last 2 or 3 years, we've seen Dogecoin do quite well. But that one is down 56% in this week, or this year rather. Pepe is down 79%, Fatcoin is down 80%. And these are, by the way, by order of market cap in the international markets there. Shiba Inu is something that a lot of Indians also bought, but that one is also down by 62% when it comes to this year. And Peanut is down 88%, but not everything in meme coin is down as well. You have a coin called Useless, which is up by 19% in this year. And you have Giggle up to 22%, and the Trump coin is up to 49%. So there are still some buyers when you can see that in space.
Loving the names, Manisha. How do you say this with a straight voice?
We were surely giggling when we heard of Useless being up 19%. That's possibly the highlight of this. Manisha, thank you for that update there. Take a short break, get back on the markets and get more on the chart checks going and some top trading bets as well. The Nifty currently 40 points lower on the other side. Stay tuned. We'll be right back.
Welcome back. You're watching Trading Hour. Markets in the green. We'll pull up the charts for you very quickly. Sensex at 85,865, up 155 points as we speak. And the Nifty, of course, at 26,247. Still a little away from 26,300, the mark that the markets are watching out for. But Manish Hathiramani from Deen Dayal Investments joins us for a quick technical check of the market. Manish, welcome to the show. Thanks for your time here. How are you trading the markets now and your top stock picks for the day?
Good morning to you and to all our viewers. Well, I've been of the opinion that 26,450 to 26,500 is a potential target for this current rally. However, the markets have been a little nervous. The first proof of that had come on Friday, when we were a little nervous during the day. Today, we've resumed the uptrend. If you notice, the first half of the day seemed to be all bullish. We are again getting nervous a little right now. But we really need to evaluate the Nifty direction once we have achieved that level of 26,500. Considering that I continue being bullish, I am working with two buy calls today. The first one is on Bharti Airtel, which is for a target of 2190, stop loss of 2090. This stock had opened with a gap down on 26th of November, but we failed to follow through on the downside, which is actually a positive sign. Thereafter, we've seen trickles of healthy volumes with an inclining price. Therefore, with a favorable risk is to reward ratio, this trade can be endeavored. The second one is on M&M, which is for a target of 3830, stop loss of 3740. This stock has been sideways, where 3780 was the upper end of the trading band. We have crossed that today, and we can expect an upside momentum.
Manish, there has been a lot of concern with regards to the market breadth when it comes to the broader markets. Both of your picks were Nifty names. But are there any broader market names that look good to you, or do you believe that this broader market trend of adverse market breadth is likely to continue even more, even though the mid-cap index is closer to record high levels?
Well, actually, mid-cap is one of the resilient indices that I'm working with. I still feel that this 6925, which was the high of 23rd September, has been crossed, which opens a new medium-term target of 63,000. And we have a good support at 60,500. So coming to your question, I still feel that it will be an outperformance, which is going to be purely stock-based.
Thank you, Manish, for joining in. Let's talk about Lenskart. That's in focus after the company released its first quarterly earnings print post the IPO. Numbers are looking good. Growth is up. Stock is holding up in the green. Vinny joins in with the details. Vinny?
Hi, Rima. Good morning. So, yes, in terms of Lenskart stock, managing to still hold on to gains, though off the day's highest point as of now. But yes, first quarterly numbers post its listing that's come in Q2 FY26 numbers, good numbers, 21% growth in terms of revenues. EBITDA margins have seen more than 300 basis point expansion. 19.8% is what the EBITDA margins came in versus the 16.5%. Even the profits of the company have seen a growth of 20%. But yes, the profits of the company this time were impacted by higher depreciation costs that impacted the overall number in terms of the profitability of the company. Nonetheless, 20% growth there. When you look at it in terms of the segments of what has done well, international business, that's seeing a very good growth for the company as well. 34% growth on a year-on-year basis. Margins in the international business, EBIT margins, that is at around 3.5%. Last time it was an EBIT loss, so there was nothing there. So yes, now it's an EBIT margin positive on the international business front. India business also has done well, 13% growth there. EBIT has seen a growth of 30.7%, and obviously a 10.2% EBIT margin for the India business. The H1 same-store sales growth also came in at 15.3%. India same-store level EBITDA margins were at around 33%. So good performance there, good growth there, and outlook for FY26 is also positive, and that is why the stock is holding on to those gains today.
Thank you very much for that. You can see some lines about an excise duty hike on tobacco products. This is what our colleague Timsy has picked up. So what the government has proposed is a capacity-based cess exclusively on pan masala. And the excise duty hike on tobacco products will include cigarettes, cigars, chewing tobacco like gutka. Under the proposal, the excise on cigarettes would range from 2,700 rupees per 1,000 sticks to 11,000 rupees per 1,000 sticks, depending on the size and category. And one key distinction will be how the revenue is going to be shared. So excise collections will go into the divisible pool, which means the states will receive their mandated share as per the formula which is there. But the Health and National Security cess collections do not go to the states. These proceeds will remain with the centre. So we'll try and get Tim C more on that. The stocks like Godfrey Phillips reacting. ITC has been on the flatter side, but with a bit of a negative bias. Do we have Tim C with us? Okay, we'll try and connect with her, but that's the important story that we are tracking for now. The other stock which you should have on your radar is Tejas Networks. Now, this stock is on our radar because the company received a PLI worth about 85 crore from the Department of Telecommunication. This refers to the 85% of the eligible PLI incentive for Q4. The balance amount is expected to be released consequently. And the company has been every quarter getting some PLI amount or no. In prior quarter, it did, but the quarter before that, it was about 122. In Q4, it also received some PLI incentives. But, year to date, the stock has been under massive pressure, 55%. And the key reason is BSNL's 4G rollout caused a sharp decline in the company's revenues. So Q1 sales fell 87%, Q2 revenues were down 90%. Because of this sharp decline in revenue, on account of BSNL's 4G rollout delay, the company reported losses for 3 consecutive quarters, and even the receivable situation ballooned. And that's the reason why even the borrowing amount of the company went up quite drastically. So it's okay today, up 2.5%, but year to date, you are seeing a fall of 55% on the stock.
The worst performing stock on the small cap index on a year-to-date basis is Tejas Networks. And of course, we'll keep touching base with this excise proposals on from the Parliament as well. Based on what Timsy has sent, the excise on cigarettes to vary from 2,700 rupees per 1,000 sticks to around 11,000 rupees a 1,000 sticks. The reaction in ITC has not been very significant. It has recovered from the lows of the day. Of course, that is because the stock itself, the company itself, is diversified into many other businesses apart from cigarettes, be it hotels or be it FMCG and so on. But can't say the same for Godfrey Phillips as well, because that is the one that predominantly relies on cigarettes for its top line. We'll keep touching base on this subject through the course of the day. Take a short break. Take this conversation and a lot on the markets as well forward with Nikunj Doshi from Bay Capital, who joins in on the other side. Welcome back. There is some buying interest emerging from the lower levels for the markets, at least. The Nifty is at least 20 to 30 points off the lows of the day, back at 26,260. And Nikunj Doshi from Bay Capital joins in now to talk markets and a lot more. Nikunj, good morning. Thank you for joining in. I'd like to talk not specifically to those stocks, but the new listings that have come out recently, be it Lenskart, be it Grow, be it Physicswala. The basic conversation around all of them have been how they have been valued. For a lot of them, at least for Grow, it's profitable. But for a lot of the other companies that are coming out or have come out, they are still loss-making. They have just recently turned profitable. Do they justify the kind of valuations that they are commanding? And how forward do you extrapolate that multiple, hoping that they would eventually turn profitable 3-4 years down the line?
See, again, valuation for digital first companies, I would say is a lot depends on the expectation of growth. So even though if they are making losses, but the initial cost of client acquisition is very high for these companies. And that's where they incur cost in acquiring clients, and that actually creates losses in the beginning of the businesses. But as and when the number of clients improves, there's a huge operating leverage which plays out in all these digital first companies. And I think that's what people are factoring in when they project for, say, next 3 to 5 years. And when you look at 3 to 5 years roadmap at least for these companies, and when the hyperbolic profitability growth kicks in, that is the time you expect the values to go to PE multiple levels rather than the story level. So at present, it's more of a story and less of a price earning multiple. But going forward, after 3 to 5 years, people start looking at PE, and that's where the valuation is benchmarked today.
All right, Nikunj, the big macro, data after the GDP that the markets will be taking cues from is what happens on Friday, with the RBI policy. How are you going to play the markets ahead of that, and what are your expectations?
See, I think if we look at inflation, which is a key monitorable for the RBI, it's under control. GDP growth, if you look at real GDP growth, that's good. But nominal GDP growth, I would say, because of the deflationary factor, is still, I would say, lower than expected. So I think RBI will go ahead with rate cut in this policy. And perhaps that will help growth going forward. And government, if we look at all the decisions that the government is taking, they are focusing on the growth of the economy and of the corporates because they want to encourage private capex happening in the economy. So I think we expect at least a quarter basis point rate cut in this RBI policy. And that would be positive for the market.
By the way, the rupee has hit a fresh record of 89.59 against the dollar now. This has been the year where India's underperformance versus the global markets, the range of underperformance is the widest that we've seen in more than a decade. It's also the year in which the rupee has been the worst performing currency in the Asian market. And now you are seeing, and it's a very sharp fall coming through. Just in the last 10 minutes or so, it's 89.59 on the rupee against the dollar. Nikunj, you want to come in on the currency and its performance this year, and how does it shape the way one should construct our portfolio?
See, I think currency, if you look at it, if you look at the relative basis of the basket of currencies, then I think Indian rupee had been doing very well in the past, and it was holding on very well. But I think after the US tariff, I think the RBI has decided to make it slightly looser policy on the Forex rate. And I think this, I would say, devaluation of rupee, I would say it's more of a desired kind of outcome rather than the unintended. So I think it's intended outfall. Because to help the domestic economy to look at the exports. So I would say rupee, if stays around 88 to 90 band, it is still good for the economy.
Surprising, right, Ritu? Considering that we got the strong Q2 GDP print, you would have thought that would provide some strength to the Indian currency, but that's not the way it's played out.
No, not at all. And in fact, we need to see, what's behind that kind of a slip that we're seeing now. Nikunj, finally, just also to get a sense of what triggers, positive or negative, you expect will play out for the remainder of the fiscal by FY26, with what we've heard on the trade deal front as well, how that, of course, will impact the broader macros.
See, if you look at the recent announcement of the labor code, I think that A, reduces income in the hands of the means wage earners, and B, for corporates, the cost of labor will go up. In a slightly smaller manner, but that may reduce the consumption in the immediate future. But if you look at the longer term, say 6 to 9 months kind of a view, I think it will rebound. Secondly, there's a pay commission announcement expected that will again provide a huge trigger. Then the other thing is that come CY26, we see earning upgrade cycle happening for the Indian corporates. So I think that will also provide a lot of comfort to the foreign investors, because till date we were seeing earning downgrades. Now, when the earning upgrade cycle starts happening, then the foreigners also will be keen to invest. Rupee also is at a level where perhaps foreigner will be more comfortable taking a call on INR dollar. So I think overall we are expecting CY26 to be a huge positive for the Indian equities. And I think it will start from, say, February, January itself, I mean, the result season of December.
The bulls would certainly be hoping so. But Nikunj, thank you for sparing time and joining us. By the way, the fall on the rupee now continues. 89.67 is where the record low of the rupee now stands against the US dollar. It's depreciated almost 90 paisa since the very recent against the US dollar. So the weakness in the rupee continues. We had seen a very similar move last week as well, and the rupee fell past a very critical level that the RBI had been defending for a very long time. And then we saw that one-way move towards the 89.50 mark. And after a few days of hovering around that 89.45, 89.50 mark, today we've seen yet another one-way move on the downside when it compares to the currency. A 90 paisa depreciation against the dollar since the 3rd of November. So it's almost a rupee. The currency has depreciated in almost a month now. So 89.67, the new low for the currency. And we'll get more comments on this. And this is coming right after the GDP print and right before the RBI policy. So there are, of course, a couple of other important things that need to be tracked when it comes to the currency. But the markets as of now, they have also come off the highs of the day, and so 26,250 is where the index currently stands. But Ritu, the rupee now continues to remain the key monitorable. It does look like the RBI is not willing to defend some very important levels.
Well, yes, last time we'd seen RBI move away from the markets for a little while when you saw the currency slip there. But, this is a 90 paise downfall. That's a steep fall that we're seeing on the rupee. And we have Mitul Kotecha, who's the head of Forex at Barclays, joining in. Mitul, quick reading, rupee at 89.66 to the dollar. What's gone wrong there?
Well, it looks like RBI are not at the moment
providing
defending
support.
These levels. We thought obviously there would be, or a lot of investors were looking at sort of 89.50 as a sort of a new level of resistance for dollar rupee. It hasn't been the case. Again, we would be surprised if they allow this fall to in the rupee to get out of hand and for it to slide dramatically. And I think a lot of people will now be looking at 90 as a new sort of level or new line in the sand. But clearly, this move has taken place at a time where we've just had some very decent GDP numbers in India, which should have been more positive for the currency. Capital flows or portfolio flows have been also less negative recently, and yet we're still seeing this inherent dollar demand coming through here. So it does look like RBI allowing a little bit more weakness in the currency here, but we would be surprised if they don't step in at some point soon.
But you're saying 90 is coming, Mitul? I know we're not very far away from it, just about 34 paise. But that would be the level to track. And what happens if we do get progress on the India-US trade deal?
Well, I think, look, 90 is psychologically a very important level. We've been highlighting that it's a matter of time before we break 90, although we probably wouldn't have expected it to happen so soon. But again, I think if there is a trade deal announcement, it would probably see a knee-jerk rally in the rupee. And again, at the moment, there's been a lot of anticipation, continued comments from both the US and Indian officials that a trade deal is close at hand, and yet we still haven't got anything in hand. So at this moment in time, that could be a saving grace for the rupee at this if we do see an announcement. But the question is how long any rupee rally would persist for. We think probably would be a short-term knee-jerk rally in the currency, but it would provide some relief.
But, any further narrowing of the interest rate differential given, the RBI set to announce its policy this Friday? Do you think that could put further pressure on the rupee?
Well, depending on what the RBI do, I mean, if they cut rates, then it could add a little bit more pressure. But ultimately, we think now that certainly after the strong GDP print, it seems unlikely that the RBI will cut rates at this week's meeting and probably save their ammunition as needed, even though inflation remains very, very low. There's no urgency here to ease policy. If anything, the RBI may want to inject liquidity and try and use alternative methods to try and keep liquidity ample in the system. But I think for a rate cut, yes, if they cut and it's dovish, markets would probably perceive that as more negative for the currency.
89.76 now is where the currency is. So further depreciation from the 89.67 levels that we just spoke about, Mitul. And you are mentioning that 90 is now a very important psychological level. What is the street possibly trying to price in when you see such kind of depreciations? Because such kind of moves you don't get to see very often. We saw and we've seen 2 such moves in a matter of a week.
That's right. Look, I think there's just inherent dollar demand. I think the reality is that importers have probably been holding back from buying dollars in recent weeks, and we may be seeing some of that coming through. At the same time, as forwards roll off, you also see some inherent buying of dollars. So it's probably a combination of factors. I'm not necessarily sure that this is suddenly the market turning particularly bearish on India's fundamentals or the rupee itself. After all, the currency is extremely cheap on a valuation basis, so it's not as if there's a huge amount of benefit here from weakening the currency even further. And it's also not as if India is suffering from any sort of balance of payments issues. This is not the case. So again, I don't believe necessarily that this is a fundamentally led weakening of the currency, but it is a case where the inherent dollar demand on any dip or these sort of levels continues to come through, especially against a backdrop where the US dollar itself has been firm in recent weeks.
The 27 paise now, Mitul, that's a very steep decline seen in the Indian currency. You're saying there is absolutely no trigger day on day over the last 24 hours, which explains this fall?
Well, fundamentally, it's hard to see anything. You could argue the other thing. If there's been the fundamental news has been positive, the GDP print was strong, and if anything, that may have also dampened expectations of a rate cut. So when you talk about rate differentials, it should bode well for the rupee. So it's hard, and certainly we've not seen anything here that would trigger this from a fundamental perspective.
Let me get in Lata as well into the conversation. Lata, you want to first comment on what we're seeing right now in the currency market?
I can tell you what I'm picking up from Forex dealing rooms. Mitul, of course, has given you a version. As Mitul said, it's not anything special that's happening today, but on a daily basis, irrespective of what the macros are, the flows, the outflows of dollar are more than the inflows. I mean, it's no secret that we are seeing continually almost 4,000 crores of sales over the last 2 days. We saw a dip last week in the portfolio sales, but it picked up again by the end of the week. And therefore, there is that demand to buy dollars by people who are moving out. The Reserve Bank is the only supplier in the market sometimes because exporters still believe they can get a better deal. So much depends on what the Reserve Bank is thinking. So the dealers are now trying to outthink the RBI, basically. The explanation I got from dealers is the Reserve Bank has decided to let go in a gradual manner. And, allow the market forces to take over. They're probably also telling the market that maybe a cheaper rupee is the solution to this gradual, continual, persistent attack on the rupee. At a point, the rupee becomes attractive and stocks become attractive. So the Reserve Bank's point could also be, by indicating it is comfortable with a gradually falling rupee, that, the current account deficit gets resolved. Imports will become expensive if you're going to multiply every dollar with 90 instead of 85. Imports will fall and there will be a gradual and natural correction to the current account deficit, which obviously went up very sharply in October. So it could be, applying the balm. This is their way of applying it and doing it in a gradual manner. The other interpretation I picked up, and Mithul alluded to the rate differential, now the expectation will be that RBI won't cut, and therefore, actually, that should be pro-rupee if RBI won't cut. Yeah. But the market is veering around to that view probably, and that is why there is more FPI sales. Equity guys want the cut. So maybe that is also leading to an increased selling. But all this is guesswork. All we know is that there are foreign portfolio investors buying out dollars. There will be traders who will front run them as well. And the only supplier, or the only material supplier of dollars in the market is the Reserve Bank. And so the dollar-rupee exchange rate is where the RBI wants it to be.
Okay, so RBI letting the rupee gradually weaken, and now it appears to have stabilized around that 89.73 mark. Mithul, thank you very much for joining in with your perspective. The very sharp fall in the currency has also dragged the markets into the red. The Nifty is now below 26,200, given up all the morning gains. Remember, we hit a record high in the morning on the Nifty at 26,325, and now we've slipped close to about 150 points from the top. Get into a break. We'll come back with more. Welcome back. Let's turn our attention now to the agri, chemicals and fertilizers space. Ranjit Sirumala, Vice President Research at IIFL, tracking the sector very closely, is now joining in. Ranjit, before we get chatting about the outlook for second half for the agri sector, let's quickly recap Q2. You've titled your Q2 review note as Headwinds at Home, Tailwinds Abroad. Basically, domestic has been subdued while exports have held up well, and that is the defining theme of Q2. Can you quickly recap how the individual sub-segments have fared and what the trends were?
Right. Thank you. So if you look at the start of the year, we were expecting gradual recovery to pan out. But as the year progresses, we all are aware that what transpired during the year, the primary would have been the tariffs that were never anticipated. We started off with 15%, inched up to 20%, and there are 50% tariffs that we are seeing on the exports front. On the domestic fronts, the monsoons were a bit early this year, at least in the month of May is what we have seen. And this year what we had is almost 6 months of rains. So 1Q, we have seen a very strong pickup in the agrochemicals sales. But as we headed into September, the excessive rains did impact the consumption, and that's where we saw 2Q results waning off. While on the export front, if you see, there were pockets of outperformance. Refrigerant pack, all the companies that have an exposure to refrigerants have done very well. But at the same time, what we also see, the worst of destocking cycle is very well behind us. Most of the global agrochemical companies have started delivering the volume growth, and that is where we see the companies did benefit from that volume growth. As regards to pricing, we still see that it is continue to remain in a negative zone, and that is what would be the key trigger to watch out for. Though we have seen a bit of an uptick over the last couple of weeks or a month or so, some agrochemicals prices did inch up. But at the aggregate level, we still see that in a negative zone.
Sorry to cut you in, Ranjit. So based on what you said, does the second half, do you anticipate a rebound for these agrochemical companies? And if they do, would that be enough to offset the subdued performance in the first half?
See that if you split that into two parts, the domestic Kharif is almost 65-70% of the consumption, and that is being done with. So Rabi, even though we do expect, but that won't be suffice to kind of take care of the full year. And this is for the domestic agrochemical companies. We will have to look forward to the next year, the cropping season. As far as the exports are concerned, second half is very heavy. We do see a strong pickup in the LATAM and the North American markets, and that is where the key would be. The companies that have an exposure to the North American LATAM markets, the second half should be much better than the first half.
The real impact on stocks on account of the US tariffs?
There are quite a few. As I said, some companies were able to mitigate that and have taken a bit of a hit on the profitability. But there are also companies which have kind of a rerouting their exports. So all we know that Aarti has an higher exposure to the US markets, but their energy segments did very well in 2Q, and that's why they were able to set off that particular thing. What we also see that the dumping into India has also kind of picked up. So all these geopolitical tensions and tariffs have kind of altered the global trade flows. What we see is that there is a dumping happening from China into Brazil, dumping happening from the Chinese goods into India. And the companies that are competing with these goods will see their profitability coming under pressure. Nevertheless, what we also see, the outsourcing theme is intact. The companies that are able to kind of get a newer molecules, are able to push through or able to win new contracts have done very well and are expected to do well.
All right, Ranjit, we'll leave it at that. Thank you very much for joining in here. On that note, we're also going to wrap up this edition of Trading Hour. Thanks very much for tuning in. Stay with us. Halftime report will take all the action forward.
Stocks climb following a strong Q2 GDP print, but the rupee slips to a new low against the dollar. Auto and metals gain, while the consumer durables and realty drag.
Mahindra and Bajaj Auto post mostly in-line wholesale numbers in November. Tractor sales particularly see a strong pickup, with both Mahindra and Escorts reporting high double-digit growth.
Silver hits a record high above $57 per ounce as Chinese inventories drop, while copper stamps a new high on output cuts by smelters and mining disruption. Palladium too climbs as inventories in London are seeing a bit thin.
India springs a GDP growth surprise, with Q2 seeing an 8.2% print versus an estimate of just 7.4%, though nominal GDP growth is just 8.7%. Most economists revise their FY26 forecast, but the data sparks a debate over a rate cut. CNBC TV18 Citizen MPC votes for no cut. Hello and welcome to Halftime Report, live from the CNBC TV18 Motilal Oswal studio. I'm Ekta Patra and with me is Vinny Motiwala. Well, just look at the markets. We did hit those record highs in the early part of trade, but we haven't been able to sustain the momentum because we've seen the rupee, in fact, fall to a fresh new record low in today's trading session. 89.75 plus is where the rupee depreciated to. And now you can see a little bit of a pullback which has taken place. Remember, it is the worst performing, one of the worst performing emerging market currencies, just after the Argentinian peso as well as maybe the Turkish lira. So you can get a sense in terms of the 4 to 5% appreciation that we've seen for the rupee this year itself stacks it to be one of the worst performing currencies within the emerging market basket. But before we get to other news, just want to point out Wockhardt, which should come up for you. That stock is up around 10% at this point in time, and big news coming in for Wockhardt at this point. We do have news that one of their new drug applications, which is Xenic, which is an antibiotic which they were developing in order to treat superbugs which were not reacting to other antibiotics, has in fact been accepted by the US FDA as a new drug application. So that's a big feat for an Indian company. And as you can see, the stock is up 10%, Vinny.
Hi, absolutely. So that's what we'll be keeping an eye out on today. But the markets have come off the day's highest point. So that is what we're watching out for. But a whole host of auto numbers, also auto sales numbers for the month of November have been coming in as well. And putting the spotlight on that one, M&M's total sales for the month of November had risen by 19% on a year-on-year basis, while total exports saw a tick of around 5%. My colleague Sudarshan actually spoke to the management of the company on their performance. Listen in to a slice of that conversation.
We built 56,336 SUVs domestically. That's a growth of 22% for the month, year-on-year. And if you see year to date itself, we are at about 18% growth, volume growth, which is in line with the mid to high teens growth we projected for our SUVs portfolio as well. So I would say November was driven by 2-3 factors. Of course, one is there's continued traction coming post GST 2.2 reforms. So we see some of that continuing to play out as well. There was a little bit of pent-up demand, I would say, which got missed in October because we had some logistics challenges across the industry. So that's the other thing. And then fairly strong wedding season in North as well. So all of these 3 factors helped out in November on both the SUV front, and we have had a strong growth on the LCV, on the light commercial vehicles front as well. Going into December, I think the focus changes a little bit. We'll be focused primarily around ensuring that the dealer stock largely get consumed and be delivered to customers, because there's a wind switchover which happens between December and Jan as well. So really, that's what the entire focus is going to be on retails. But I see the momentum generally continuing overall across the portfolio, whether it's Scorpio N or XUV3 XO or any of the other models in the portfolio that we have.
So do you think that we are approaching the year end, so will the discounts increase? So normally, historically, we have seen that discounts at the end of the year do increase compared to previous few months.
Yeah, we're generally a little bit disciplined on where we put discounts, and we are very targeted. So I would think that specific variants within certain models will have some discounting going on. just to kind of ensure that the stocks get maintained and optimized at the right level. But beyond that, the reality is December is a month of folks trying to get a best deal. And so we might do something targeted basis, but really something which will be well within what we normally do in December, because the secular trend on growth continues to be strong.
Great. So on the EV front, so you had 2 EVs till now. Now that you are coming with another one, mainly XEV9S, I'll talk about, not the Formula Edition. And the launch is happening in the month of, not launch, so bookings will start and deliveries in January of 2026. So right now, if I'm correct, the range, that monthly range is in the range of 4,000 to 5,000 units. So what exactly, if I say including XEV9S, what will be the monthly run rate that you are looking at?
Yeah, it's very early days, to be honest. So far, the traction has been very positive from our media friends who have reviewed the vehicle. But our expectation is that we should get good traction on 9S. And so, like I said, I won't be able to talk about demand, but what we are doing on the production side is we are operationalized about 5,000 monthly capacity between the 2 models we have, which is 9E and the E6. With the 3rd model coming in, we're increasing that operational capacity from 5,000 to 8,000, which will kick in the late part of March, early part of April next year. So in some ways, if you look at it, that could be a proxy you can think about. But between the 3 models, our expectation is that we will be using about 80-85% of that 8,000 capacity.
Okay, so one thing just I want to ask, because see, SUV has been in the focus now for the last few years. And now everyone, including you, has been going very aggressive on EV front. So customer-wise now, suppose that few customers earlier were looking for SUVs of yours, Thar, Bolero and etc. Now, do you think the same kind of customers are going towards EVs, or for EVs just it's a completely new set of customers?
Yeah, we've seen both of that play out. You're right. The initial traction that we had on the EVs, especially BE6 and XEV9E, was primarily from a customer who traditionally doesn't buy Mahindra. Almost 80% of the customers who came for these 2 models were non-Mahindra buyers. And so in some ways, it opened a whole new category for us. But having said that, I think the feedback we've gotten over the last few quarters is folks are looking for a vehicle which has the authentic SUV stance, has the kind of road presence of an authentic SUV. And with 9S, we are bringing in a product which caters to that audience, which, if I may call it, that would be the loyalists, if I may put them, label them that way. So my sense is between these 3 models, you'll start to see that core part of the market come into play. But at the same time, the previous 2 models, which are very design-driven, very, very forward-looking, those start to attract a different segment of customers for us.
Great. So this time, for this month, what I have seen in the Vahan registration data, one segment that has been it has surprised positively is the commercial vehicle segment. And I can see that even your less than 2 tons, whether the growth is kind of 5%, but between 2 to 3.5 tons, you have seen a growth of 20%. So if you can talk about some of the factors that are aiding growth in commercial vehicle. And another question regarding 3-wheelers. So you have given 8,568 units. How much of this would be coming from electric side?
Yeah, so I'll comment largely on the light commercial vehicles. 3-wheelers is a separate division. I might make a point or two, but I think the good news across the commercial segment has been that the GST 2.0 has triggered the next wave of growth for us, right? For the industry as well as for us. Really, that segment, if you look at it, is incumbent on TCO numbers, right? Total cost of ownership and your viability of your vehicle operations is critical for that. And with the GST cut, you basically made the TCO much more attractive. And it's a segment over the last couple of years, if you think about it, has not grown as much. It's been fairly muted. But the replacement cycle, which was impending, that got triggered by the GST 2.0. And most of that we are starting to see in the 2 to 3.5 ton category. Less than 2 ton is a little bit muted, but it's also because I think the industry trend is moved closer to the 2 to 3.5 ton category as well. So some of the industry movement is happening there. That's getting reflected in the growth numbers that you talked about. But in general, we're delighted to see that the replacement cycles have started to kick in for the industry, and we're able to take large benefit out of that as well.
So do you agree that new cycle for CV has begun, or like we are into this new cycle? Because some of the brokerages have written about this, that we are into a new cycle and it might go on for another almost 2 years. Do you agree with that?
Yeah, so the commercial segment generally works in replacement cycles. Somebody buys the vehicle, uses it for about 4 to 5 years, and then after that they put it on the second-hand market, take the money which comes out of it, and put it as down payment for 1 or 2 vehicles, right? So that generally is the replacement cycle which happens. That cycle of 4 to 5 years should have happened about 6 to 12 months ago. It didn't happen primarily because the TCO equation wasn't great. But once the GST towed auto came in, I think the TCO became attractive. And therefore, we also believe that the replacement cycle is starting to kick in at this point in time, which should have happened a little bit earlier. But I'm glad that it's happening right now.
Okay, that's the management of M&M, but we need to take a short break at this point in time. We'll get you more on the markets, a lot of stocks in focus, and the finance minister, in fact, has tabled the Health Say National Security Bill in the Parliament as well. So that is something that we will also be touching on. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. Like you can see at the bottom of screens, FM has tabled the Central Excise Bill 2025 in the Parliament, as well as the Health Security, National Security Bill in 2025. Obviously, what this will be doing is that with this, the government is proposing to hike excise on tobacco products, including cigarettes. Now, to discuss more on this, we have Vivek Johri, former CBIC chief, to talk to us about this and what this means as well, and what more should we be keeping an eye out on. Good afternoon, sir. Thank you so much for joining us on the show. As of now, these two bills have come in, the Central Excise Bill 2025, as well as the Health Security, National Security Cess Bill. So what should we be keeping an eye out on in terms of this? And now, after this comes into play, how do we see this merging with this whole GST ecosystem?
Yeah, thank you and good afternoon to your viewers. So if you recall, when GST 2.0 was introduced and the rates were recalibrated, the 28% rate, which was applicable to a large number of demerit goods, and which was effectively the demerit rate, was also done away with. And instead, a 40% rate was introduced. The only exception that was made on 22nd September 2025 to this rate change was that for tobacco and tobacco products and cigarettes, etc., the kicking in of the new rates was kept on hold. The reason, if you recall, was that compensation cess, the tenure of the compensation cess was initially to end in 2022. But because loans had been taken by the central government during, COVID times, when GST revenues were not doing that well and states needed to be compensated, and those loans had to be repaid, the GST Council had decided to extend the tenure of the compensation cess till 2026. The reason being that whatever revenues were raised by way of the compensation cess, they were being used to repay the loans that were taken during the COVID period. Now, that tenure, the loan is likely to be repaid anytime now. And that is when that is why the GST Council had authorized the finance minister to take a decision on when to discontinue the old rates for tobacco and tobacco products, and to allow the new rates to come in.
Sure.
I think this is a preparation for that, and the sole purpose of at least the Central Excise Amendment Bill appears to be to compensate the rates. I mean, to readjust the rates in such a way that the incidence of tax on these products does not actually go down, and it is maintained at the current rate. So if the 28% rate has been done away and it's been replaced by a 40% rate, let's say on cigarettes, then what happens is that there used to be a compensation cess, which was a mixed rate of specific and ad valorem. There was a basic excise duty, and of course there was a national calamity contingent duty also, which was like a duty of excise. Now, these are all going to be replaced by a GST rate of 40%.
Okay.
And a basic excise duty, which will sort of more or less bring the incidence of tax to the same level as what is prevalent today.
Okay.
The date on which these new rates will come into effect is to be notified, but before that, the bill has to be enacted. And this is the first step which the finance minister has taken by introducing the bill in Parliament.
Okay. So, Mr. Johri, just what exactly would be the impact to the end user? It's supposed to be neutral, net neutral to the end user when it comes to the cess on tobacco?
Look, I've had a look at it very briefly because the bill has just been tabled. So I've had a look at the schedule, for example, for cigarettes, and there is some increase in the rates that have now been prescribed. But remember, these are schedule rates. So these are rates that will appear in law. Whether these will be the effective rates, we have to wait and watch. If the objective is just to maintain the incidence where it is today, then the government could always issue a notification and notify the effective rates below what has been prescribed now in the Act. But there is, I find, a marginal increase in the rates, at least for cigarettes.
Yeah.
In the case of pan masala, a new cess has been introduced. Like you mentioned, for that purpose, the health security, say national security says Bill 2025 has been introduced today. That is a new levy, and that is machine-based. It's going to apply to all manufacturers of, pan masala. It will be based on some 2 or 3 parameters like the speed of the machine, the size of the pouches, and then a fixed amount has been prescribed, depending on how these parameters, different combinations of these parameters. And so that is a new levy which will be used by the center for, taking care of public health and national security.
Mr. Johri, I just wanted one clarification from the company's standpoint, where the manufacturers would be involved, where the cess is expected to be on the production capacity and not on the sale. So would it be on the production, on the utilization of the manufacturing capacity that you have? Say, for example, it's 80% of the 100% that you've used, or is it going to be on the entire production capacity that you have, irrespective of how much you're utilizing?
It's a normative levy, so it's going to be on the production capacity, not on the actual production. Okay. The only, I've quickly been through the bill, and the only, caveat I would like to put in is that if a few machines or a machine is not used at least for a period of 15 days or more, then there's a provision to give an abatement, for that particular period. But otherwise, the rates that have been prescribed are dependent purely on the size of the pouch, what is the weight of the pouch, what is the speed of the machine. These are the 2 major parameters on the basis of which. So it's actually a capacity-based levy, not on the actual production or sale of, pan masala.
Okay. Just a quick one. So the revenue in terms for the central and state government with these excise duty hike will remain same, or do you think there is a possibility of an increase given that excise duty hike number that has come in for the cigarette side, at least it's a bit higher like you were mentioning?
So, look, please do remember that excise is also a duty that goes into the shareable pool. So it's, as per the devolution formula prescribed by the Finance Commission, excise duty revenues are shared between the center and the states. And GST, of course, gets split, between the center and the states. It's only the cess on pan masala, which is going to be used by the union, which is the center. And but the other, 2 taxes will continue to be shared as they're being now. So yeah, I don't think it will adversely impact the revenues of the state governments, if that is what your question is.
All right, Mr. Johri, we've run out of time, but not out of questions. So I'm sure we're going to revisit it as more details come out, considering that this has now been tabled in the Parliament. We need to take a break, but on the other side, we're going to go full tilt on the markets. It's just about consolidating. But what are the stocks that you need to focus on at this point in time? We have Aditya Agarwal, who will be joining in next. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is down around 20 points. 26,183 is what the Nifty is trading at, almost near the day's lowest point. But which are the stocks that are moving around in today's trading session? We have Vivek, who's joining us to take us through that roundup. Vivek, over to you.
Well, when you're looking at the markets, especially the market breadth has deteriorated quite a bit, especially in the last half hour or so, especially since you did see the rupee weakness that came about. Now, in terms of individual stocks, the ones that we're tracking is, first up, have a look at KFin Technology. There's a Kotak, institutional equity report that's upgraded the stock high by over 4%. Tamil Nadu Mercantile Bank, this particular stock, one of the top gainer as far as the NSE 500 index is concerned, almost 6% higher. IEX, we discussed so much about this particular name on Friday on the back of the Aptel hearing that happened. Today, the stock was high by almost 5%. But remember, it's status quo as far as IEX, the future of IEX is concerned, at least at the current moment. The other stock on our radar, Tejas Networks, the first tranche of the PLI has been received from the Department of Telecommunication. On the back of that, stock seeing a bit of a relief rally, 4% higher. On the other hand, a lot of EMS stocks under quite a bit of pressure, especially Keynes Technologies. Remember, the company actually held an analyst meet in the week gone by as faced concerns in terms of working capital pressures. But despite that, stock lower, and even Amber Enterprises giving it company on the way down. Whirlpool, remember last week we saw almost 11% block deal take place. There has been a press release, that has been issued saying that further stake sale is being considered, and the stock low by over 6.5%. Excise duty, as far as tobacco is concerned, is being mild. A lot of news flow regarding that. All of these stocks will remain in focus as we wait for the finer details to come about. And lastly, have a look at one of the fertilizer names, Coromandel International, the top laggard as far as the small cap index is concerned, has recovered a little bit, but still low by over 1% today.
Okay, all right, Vivek. Thanks very much for that. Well, we do have Aditya Agarwal, Head of Research and Investments at Invest4Edu, joining in to discuss the technicals of the market now. Aditya, hi, welcome to the show. Well, it's definitely a market where we're just about consolidating, though we've hit those record highs. Just wanted your sense in terms of how the rupee weakness, the depreciation that we've seen, the sudden sharp fall that we saw in today's trading session, did that change the way you probably allocated your money today or the calls that you made?
Afternoon, Ekta. Thanks for having the show. Absolutely. In fact, if you take a look at historically, whenever we see a sharp depreciation in the rupee, that has a rub-off effect, at least for some time on the Indian markets as well. For a few weeks to maybe a month, markets also tend to become a little volatile and a little corrective in nature. And that is something that we're witnessing from the morning trade today as well. After that gap up open in the markets, we've given up the gains from the top, and plus that also happens to be a minor trend line hurdle somewhere around 26,300 above those zones. But if you club it with the rupee and the Indian markets, if you plot both the charts on one frame, you will usually see whenever rupee sees a sharp depreciation, Indian markets also sees some kind of a profit taking, at least for short term in the immediate phenomena. And heading into the December month, that is likely to continue as well. My sense is market will remain a little choppy and volatile for the rest part of the December as we start off the December series. So one needs to be a little nimble-footed and position your portfolio accordingly so that if there is a spike in the volatility, you can realign your portfolios accordingly.
Okay, Aditya, and a quick word in terms of the stocks. If you could just give us a quick take there.
So morning, good afternoon, Vinny. So there are a couple of stocks that I do like from a trading perspective. The first one is Varun Beverages. This is one stock which has actually corrected significantly, and now it's formed a decent base, and from there it's showing some signs of a recovery. So at current levels, I think the risk to reward is in favor of going long for Varun Beverages. At current levels, I'll be a buyer for a target of 520 on the upside, place a stop loss at 470 on the downside. The second stock is the Bank of Baroda. Surprisingly, the PSU banks continue to show strength, and Bank of Baroda is one stock which has been going strength to strength, and today we witnessed a fresh breakout from a consolidation. So Bank of Baroda is also on a buying radar for a target of 320 on the upside and a stop loss at 283 on the downside.
Okay, thank you so much for that, Aditya. But on that note, we're actually going to zip into a very short break. And on the other side, Manisha Gupta will take us through a conversation with Sanjay Sacheti, country of Olam Agro. Stay tuned in for that conversation.
Welcome back, and joining us on the show now is Sanjay Sacheti. He's country head India region at Olam Agro. Mr. Sacheti, hi, thank you so much for joining in. First of all, the big number that we continue to see on the crop, if you look at the government estimates for Kharif, have been much on the higher side. Rabi sowing is higher than last year as well. We are looking at a record rice numbers. Wheat is much higher as compared to last year as well. My first question to you is, how are you looking at overall production within India, acreage versus yields here?
So, Manisha, I think it has been a problem of plenty, which we are staring at. We have had very good precipitation. Reservoir levels have been pretty good. So, Kharif as well as Rabi both are looking very good. Kharif, though, we had some sporadic, crop losses because of, because of a spatial distribution of rainfall. But if you look at Rabi, I think the kind of reservoir levels which we are experiencing right now, they are wonderful. They augur very well for the forthcoming Rabi crop. And we expect all the Rabi crops to be to fare very well. Obviously, this would lead to surpluses in almost all the commodities. And we'll have to figure out how do we manage that part, because the global markets are also bearish, and they are not looking for the extra grain of any commodity from India really in a big way.
Oh, absolutely. The other thing really is about higher production and the prices trading at or below MSP, and then we are importing cheaper imports as well, and the MSPs continue to increase every year. Would you say that there is some stronger structural policy change that needs to be done?
Well, agriculture is a very complex subject, and I'm just working on some recommendations for certain parts of the government right now on behalf of one of the chambers of commerce. And when we have looked at it, I think it requires a very comprehensive action plan. To give due credit to the government, I think the policy has been agile. Of course, but given the volatility which is there in the climate factors, in the global markets, as well as in the local markets, the government has a tough time, and they have to really navigate through multiple policy changes. Obviously, people can always say that policies are not consistent, but the environment itself is such that they really can't do much about it. They have to respond. So that brings us back to what needs to fundamentally change. And I think it is about making agriculture at the farm level as strong as possible. How do you make farmers stronger, either through collectivization or through last mile delivery of advisory services, or through market linkages? And not to forget, how do you introduce frontier technologies at the farm level? So there are multiple issues which need to be taken care of. But in the immediate short term, what we need to do is to give farmers as much support as possible. Public procurement has to keep pace. Obviously, the crop diversification is something which we have to look at. So while I am a proponent of public procurement to give support in the short term or early medium term, but how do we engineer a crop diversification beyond rice and wheat? Not so much wheat, but primarily rice is something which we need to think about.
Oh, absolutely. The other thing really is about the global trades, Mr. Sacheti, because even as we've seen tariffs and those concerns continue to be in the market, the geopolitics continues in its own way as well. But even with that, would you say that the global producing nations have done a good job in sense of stronger numbers when it comes to farm there? And that's exactly the reason we haven't seen food inflation, not just in India, but in other parts of the world as well. But do you see that continuing in 2026?
Well, the 25 has been very volatile from a government policy point of view. And I would say while there has been good availability and there are global surpluses, but the destabilization of the global trade and the uncertainty surrounding it has led to broken supply chains. And, most nations have been forced to reorient how they do, how they procure for their requirements. So this has led to some kind of impact on the prices. And I would say that a part of the food inflation is also on account of this uncertainty. going forward, given how US and China, the two large nations, have started, coming down in terms of aggressive measures which they had taken earlier, I think things should settle down as we move into 2026, and food inflation should start coming down in most countries. In India, we have already seen this coming down, and that's a confluence of various factors. Globally, locally, we have had good monsoon and good crops, and globally, our major commodities which we are importing, pulses and oilseeds, largely pulses, have seen deflationary trends. Globally, I think as these tariff measures get rationalized, the way US and China have done in the last 3-4 weeks, I would expect that food inflation would definitely get diluted as we move along.
Okay, food inflation will get diluted as we move forward as well. Thank you so much, sir, for joining us, as well as thank you so much, Manisha, for taking us through that conversation as well. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll focus on walk hard, which is buzzing in trade. So stay tuned for that conversation.
Welcome back. Well, we have Wockhardt, which is up around 11 odd %. This is after they've received not the US FDA nod as yet, the new drug application for their new chemical entity, Zenix, which is basically an antibiotic which they have in their portfolio. But it's a big deal because it's the first Indian company which has reached so far with a new chemical entity. We do have Vishal Manchanda joining in to discuss this. Vishal, hi, welcome to the show. So just give us a sense in terms of the market size for Zenix if potentially it does see the light of day with Wockhardt.
Yeah, hi, good afternoon, Ekta. I think this is positioned in a market for patients who are kind of tough to treat, anti-infective patients infected by gram-negative bacteria. So my sense is if I look at all the drugs put together that go for this condition, it's about $1.5 billion currently, and the market is growing.
Okay, so you're saying the market size for this particular drug is around $1.5 billion in the US?
No, globally, and this market is growing every year.
So growing to what potentially?
So some of the new launches are growing quite fast. So some of the new launches, one of the new launches that is doing very well is cefiderocol from Shionogi. I think that's doing about $250 to $300 million and growing double digits.
Okay. So you're expecting maybe this Zenix could grow in double digits?
So I think once launched, potentially this is a best-in-class treatment is how I look at it from the data. So probably the best, kind of an antibiotic that would work in even most tough-to-treat patients. So the best antibiotic, I don't know how extensively doctors would use it because since it is the most potent one, they would want to reserve it for the most sick patients.
Okay.
However, Wockhardt can price it appropriately.
But Wockhardt will then be a patent holder for this drug in the US if it does, see the light of day, right?
Yes.
Yes. So
Wockhardt
based on that, what do you think Wockhardt could eventually make in a drug like this in the US in particular, because that's the most lucrative market?
So I think since I have this view, doctors would kind of want to use it for the most sick patients. But roughly, if I just kind of assign a 30% share in the existing $1.5 billion space, this can very well be a $500 million product or maybe larger, depending on what share it takes in the pie and how the market grows going forward. Because emerging markets is something where excess is currently less, and if they can expand excess there is an opportunity.
So it could be a $500 million market for Wockhardt globally?
Yeah, a peak sales opportunity is how I would look at things currently based on existing market size.
Okay. I just had a quick question about, the approval status. What, according to you, do you think that this has potential? Because one is that they've said that it's on fast track with the US FDA, and two, they've said that it's already been used on a couple of patients, which is on a compassionate basis in India as well as the US. In fact, data has said that they've used it on over 50 patients in the past year and a half, and that includes patients in the US. So do you think that the potential is already there, which the market is factoring in, that it's probably going to get final approval?
So my sense is approval is most likely a very high probability. And the data was very strong, like the phase 3 data was very impressive. So I think approval is very likely. A very high probability is how I would put it, maybe a 95% probability.
Oh, okay. All right, Vishal. Well, thanks very much for joining in and speaking with us. So that is Vishal Manchanda talking about Wockhardt up around 13% for that stock. We'll take a short break, but we'll get you more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV18, and look at where the Nifty is trading at right now. Still near the day's lowest point as we see it, 26,176, down almost 33 points in today's trading session. Broader end of the market too has seen the fall coming in from the day's highest point, and especially in a day where we saw it starting at those record high levels and then come off. So significantly underperformers coming in from the private bank side, but they look at HDFC Bank or Axis Bank, they were among the top tracks today for the Nifty 50. So bank is also down. What's doing well today is the IT pack, right? Look at HCL Tech, that's managing to hold on to that green side over there. And overall, Nifty IT holds on to gain, auto is holding on to gain, and metals, given the silver and copper prices, are also on the higher end. So Nifty metals among the top sectoral gainer. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, Business Lunch.
The stock slide after the rupee sinks to a new low. The rupee against the US dollar. Auto and metal stocks gain, while consumer durables and realty are the big drags.
Mahindra & Mahindra and Bajaj Auto post mostly inline wholesale numbers in November. Tractor sales particularly see a strong pickup, with both Mahindra and Escorts reporting high double-digit growth.
Wockhardt has received an approval from the US FDA for its novel antibiotic Zynic, making it the first by an Indian company to get a nod in the US for a new chemical entity. This follows the launch of its science-driven program in 2011. The stock is up 17%.
India springs a GDP growth surprise with Q2 seeing an 8.2% print versus an estimate of just 7.4%, though nominal GDP growth is just 8.7%. Most economists revise up their FY26 forecast, but the data sparks a debate over a rate cut. CNBC TV18 Citizen MPC votes for no cut.
And India's Commerce Secretary says a framework India-US trade deal should be completed by the end of this year to address reciprocal tariffs. The bilateral trade agreement, he adds, will take more time to conclude. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormas Fatakia, and from the India Business Hour to Lunch Hour, we are being joined by Arundhati Ramanan.
Absolutely. Hi, Hormaz. Absolutely. It's very exciting to be in this band and covering the markets now. But you know, what a day it's been for the markets, right? Hitting all-time highs, then in the red. Tell us more.
It's been choppy, to say the least. At least is what the GIFT Nifty was indicating. We would start off gap up, and we did start off gap up. We made a new intraday high above that 26,320 mark, but then ever since the rupee started to depreciate, we've come off the highs. There are a lot of triggers to track this week. There are auto sales that are coming in thick and fast. The RBI policy comes in, and there is a lot from the globe that you need to monitor as well. So it will not come as a surprise that we still remain in this very narrow range until we get into the policy decision on Friday, and then we take the action forward from
Absolutely. And like you pointed out, right, one of the things that was making the market extremely jittery today was that big fall in the rupee. It touched 89.76 on the lower end. You know, if we take a look even at the Midcap index right now, it's absolutely flat, coming off the highs from the day. But, you know, there were some standout stocks. If you see, Wockhardt is up 16% after regulatory boost. There's JM Financial that's up 8%. IEX, which is up about 5%. The Auto Pack also doing well, and the IT index also doing well over there. But first up on the show, the rupee touched a fresh all-time low of 89.79 per dollar, which made the Indian currency 34 paise cheaper over its overnight close. Dealers blamed lesser supply of dollars from the RBI for the rupee fall. Lata Venkatesh is here with what she is picking up from the market. Lata, a big fall there on the rupee.
Well, the dealers at least tell us they don't have any fresh reasons. Probably it's yet again foreign portfolio investors pulling out, selling equities and taking dollars out of the country. It is possible that there is a slightly higher demand because the very strong GDP number indicates hints that probably there is no rate cut from the Reserve Bank. So further incentive to buy Indian stocks may not be there, and that's maybe making people go, or people are just taking position. Then maybe the Reserve Bank will not cut, and therefore, people will pull out later. So, speculation is, people are just trying to outguess one another. Nobody is speaking of a very large FPI demand. It seems to be the usual demand, but it seems like the Reserve Bank has let go. Usually the Reserve Bank keeps supplying dollars, but once in a way it lets go, and there are various theories on why it is allowing, the rupee closed at 89.45 on Friday. It let go the 89.50 mark, which was a surprise. Everyone thought 50 was a line in the sand. Maybe because, once the rupee becomes cheaper, then the current account deficit will automatically correct, because every imported item, the dollar is being multiplied by 90 instead of 85. So you will not import. That would be a natural market-determined way of checking trade deficit. There is another explanation that, when people are moving out, why should they move out multiplying it by 89? Let them get only 88 when they pull the dollar out. So the Reserve Bank is allowing the rupee to fall. There are all these kinds of explanations that are trying to reason why the Reserve Bank did not support as much as it was expected to support, why it did not support up to 89.50. The other explanation was also, again, more a running commentary on the market. There is something called a fixing. That is, month-ago contracts get rolled over. There is a particular time by which it gets rolled over. The explanation is that the Reserve Bank did not roll over all its sell contracts, and that also caught some people, on the wrong side, and they had to cover in a hurry. all told, the Reserve Bank is always of the view that we don't cut, we don't have a level of the rupee, we only control volatility. So you shouldn't be surprised with these one-off moves, which is more to trap speculators.
89.76, the intraday low. But Lata, also stay on and tell us if the strong GDP data is having an impact on the market expectations from the RBI on Friday.
Well, it did have an impact. The GDP number did have an impact on the bond markets on Friday itself. Remember, the bond market trade still 5 and the GDP number came in at 4. We saw yields rising by about 4 to 5 basis points across the curve. And today, again, the yields are up by another 1 or 2 basis points. I mean, the overall reaction has been more than 5 basis points. The fear in the market is that the Reserve Bank may want to keep the powder dry for a rainy day. What if there is a debacle in global markets and you want to help? After all, the fiscal window is also shutting. The government is in a mood to keep fiscal deficit low. So maybe the Monetary Authority should keep some ammo dry, is one view that the Reserve Bank may not cut. As well, when we asked our Citizens Monetary Policy Committee, that committee surprisingly voted 3-2 for a status quo. They said they do not expect or do not want the Reserve Bank to cut simply because, again, for the same reason, that growth doesn't seem to need. After all, the governor has said that we have low inflation has given us space to cut. But maybe he will say there is space to cut, but there is no need to support growth at this juncture. So the market is quite clearly, more fence-sitters have jumped to the side of a possible status quo, no cut, and that's pushed yields up.
So we'll have to wait and see what happens on Friday from the RBI. Thank you, Lata, for taking us through both those key triggers for the market. But moving on, Sriram Krishnan, the Chief Business Development Officer at NSE, joined us earlier today and discussed the exchange's potential listing and also gave us updates on how the market share dynamics were panning out. Take a look.
As far as NSE's IPO is concerned, that's dependent upon the regulatory clearances, and it will happen when it has to happen. See, the industry regulator has to approve first, and then SEBI has to approve. In our case, SEBI is both the industry regulator and the capital markets regulator. So that's what we are waiting for. As far as equity options are concerned, if you look at August 2025, our market share was 76.9%. And I'm picking August 2025 because effective September 1st, 2025, we changed our expiry day for index options from Thursday to Tuesday. But if you see since then, if you look at November 2025, for example, our market share in equity options has gone up about 10% to 87%. So I think the market participants have accepted well to the change of expiry day from Thursday to Tuesday. And Tuesday seems to be working well for us. Many brokers have, in fact, gone and represented to SEBI requesting that Bank Nifty be allowed on Thursday because that used to be the biggest product in the whole world within the umbrella of equity derivative contracts. And I think the market participants have been missing Bank Nifty for a while now. And, as an additional weekly expiry, if that's permitted, let's say on Thursdays, I think that will really help the market. And, hopefully, SEBI can permit one more weekly expiry per exchange.
Well, the first major trigger of the day that we were talking about all through the morning were the auto sales numbers for the month of November. And the numbers have been trickling in thick and fast. Sudarshan is here with the highlights of the numbers that have been reported so far. Sudarshan.
So the numbers have come so far have been largely in line or slightly beat to our expectations. Commercial vehicle segment, as expected, has done good. Two-wheelers, TVS has been a big beat, while Bajaj Auto sales are largely in line. And the main reason for drag for Bajaj Auto is domestic sales, which have seen a decline of almost 1%. In passenger vehicle, M&M Auto has just reported the numbers, and numbers are looking healthy. And in the commercial vehicle segment, Ashok Leyland has reported sales of 29% versus our expectation of around 16 to 17%. So in the two-wheeler segment, Bajaj Auto total sales have increased by 8%. As I told you, domestic remains a drag, while exports and three-wheeler segment have seen a healthy growth. For TVS Motor, it was an all-round beat. Total sales have increased by 30% versus our expectation of around 22%, and it has recorded strong growth in all the segments. One segment, even three-wheeler, that has seen a growth of more than 100%. EV segment has seen a growth of almost 50%. Talk about Mahindra and Mahindra Auto segment has seen a growth of 19%. It continues to led by SUV segment, which has registered a growth of more than 20%. Exactly, it was 22%. And Tractor too has done better than our expectations. Total sales have increased by 32%. As I told you, commercial vehicle segment surprisingly, and also Vahan data was indicating of a healthy growth, and Ashok Leyland has reported a very healthy growth. Total sales have increased by 29%, and here also all the segments, you talk about truck, you talk about the bus, all the segments have seen a healthy growth. And I was talking to M&M management, and he did say that new cycle for commercial vehicle because of recent GST rate cut has begun, and that also will help or boost commercial vehicles. So far, so good. All the companies have reported numbers are largely in line or mostly better than expectations.
So most of them reporting numbers better than estimates, and that auto pack doing very well in trade today. Thank you, Sudarshan, for taking us through those details. On that note, it is time for us to head into a short break. More news and updates are coming up on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. Markets absolutely flat right now. The winter session of Parliament began today and the Lok Sabha has already been adjourned till 2 p.m. amid ruckus over SIR and other issues. Several key bills, including the Health Security and National Security Cess Bill, will be deliberated upon in the session now. Let's listen in to what PM Modi had to say before the session began. Take a look.
भारत की आर्थिक स्थिति नई ऊंचाइयों को प्राप्त कर रही है। विकसित भारत के लक्ष्य की ओर जाने में ये हमें नया विश्वास तो जगाती है, नई ताकत भी देती है। साथियों, ये सत्र संसद देश के लिए क्या सोच रही है, संसद देश के लिए क्या करना चाहती है, संसद देश के लिए क्या करने वाली है, इन मुद्दों पर केंद्रित होनी चाहिए। विपक्ष भी अपना दायित्व निभाएं, चर्चा में ऐसे मुद्दे उठाएं, मजबूत मुद्दे उठाएं।
Now, Finance Minister Nirmala Sitharaman tabled the Health Security and National Security Cess Bill. Timsy is now joining in to explain what this bill is all about.
Well, Finance Minister has tabled the Central Excise Amendment Bill 2025 and Health Securities and National Security Cess Bill 2025. The two bills aim to change the composition of indirect tax levies on tobacco products and pan masala. Under the Central Excise Amendment Bill first, well, Centre proposes here to realign excise duty on cigarettes, cigars and tobacco products like gutka. The excise on cigarettes to vary from 2,700 rupees per 1,000 sticks to about 11,000 rupees per 1,000 sticks, and the excise collections do get collected in the divisible pool, so states do get the share as per the Finance Commission's sharing formula of the revenues. When it comes to the changes, well, they'll kick in post the discharge of the back-to-back loans taken to compensate the states on the COVID losses on account of GST, and the new rates after these changes come into effect will be 40% of GST plus the excise duty. That's it. No more compensation cess or any other cess will be on cigarettes, cigars or these chewing tobacco products. When it comes to health and national security cess, that is proposed on pan masala only. Again, this will be levied on the production capacity and the collections will not be shared with the states over here. Centre is very clear that they will use this fund for the purpose they are collected for, that is for health and for national security. Also, government reserves the right and power to notify a hike in the rates of these two cesses anytime, whenever they feel, and also an enabling provision that gives government the right to add any other item to the list on which these two cesses can apply. As of now, it will apply only on pan masala. And again, once the back-to-back loans are cleared, the changes on the pan masala will be that there will be a GST hike from 28% to 40%, and the remaining, there will be no compensation cess. Only cesses, the two cesses, that is health and national security cess, will come into play.
Timsy, thank you for that update there, and it is a very important bill that we will keep a track of going into the Parliament session as well. But as we take a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing the CNBC TV18 all-new app where you get instant updates, breaking news and financial world articles right at your fingertips. You can download the app from the App Store or the Google Play Store, or even scan the QR code that comes up on your screen. Let's take a short break. We'll be right back on the other side. Welcome back. Now, Russian President Vladimir Putin will be on a two-day visit to India between the 4th and the 5th of December. The Ministry of External Affairs has confirmed that he will be attending the India-Russia annual summit. President Putin's visit is expected to strengthen the special and privileged strategic partnership between India and Russia. According to the Foreign Ministry, Prime Minister Modi and President Putin will hold talks during the summit, focusing on defense, energy, trade and bilateral relations.
And speaking at the 98th FICCI AGM panel discussion ahead of Putin's visit to India, Defense Secretary Rajesh Singh said that India's defense relationship with Russia remains steady. Take a look.
A lot of legacy equipment from the Russians and maintenance and support. And even there are also some orders like the S-400s where they've been delivered partly. So obviously all of that will be on the table. In terms of new announcements, I will not be able to sort of mention those, but our defense cooperation with Russia is of long standing. They've been our friends through both fair and foul weather, and we are not going to sort of stop our defense cooperation with them anytime soon.
Meanwhile, Commerce Secretary Rajesh Agarwal told CNBC TV18 that a trade deal is expected even as regular virtual talks continue between India and the US. Now, he also added that a larger trade deal is also underway. Listen in.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India.
And with that, it is a wrap on this edition of Business Lunch from Horvaz and me. Goodbye and many thanks for watching. Midcap Radar comes up next.
Good afternoon and welcome to Midcap Radar, live from the CNBC TV18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Ekta Batra. Good afternoon, Ekta. You know, what a session we are having as far as the markets are concerned. Extremely topsy-turvy. We saw a bit of green at the start, but then what essentially transpired was that post the rupee weakness that we've seen quite a bit of a sell-off, especially amongst names, amongst companies that, have dollar-denominated flow, both in terms of debt as well as income. So that's been the story of the day so far. Good afternoon.
Hi, Vivek. Yes, absolutely. The rupee hitting that 90-odd mark doesn't seem too far away now. So maybe that should come up for you. And let's see where it's at. Remember that the rupee hit 89.78 on an intraday basis. So let's see whether it will stabilize for the entire trading session. But nonetheless, these are top stories that we're tracking. Stocks slide after the rupee sinks to a new low. Autos and metals gain while consumer durables and realty drag. Mid-cap index nears the 61,000 mark.
VST Industries and Godfrey Phillips in focus. The government proposes to hike excise on tobacco products, including cigarettes. The excise on cigarettes will vary from 2,700 rupees to 11,000 rupees per 1,000 sticks.
Whirlpool of India slips another 7% today after the parent company reiterates its intention to further pare its stake in the India unit after an 11% stake sale last week to reduce debt.
Bank of Maharashtra slips from the day's high as sources tell CNBC TV18 that the government is looking to sell a 5% stake in the company at a discount of slightly over 5% to its current market price. This is primarily to meet the minimum public shareholding norms.
Wockhardt shares jumped 12% after the drug regulator US FDA has formally accepted its new drug application for Zenic. This is the first time the US FDA has accepted an NDA for a new chemical entity developed by an Indian company.
Well, those were the top stories that we are tracking at this particular hour. What we have essentially seen is that significant selling pressure across the broader end of the markets. A whole host of EMS names, whole host of wire and cable companies near the day's lowest points. Names like Polycab, KEI, all of them have cooled off significantly. Even a whole host of consumption names, names like Kotak Consumer too, are now near the day's lowest point. But these names and a whole host of other stocks is what Sudarshan has on his radar. He's standing by the wall to take us through the mid-caps that are moving around in the session.
So while market has moved lower and has erased all the gains that we had seen in the opening trade, let's take a look at some of the mid-cap names that are buzzing in the trade. So I'll start with Wockhardt, which had moved higher as much as 18%. Currently also it's up 18%. And this is on the back of US FDA accepting its application for antibiotic Zenic. Now, you'll say that why just after accepting the application, the stock has moved 18%. So basically, approval rate improves significantly once US FDA accepts the application. That's the reason you are seeing a big move in Wockhardt. TVS Motor up more than 3%. Company has reported strong sales for the month of November. All the segments have seen a healthy growth. Total sales were up 29% versus our expectation of just in the range of 21 to 22%. Three-wheeler sales have seen a growth of as much as 150%. Next one is Hindustan Zinc. On Friday also the stock was up on the back of silver moving to record high. And today also the stock is up, currently up more than 3%. Lenskart has reported a strong set of numbers. Total revenue has increased by 21%. It was primarily led by international segment where the revenue has seen a growth of more than 30%. Because of that, stock is up 7%. Bank of Maharashtra is down 2%. Sources indicate that government is looking to reduce its stake, but mainly to meet minimum public shareholding norm. That's the reason stock is down almost 2%. Some of the other mid-cap gainers, IEX, if you remember, after appellate tribunal's order or say observations on Friday, the stock had moved sharply lower. It was down 3%. Now it has regained all the losses and currently up. It's one of the top mid-cap gainers, up currently 5%. Physicswala is up with healthy volumes, up almost 10%. Paytm on Friday, there was a positive brokerage note. That day also the stock had moved higher. It was a Goldman Sachs note. And today also the stock is saying buying and up almost 3%. All the mid-cap IT names have moved higher mainly after we have seen a sharp fall in the rupee against dollar. Rupee has hit the low of almost 89.78. And after that, we are seeing buying in all the mid-cap names, IT names, and Cyient is up almost 3%. Yatra Online, since the time its management had clarified regarding a CEO change, stock has been moving just one direction, that is upward. And today also it's up 5%. Some of the mid-cap losers, Mahindra and Mahindra Finance has 63 months. It's not falling in the trade, but just they are seeing profit booking mainly after a recent up move that both these stocks had seen. It should be Mahindra and Mahindra Finance instead of M&M. recent listed company, Excelsoft, Sudev Pharma, Vikrant Engineering, all the stocks are today down in the trade. Mainly, we can say profit booking.
Okay, all right. Well, definitely a long list there, Sudarshan. Thanks very much for that. But let's talk about one of those stocks in focus, Wockhardt, which is in focus because it is up around 18% The news behind Wockhardt is that the US FDA has accepted Wockhardt's new drug application for the antibiotic Xenic. Now, the new drug application was originally filed on September 30th, 2025. Xenic has now been granted fast-track designation by the US FDA, which means that they've assigned priority to Xenic for the NDA review. And the drug has has already been used in the US and India under compassionate basis on critically ill patients. The program was initiated by Wockhardt all the way back in 2011, so it's finally taken so many years to get here. Now, the company has earlier indicated with regards to this particular Xenic antibiotic, which is under development, that the drug being manufactured will be by a third party in Europe, so hence there will be no sort of trade issues because, earlier there was fears of 100% tariff or, a tariff if in case you do not have a manufacturing presence in the US. Now, the peak revenue will be significant. They could see revenue of around 150 crores from Xenic in India. And like I mentioned, they've said that it's saved at least 51 lives in the past 1.5 years with this drug. Xenic's market size, according to the management, based on the antibiotic market in the world, could be around $9 billion globally. They could consider some partners in with regards to out-licensing when it comes to this drug. Now, what exactly are the analysts saying? The market size of Xenic, according to them, is around $1.5 billion globally. Wockhardt will be a patent holder for Xenic in the US eventually, if in case it does obviously get approval. They think Xenic can probably even be around a $500 million product for Wockhardt, and there is a 95% chance for Wockhardt to receive approval for Xenic in the US based on their phase 3 data. Now, other companies with some association with NCEs was Glenmark, which out-licensed its ISB 2001 for oncology as well as autoimmune diseases to AbbVie. And we have Orchid Pharma also, where there was a particular drug which was discovered and innovated by Orchid Pharma, but it was eventually out-licensed to Allecra Therapeutics. So all in all, I think this would be the first instance of an Indian company applying in the US and, getting approval when it comes to an NCE, or rather at least being accepted for a new drug application for it.
So post that, you've mentioned, you've broken it down very clearly for us, almost $150 billion opportunity is what you've mentioned. So clearly the street taking this positively, higher by over 18%. Well, with that, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
We're both failed entrepreneurs. So
Welcome back. Well, let's talk about the technicals of the market now. We have Somil Mehta, who's the head of alternate research capital market strategy at Mirai Asset Sharekhan, who joins in. Somil, hi, welcome to the show. Well, let's start by talking about one of the big movers today, Walcott, which is up around 18% odd. Would you be a buyer at these levels?
I think it's just around a very crucial level of 200 daily moving average. I'm pretty sure that the new uptrend has already started in the medium term outlook. And today, if it closes above 1440, which is 200 daily moving average, it's a very good sign for the stock. Long-term charts are definitely intact. I'll be looking for a very good rally from here. 1580 would be my first target in the medium-term outlook, and the next target is 1650. So these are the two targets, and on the downside, the stop loss would be a little deeper, 1380. But this looks like a new rally on the upside in the medium-term outlook.
Okay, well, Somil, and what are your view as far as markets are concerned? Do you feel most of the corrective phase is now done, and where do you see markets headed from here on?
Absolutely positive on the stock, on Nifty, on Bank Nifty, both. I do understand that there's a little bit of cautious approach at this point of time because the markets have corrected a little bit from the day's high. However, I think this is a very good buying opportunity. Very crucial supports around 26,100, and 20 daily moving average is a very key level, which is 55,900. Sorry, 25,900. So these are the two levels. My target on the upside is 26,700, 800 in the short to medium term outlook. So buy on decline should be the strategy, and 26,100 holds the key here.
Okay. All right. Thanks very much for that. Somil, for getting us that technical call. But now home and furnishings company Wakefit Innovations is set to launch its initial public offering on December 8th, comprising of a fresh issue of shares worth around 377 crores and an offer for sale of around 4.67 crore shares. Ritu caught up with the management. Listen in to a slice of that conversation.
I think when Ankit and I started about 10 years ago, we were both failed entrepreneurs. So every learning that has happened has been by following customers and what they wanted. Yeah. So if you really ask me about 2 or 3 inflection points, the first is we pioneered the 100-day trial policy for our mattresses so that customers could take it, try it in the privacy of their home, decide whether they like it or not. Yeah. The second big thing was to look at a true omni-channel experience. Yeah. So we were a purely online company, which is available on marketplaces and our D2C website. But about 3 years ago, we ventured offline in company-owned, company-operated stores. Yeah. That really gave a great experience to consumer. And our philosophy of educating them before they buy was a very big thing to be done offline. Okay. So these two were something that's very important for us.
And then what a way you've come. But, in this IPO, if you could give us some specifics. Your initial DRHP that you filed in June spoke about a 460 odd crore primary issue. That amount is now reduced as per your updated DRHP?
Yeah, the primary has reduced a tad bit because we had a pre-IPO transaction. Yeah. And we also changed some of the objects of the IPO. Okay. But it is a small reduction, barely about 30-40 crore. You will see the specifics in the document. Okay. But the overall size of the deal has increased because of the pre-IPO demand.
About the IPO, before we move on, both you and Ankit are also selling shareholders in the OFS. You're offloading about 12.8 million shares together. What kind of message is that going to send to investors? What would you want to tell them about how invested you are in the growth story?
I think more than the specifics of that, what is more important is that post the listing, we both still own a significant amount of company. I think it's closer to 35% if my memory is right. So we are here for the long haul. We have built it for the last 10, 11 years. My third venture, Ankit's second venture. For us, Wakefit has been our life's work till now. It's a very small portion given that it is a liquidity event after so long. But we want to continue doing this for a while.
Let's also talk about the proceeds because a large portion is going towards 1, your offline expansion and 2, your marketing expenses. I mean, rather than say, looking to build your digital channels or invest into the factories. So, what is the sort of thinking there? What are you trying to achieve?
Every company goes through its phases of different investments in different parts of its life cycle. So we have the Greenfield project that you see here. Yeah. It's one of the largest furniture factories in India. So during that period, a lot of the company's investments went there. Today, as it is scaling up, we need to invest in marketing. But as a company, we've always invested very frugally. In the last few years, marketing has been between 8 and 12% of the overall revenue. So we've been very frugal, make sure that the company customer acquisition cost is low, repeat is very high. And so we've never been a company that's reliant on marketing for survival. It's necessary, you do it. So even that, if you look at the amount that we have put in the IPO proceeds, it still amounts to the same 8 to 10% kind of a range. It's very, very sustainable as a company.
So, how do you project payback from the kind of investments you're making? Your losses have widened this year from the previous year to about 35 crores. What would you guide investors? I mean, while your losses have come down over the years, how soon before Waitrate is a fully profitable company?
So out of the 9 odd years that when we filed the DRHP, about 7 of them were profitable, EBITDA and PAT positive. The 2 years that we did go into losses was because of the huge investments we made into the Greenfield project. That was never existing in India itself by any company. So today we've reduced that completely. And you will see that even in the coming years, we will continue to focus on structural efficiency, ensuring that we are very, very frugal. So you'll see us, even when the full year financials come out, you will see that things are continue to improve.
Okay, let's talk about your omni-channel strategy, because you're spending a lot of energy into going offline as well. You have about 130 odd stores already. What is the plan over the next few years? What is an ideal mix for the company post RPO?
The plan is to continue to open stores, but it is always going to be calibrated. We don't take a store opening target because that is a wrong incentive to give to the retail team. You will, in your hurry, you will choose the wrong micro markets, you will choose the wrong building because you're trying to achieve a target. So what we want to do is open a steady 3 to 5 stores every month, make sure that they pay off very well, the payback period is very low, and you choose the right place, right building. So that is the target. So it's not to open a X number of stores. In terms of the mix, we are not going to be measuring ourselves on that. We are going to be measuring ourselves on the own channel revenue. Because own channel would mean our D2C website and our stores put together. Because consumers research anywhere, browse anywhere, purchase anywhere. So we cannot just say that I will not be present here or I will drive transactions to a particular channel. But what we do measure is as an integrated number of store plus D2C website, that should be large. As of the DRHP time, that number was 55%. Which means where our reliance on marketplaces is less. Post that, if you look at the full year financials, that have gotten better. I'll be able to talk about the specifics once the RHP is filed.
Of course.
But that's improved even further.
What about the revenue mix as for products? For instance, you started out with mattresses. That is more than 60% of your revenues. Then there's home furnishing and there's furniture. How will this mix evolve? I mean, what do you think are the fastest engines of growth for the company in the future?
Mattress has been our mainstay. Like you rightly said, it's about 60%, but it's still growing in double digits. But furniture, given the small base effect, is growing way faster than mattress. So mattress continues to be a strong pillar, and it's a great way to acquire customers where they had the first experience of Waitrate, trusted, have a really, really good thing to share with their family, friends, and they become advocates. And then furniture comes into their life. That's the plan. And so if we don't foresee this to be one or the other, the flywheel is running because customers come back for more products. So that's why all of them will grow, but furniture is definitely growing way faster, given that it's a smaller base.
But could you give us a sense of what the mix would look like, say, 5 years down the line? Would 5 years be 60%? Home furnishing is, I think, 11%?
You're right. Mattress today is about 60%. Maybe 5 years. 5 years is too far out. 3 years out, we think mattresses would drop down to about 55%.
Well, that is the management of IPO-bound Waitrate with our colleague. Now, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, now shifting focus, Vietnamese auto manufacturer VinFast is all set to enter India's EV market with the launch of its 7-seater limo green next year. My colleague Shivani caught up with the management on their plans going forward. Let's listen.
Next car, it will be the 7-seater limo green, and I think that is an explosion in the market. And I believe that that will give a lot of satisfactions to the customers. And because it's 7 seaters, it's family car. But more importantly, we have learned the lessons. I mean, the good lesson of the success story of selling this model in Vietnam. So we are going to launch both in Indonesia and in India.
Okay. On the point of the 7-seater, of course, India does prefer family cars a lot. Why not the VF9? Because that was one of the most anticipated cars when it came to Indian markets.
VF9 will come certainly, but our plan is that first we launch VF7 to position ourselves as a premium car maker. Then we launch VF6 for a family, and then for a limo green for extended family. And then we will see how's the response from the market. But down the line, since we are premium car maker, we would like to introduce VF8 and VF9. And even Lạc Hồng, which is the top model.
Well, that was the management of VinFast that's now entering the Indian market. But with that, we've completely run out of time on this edition of Midcap Radar, our special offering, Finding Alpha, when we return.
Hello and welcome to Finding Alpha. I'm Nigel D'Souza in the Mumbai News Center. Well, global steel markets are at crossroads. China's cutting production, but exports are staying elevated. Trump's tariffs are adding fresh uncertainty, while Indian steelmakers are seeking safeguard duties as domestic capacities do rise. We have with us today in our studio Sumangal Nevatia, the Director of Kotak Institutional Equities, who joins us to break all of this down and tell us what it means. Well, Sumangal, first of all, thanks a lot for coming down. It's been close to a decade, I think, so that we have been talking and understanding the sector, and your inputs have been very, very valuable. But today, you're going to be shedding light on a lot of these stocks that we're going to be talking about and also on the sector. But thanks a lot for coming down.
Yeah, thank you, Nigel, for having me here. So you're right. I mean, China has been a weak part and a drag on the overall commodities demand this year, right? But if you see what is holding commodities is the dollar weakness, right? Yes. So if you look at last 1 year, dollar has been lower by around 8-9%. So what a weak dollar does, it raises the cost curve. Because in the in terms of dollar, the cost curve increases because most of the producing countries are non-US.
Yes.
At the same time, it also increases commodities demand because commodities become a bit more cheaper for the non-US currencies, right? So a weak dollar has helped both in raising the cost curve in dollar terms and also boosting demand, which has held up the commodity prices this year.
Okay.
Right? Now, coming to your question on China.
Yeah.
So if you see, China set a 5% GDP growth target this year, and it is very close to achieving that, right?
Correct. But the stimulus really hasn't lived up, right?
That's right. That's right. So at the start of the year, we all were expecting a big property stimulus by China,
yes.
But that has not come. And despite that, they are close to achieving their GDP growth target.
Correct.
So what has helped is very strong exports, right? And that has been a big surprise element,
yes,
given all the noise around the US tariff war.
Yes.
Right? So if you see from a top-down perspective, what China is doing is it is on a two-speed growth trajectory.
Yes.
So you have exports and manufacturing on a strong track, and you have domestic consumption and real estate on a weak track.
Yes.
So till the time exports are strong, they are delaying the stimulus as far as property is concerned, right? So if you look at this year, exports are up 5%.
Yes.
US exports are down 20%, and they're diverting to non-US at around plus 9%.
Correct.
So this diversion is underway, and it's not just a 2025 phenomena. Now, this is happening since 2018 when Trump came in for the first time and the trade war started, right?
Yes. Yes.
So that time, if I remember correctly, US was around 20% of China's exports. Today, it is 10%. Latin America and ASEAN are the main diversion countries. That was around 18%. Today, it is almost 30%.
Yes.
Right? So till the time exports hold up, right, you will not see a property stimulus.
Got
right?
it.
In our view, next year also, with the pickup in industrial activity, exports will remain strong. China will try to delay as much as possible the next stimulus in terms of property.
Okay, all right. But this, this Chinese exports are 10 million tons odd. That's a little bit of an issue, but let's see how that goes in the time to come. All right, let's focus, since you mentioned Trump, let's focus on the United States Section 232. The tariffs out there, that's got implemented, and that's what's affecting aluminum price, players globally.
Yeah.
Particularly a company like Hindalco, which is listed here, because they get indirectly impacted or directly impacted by a Novelis. But there's some confusion. Does Novelis get hurt, or does Novelis gain? Because the Midwest premium on aluminum, that's moved up from what, $500 to more than $1,500. So what is this call with regard to Midwest premium moving up? Beneficial for Novelis, or is it hurting them?
Yeah. So see, China has put almost 50% tariffs on aluminium, right? Yeah. And it's quite irrational and impractical to continue. I mean, China is still importing, US is still importing around 80% of its aluminium requirement, right? So aluminium has become 50% more expensive in US. And this should ideally reflect fully in the local physical premium, which is the Midwest premium.
Correct.
Right? Now, earlier, Midwest used to be around $500, as you said. If you add 50%, it should be around $2,000.
Right.
But Midwest premium is still around $1,700 to $1,800. So a part of the market still hopes that this irrationality will reverse.
Yes.
There will be some exemptions or some rollback, right? Now, in the interim, what is happening is the only company which gets directly impacted is Hindalco through its Novelis business.
Yes.
So Novelis is into downstream rolling business. Ideally, aluminium prices does not impact them, right? But what is happening here is they are importing aluminium, paying 50% duty, and on the end product, they are getting only up to 45% pass-through. So there is some bit of an under-recovery, which is impacting the profitability of Novelis.
Right. It hits them negatively, that is. Right.
On the other side, scrap is also a raw material for Novelis, and scrap is exempted from Section 232. Right. So for them, raw material is becoming much more cheaper. You will hear the term scrap spreads.
Yes.
That is a net beneficiary. But combining these two, they're still losing out. Right. So our sense is, had these tariffs not been there, the margins would have been somewhere around $520, $530.
Right.
Our estimate for FY27 is somewhere around $460. So we are expecting the tariffs to continue and have a dent on the profitability.
Okay, all right. Let's delve a little bit more into aluminium itself. What's the near-term outlook for aluminium, and do you expect a deficit on the global front? Is it? I mean, what would your positioning be basically in the aluminium space?
Okay, so among all the commodities which are relevant for Indian metal equities, right, which we really care about, aluminium is the commodity with the best fundamentals, right? So on the demand side, you have structural tailwinds in terms of the entire energy transition drivers, right? So be it EV adoption, be it renewable energy build-outs, be it grid upgradation, everything is aluminium intensive, right? So they have structural growth tailwinds. On the supply side, it's not catching up, right? So China 8 years back had put a capacity cap of 45 million tons. They are still walking the talk. And now they are operating at 95% utilization. So they cannot grow beyond a point, right? Remember, last 20 years, China was the biggest culprit in impacting the aluminium cycle because they were relentlessly adding aluminium capacity. Ex-China, in the developed countries like US, Europe, and even Africa, there's a big issue of power supply contracts, right? The aluminium companies are not able to secure power contracts, and they are competing with the likes of data centers who are competing for the same power, right? So supply is not catching up. So from a medium-term perspective, you are in a structural deficit as far as the commodity is concerned, right?
On aluminium, there's going to be in a deficit for the next 2-3 years, you think so?
Yeah, I think it could be 4 to 5 years, and it depends how the supply reacts, right?
Okay. So, and then, you believe that aluminium prices will remain elevated then? Since we have a power scarcity, there's a battle for power, which is in short supply as it is globally. There's going to be a deficit on aluminium. So then you expect LME to remain at elevated levels?
Yeah, so it has to be elevated beyond the cost curve, right? The cost support is around $2,400.
Okay.
This year, we think it is slightly gone ahead because of the favorable macros which we discussed in terms of weak dollar, right? Today, the spreads are around $1,700, which were the spreads in Feb 22. And that time, if you remember, the entire Russia-Ukraine war had started, and there was massive uncertainty with respect to how will aluminium supply continue from Russia and Ukraine, right? So maybe near term, there could be some pullback or some consolidation, but the medium term story is very strong.
Okay, aluminium looking strong. Give us your, your picks then, your preference in the aluminium space. I believe, unlike most sell-side brokerages, you're not very positive on Hindalco. So what is the preference? We have 3 plays, Vedanta, Nalco, as well as Hindalco.
Yeah, so I mean, you're right. I mean, so Hindalco is one of the leaders in cost and margins, right? And we've been very positive in the past. But today, we don't see the risk reward very attractive for Hindalco. Our preferred play is Vedanta, right? So just to share some thoughts on Vedanta, their aluminium and power business is undergoing very impressive growth, right? So aluminium capacity is going up from 2.5 to 3 million tons. They are becoming much more backward integrated. So alumina refineries are coming up, coal mines and bauxite mines are coming up. So the cost will become much less volatile and settle at a lower level. Right? And this is growth over the next 2 years, not future out. Even on power side, they are going from 2.5 gigawatts capacity to 5 gigawatts by the end of this year, right? So these are the 2 businesses, which is roughly around 55% of the value, which we are really constructive on, right? Number 1. Number 2, in the last 5 years, the debt at the parent VRL was a big overhang, right? So that has got deleveraged from $10 billion to today around $4.5 billion, and now very sustainable, given the brand fee and the dividends it gets from the India entity, right? And then you have the demerger trigger, right? NCLT recently concluded the hearings. You might have an approval in the next 2 or 3 weeks. And by March, you will have 5 different entities, right? And
so there's an upside trigger then to that 550 rupees odd, if once the demerger goes through.
Yeah.
That could be the case. All right. And I think NALCO is almost at par with, your target price is almost at where the current share price is at. What about Hindalco? What don't you like? And just tell us a little bit about this capex. Going up by double in such short time. Give us a quick comparison of that.
Okay, so one is, so Hindalco over the next 2-3 years is in the peak of its capex phase, right? Yeah. So they are spending and growing across businesses, but all the growth is coming in FY29.
Yeah.
Very back-ended, right? Number one. Number two, there's been a lot of lapses in the project execution, right? So they are undergoing this major expansion in US, putting up a greenfield capacity of around 600,000 tons. When they announced it was $2.5 billion. Today it is $5 billion, right? That capacity at max will make around $600 million. So the post-tax ROCs are somewhere around 6-7%.
Yes.
Now this is lower than their WACC, right? So this project is return dilutive on our numbers. So if you compare the execution of few peers like Steel Dynamics, they have announced the project 6 months later and now completed the project 1 year in advance at around $2.6, $2.7 million.
Got it.
So versus peers, execution has been disappointing.
Yeah.
Okay. Over the next 2-3 years, it will be negative free cash flow. Growth in India is coming from 29.
Yeah.
So these things, I think, are still not priced in the valuations at around 7 times. So that is why I think we look for a better entry point in future to get constructive on the name.
Got it. So that's about aluminium. Let's focus now on the steel space. The government has withdrawn that quality control order.
Yeah.
If you could help us out, the rationale behind that, and also that provisional safeguard duty that was in place, that got expired. In fact, I had a chat with the steel secretary. I'm sure you would have had a look at that conversation.
Yeah.
Could you tell us, what are you factoring in? Do you believe the safeguard duty will come?
Okay, so first on the quality control, right? So it was a recommendation by Niti Aayog to remove all these non-tariff barriers, right? So you had quality control orders, steel import monitoring system, you had NOC.
Yeah.
So what these barriers were doing, Nigel, was creating an artificial friction and bottlenecks, right? There was a lot of requirement of finished steel, downstream steel, which was not sufficient in India, but imports had these bottlenecks in between, right? And these measures were condemned a lot of international forums as well,
okay,
right? Because few requirements like certification at the factory gate of an exporter. I mean, India did not have the infrastructure to adhere to these compliances which it put, right? So it is good for the overall economy. Now, steel prices had gone from a discount to import parity to a premium to import parity because of these artificial barriers, right?
Yes,
so it will take some bit of a softening on that front, right? And then on your question on safeguard duty, right? I mean, that's $1 million question, right?
But what are you all factoring in? It comes?
So, I mean, before I give you a final answer, right? Let's go a little bit in the background, right? It was introduced 6 months back. Now, till FY24, India used to import around 6 million tons. FY25, we imported 9 million tons. So it was a 3 million ton increase on a 150 million ton base, right? Just 2%.
Yeah.
Right? Somehow the case of measure was very weak, but steel industry somehow pulled it off, right? Last time when these barriers were imposed in 2016-17, that time the entire steel industry was bleeding.
Yeah.
Right? Balance sheets had immense leverage and the banking sector shared the pain. So that time the case of an import duty, anti-dumping duty, MIP, all these things were much stronger. This time the case was much weaker, right?
But yet they managed to pull it off.
They pulled it off, right? So we were surprised that time. I mean, currently everyone's expecting it to be notified very soon. This year, even we are building in, but we are not building in from next year, right? Okay. So in case it doesn't come, which the likelihood is increasing with each passing day, right? Yeah. And given all the discussions the country is having in terms of FTA agreements with all the countries, there is a case of it not coming through.
Okay.
Right? So we are looking at some 5-7% kind of earnings downgrade for FY26 in case it doesn't come. Today, steel prices are at 2-3% premium to import parity without the duty. there will be some softening in terms of 2 to 3%, not very significant.
So you're not sounding very, very enthused that it's likely to come out, or not very, very hopeful. But let's see whether or not it comes about. And if it doesn't come, then there could be some softening. What is the preference in this space between JSPL, JSW Steel, Tata Steel, as well as SAIL? What do you like the top pick?
So I think before we get into stocks, right, let me, if we have time, explain the framework on how we are looking at the steel sector. And from a medium-term perspective, we are very constructive on the entire space, right? Okay. So one, there is a lot of, the entry barriers are very significant, right? So steel is the most complex manufacturing process and most land-intensive and capital-intensive, right? So for a single steel plant, you're looking at 2,000 acres of land, right? That is
just to come in on that point. When was the last time? I mean, in the last 10 years, if you have a rough number on greenfield steel capacity that came on stream, how many projects came on, since you're saying it's so difficult?
Yeah, so in the last 15, 18 years, you can actually count. There's been only 3 greenfield projects in India.
Oh, okay.
You had NMDC, you had JSPL Angul, you had Tata Steel's Kalinganagar, right? So you had the likes of POSCO and ArcelorMittal trying for a decade to acquire land, eventually giving up after 5-6 years. POSCO looks like it has given up the India dream. ArcelorMittal entered India through acquisition of SR, right? And then JFE is playing the India growth through its equity in JSW.
Yes.
Right? And India is one of the only large countries which is growing at this pace.
Yeah.
So the market is consolidating in a big way, right? You have only 4 private companies who are able to add capacity. JSW, JSPL, Tata Steel, and ArcelorMittal, and they are taking all the incremental demand, right? So first is on the this. Second, you have a structurally growing demand, right? Yeah. So last 5 years, it's been 8-9%, and given where India is in terms of infrastructure and manufacturing push, it looks like this high single digit can continue, right? And the third point is that you have a very favorable policy regime, right? So you have 7.5% import duty. The government taxes exports of iron ore at 30%, right? So when China is bleeding since last 3 years of the steel industry, Indian steel industry is still making mid-cycle margins because of this.
And balance sheets are in good condition as well.
Fourth point, yes, balance sheet is in very strong condition. I mean, currently, because of 2-3 good years post-COVID, these companies have reached to a level where they don't have to lever up to grow. They can just use the operating cash flows to add capacity.
Got it.
So with these 4 things, I think there is a very strong case of re-rating, and one has to use a slightly different lens to value steel companies versus the historical commodity lens.
Got it. Got it. All right. And I think the top pick should come up for our viewers on the screen. We should just pull up a chart with regard to all the steel companies that Sumangal covers with their target price as well. I think JSPL is one of the stocks that Sumangal has liked in the past as well. That's the target price out there. And JSW Steel rather closer to that target price. So I think JSPL would be Jindal Steel and Power, now as it called, is one of the top picks out there. I'll tell you what, take a short break, come back. We'll focus a little bit on the recycling theme as well as on graphite electrodes. Don't go anywhere. Welcome back. You're tuned into Finding Alpha, and we have with us Sumangal Nevatia, Director of Kotak Institutional Equities, who's helping us with what's going to shine in the metals pack. Well, Sumangal, when we talk about metals, a lot of people remember that golden run, I think 2017 to 2019, on graphite electrode stocks. And we get a lot of queries. We've got a lot of queries as well. What about HEG? What about Graphite India? You know, the management tells us when HEG joins in, they say that that was a golden period. We're never going to see 67%, 70% margins. But what about now, between the two? We have two listed players. What's the outlook out there? And what's the call on graphite electrodes?
So, Nigel, we don't cover it. So, I will not have a view on the stocks. But let me just share some thoughts on the sector, right? Now, graphite electrode has a chronic issue with respect to competition with China, right? 10 years back, it was not there. In the last 4-5 years, Chinese electrode quality has caught up in terms of the quality, and now they are competing with the ex-China companies. So if you look at GrafTech, which is listed in US, which is the leader, and which is backward integrated with needle coke, they've been into EBITDA losses since last 2 years. Only recently, with some help from the tariffs, they are making positive EBITDA, right? So competition from China is a real thing, which a lot of industry players do not appreciate, number one. Number two, the expectation of a lot of EAF capacity coming up and then the demand getting boosted is a gradual thing, right? I mean, we don't see it happening suddenly. It will happen over the next 3 to 5 years, but nothing in the next 1.5 years, right? So this space has always seen a very strong narrative after that 2018-19 bull years, right? When they made $10,000 per ton margin, right? But I think the reality will be lacking a little bit at least. So investors have to be a little bit more patient. So that's my view.
So that's interesting because I think the Chinese quality actually is catching up with, normally we have a graphite electrode guys that say quality is a big differentiator. And maybe in the near term, they're still not out of the woods. The story could play out in the longer term. For the next 2 years, there could be some pain. Did I summarize it okay?
Yeah. Okay. And just one more point, sorry, Nigel. Last time when they did that $10,000 margin, right, versus historical average of $700-800, it was more of a timing arbitrage, right? Their needle coke, which is the raw material, was locked for 1.5 years. But graphite electrode, they could sell on spot basis at the lower prices. So that is why the margin. So we will never see those levels again.
That was a beautiful phase, and I think the managements admit as well, they may never ever see that again because the selling price went up and the raw material was secured at lower prices. But another space that you track is the recycling space. And we have Deepak, who writes to us from Jaipur. He holds around 100 shares of Gravita, 2,115. Wants to know what's the outlook on the stock. You were positive on this name. The stock has seen a fair correction, but it appears there's an industry tailwind. What's your view now?
Yeah, so we picked up this theme sometime 1.5 years back, right? So the entire regulatory regime for recycling is turning out very favorable, right? So government is quite focused on pushing the circular economy and sustainability. And if you look at metal recycling, lead recycling, almost 70% of the industry is unorganized, right? In the organized space, you have Gravita, which a 6-7% market share. Last 20 years, they've grown at 20% CAGR. And because of these policy tailwinds, battery waste management rules 2022, EPR, you will see a gradual formalization of the industry, right? So Gravita is doubling its capacity from 3.5 lakh to 7 lakh in the next 2.5 years. So over the next 5-7 years, you will keep getting that 20-25% CAGR on volumes and earnings from this company, right? They also have a very strong presence in Africa, right? Which gives them access to cheap scrap. And they have invested for last 10-15 years in developing a supply network, which is the key business moat in the recycling industry. So we have a buy rating here, and we look at the space and the company very favorably.
All right. So just to sum things up, Sumangal, from the, we'll be watching out for a Chinese stimulus. Maybe or maybe not, we get a domestic safeguard duty on steel. From the aluminium pack, Vedanta over Hindalco, at least as of now. And from the ferrous pack, you have Jindal Steel and Power, which will be your top pick. And graphite electrodes could still be in a space, a bit of a flux for the next few years. But between the two, HEG over Graphite India. Did I get that correct?
Yeah, I mean, we don't have a preference between two. But HEG is the one which is more aggressive. You'll get better growth. Graphite India is one where you'll get better balance sheet.
Correct. And as you told us, Gravita is something that you like as well. A pleasure having you in the studio, Sumangal. Thanks a lot for joining in and helping us out with all that we need to understand in the metal space itself. Well, thanks for joining in.
Thanks, Nigel.
Well, on that note, we'll wrap up on this edition of Finding Alpha. I hope it was helpful. We told you all you need to know in the metals and mining space. Thanks a lot for watching.
Lines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
Mixed opening is what we're seeing on the 1st of December. Taiwan index is trading with cuts of almost 0.3%.
8.2% in Q2 with a 7.8 in Q1 means that first half the economy has grown at 8%.
Support is a 20-day, which is, lagging behind 25,886.
Our teams are engaging virtually on a regular basis.
So the high that we hit is 26,325. So indeed at the open, for what it's worth, we did make a fresh high. So the latest all-time high, 26,325.
For a company to go public, the regulatory clearances are important. We are waiting for that.
So it does look like RBI allowing a little bit more weakness in the currency here, but we would be surprised if they don't step in at some point soon.
Our expectation is that we should get good traction on miners.
Trying to reason why the Reserve Bank did not support as much as it was expected to support.
The two bills aim to change the composition of indirect tax levies on tobacco products and pan masala.
extremely topsy-turvy. We saw a bit of green at the start, but then what essentially transpired was that post the rupee weakness that we've seen quite a bit of a sell-off, especially amongst names, amongst companies that have dollar-denominated flow, both in terms of debt as well as income.
Well, that is the day so far. Markets, of course, are absolutely unchanged. It almost feels like a repeat of what we saw on Friday, where we went home without very much by way of change. A lot of moving parts. The macro is looking good on one end, but not looking all that great if you look at the price action on the currency. So we'll talk about all of that and more here over the next 60 minutes or so. We are coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, Rima. Rima, hi. Afternoon.
Hi, particularly the domestic macro, not just the Q2 GDP print, but look at the auto sales numbers that have trickled in. For TVS Motors, the expectation was for a 22% growth. The company's delivered 30%. Ashok Leyland, in fact, the entire CV cycle seems to be picking up because Tata Motors numbers just came up. And I think the top line, the monthly sales went up by 35% for Tata Motors CV. But even Ashok Leyland, total sales 29%, estimate was for a 17% growth. Passenger vehicle numbers are strong from Tata Motors, where total sales have gone up by 26%. So the domestic macro print, not just the Q2 GDP, but the auto sales have been surging, but it's been offset by currency concerns, and that's probably kept investors a bit on the sidelines. So as we speak, it's absolutely flat on the benchmark indices trading sideways. Early in the morning, we hit fresh record highs. 26,325 is the new all-time high on the Nifty. From that level, we've slipped, up close to about 140 points. The Nifty is below 26,200, flat. The mid-caps are flat, though the small-cap index has a bit of a green going for itself. Small-cap index is up close to about 0.4%, and the Nifty Bank, too, after hitting that milestone of 60,000, has retraced more than about 300 points, so that, too, is in the red now.
No, absolutely, and I think, it's a very evenly balanced kind of screen. Advanced decline should come up on your screen, and even there, the last I checked, nothing to very little to say between up and down. 1,400 up and about 1,550 stocks, which are lower at this point in time. Just a quick look at the small and mid-cap indices before we go any further. The small-cap index is up. It's doing better than at least the large caps. And the mid-cap index as well should come up and gives you a quick sense there. So mid-cap index is unchanged, practically 61,020 or so right now. Well, here's what's coming up in the next 60 minutes or so of trade. So fresh sort of high right of the word go, and then of course for the bulk of the session, nothing at all. It's a fresh record low on the rupee on the other side. So what we've hit 89.80, beg your pardon, which I think is the lowest against the dollar, which happened earlier. We've recovered a little bit from those levels. Broader markets, as I just said, not very much going on. Real estate and pharma are taking on the chin. Autos and metals are doing a little better. Walk hard, we'll talk about it just a bit. Stocks soared after that approval from the US FDA. So that blockbuster molecule, which they were the approval was long awaited. So the stocks raced ahead, closed at about 1,500 now. So about a 250 rupee move coming in just in a couple of hours or so. So as I said, more on that. Auto stocks with Sudarshan in a bit. Some detail and fine print. Is the GST-induced momentum continuing? Looking like it is. And of course, we'll get you that silver play, silver rushing ahead, and just look at what's happening. Lots of silver ETFs are listed, and they're all up between 4-5%. Well, how should you position yourself in the last hour? That's the question. And Mitesh is with us to help us with that. Mitesh, good afternoon. Good to have you with us here. Not very much to take away from the screen. What would you do? Good afternoon.
Good afternoon, Prashant. See, I think what is important is that, we had an opening about 26,300 kind of close below it. So long, people who want to trade for the breakout, I think should still keep their powder dry. Just wait it out, I think, because as you rightly said, it's not fallen much, but it's not even a breakout. So you are in a limbo. So I think, this is the time to just be cautious and just observe the markets. On the stock side, what we've done is that, given the fact that we started higher and have tapered off, we've reduced our long positions, but it's not a view which is extremely bearish. So for the time being, I think in an overall scenario, it's still a wait and watch kind of a thing. On the stock side, I have one buy and one sell call, which is basically trade, which is evenly balanced on the stock side as well. So Policy Bazaar is a stock which I would recommend on the long side. Buy here with the stop just below levels of 1834. Look for targets of 1900. And Tata Alexa is breaking below the earlier swing lows, so that's on the negative side. A sell call. Keep a stop at 5171 for targets of around 5,000 to about 5,010.
Thank you. Let's talk about Wockhardt. That's clearly the stock of the afternoon. Stock holding up with a gain of about 18%. The news here is that there is a positive regulatory development from the US for its antibiotic drug, Xenic. Ekta is now joining in. Ekta, you can see that intraday spurt in the stock once the news came through. Why is it such an important event for Wockhardt? What's come through?
Well, yes, the news with regards to Wockhardt is that the US FDA has accepted Wockhardt's new drug application for their antibiotic Xenic, which is basically used to treat difficult infections in ICUs and hospital settings. Now, this new drug application was originally filed in September of 2025. Now, interestingly, Xenic has also been granted a fast-track designation by the US FDA, which basically means that they're going to prioritize the review. So as of now, they've just accepted the application. It still has to undergo the review process, but they've already put it under fast-track status. However, that might not change the outcome of what we can expect in terms of the review. However, the drug has already been used in India and the US on compassionate basis on critically ill patients. So this is something which, according to analysts, could possibly be an added advantage going forward for Wockhardt when they look at, when the US FDA looks at the review part of it. Now, in terms of what the company has said, that the drug will be manufactured by a third party in Europe. Peak revenues, according to them, will be significant. They could see around 150 crores in terms of revenue from Xenic in India itself. It saved around 51 lives in the past 1.5 years, as per the company. Now, the market size, according to them, in terms of, the antibiotics, the antimicrobial resistance market could be around $9 billion globally. These are earlier conversations, so that is something that we'd probably have to revisit. But they could possibly even consider out-licensing or maybe a partner when it comes to Xenic. Now, what are analysts saying? That the size could be around $1.5 billion globally for this drug. Wockhardt will be a patent holder if in case it eventually does get that approval from the US FDA. They think that it could be around a $500 million product for Wockhardt globally, and there could be an over 90% chance that they could possibly get approval from the US FDA going forward based on what they've seen in terms of the phase 3 data. So positive news for Wockhardt, but we'll really have to see what the review from the US FDA does. But the stock seems to be, factoring in a lot more.
Ekta, so they've accepted the NDA and approval is pending.
Yes. So they've just accepted it. They will review it. And if they're happy with it, if it goes through the US FDA muster, then they will get approval for it. So as of now, they've just accepted the application, which itself is a milestone for an Indian company to get so far.
No, accepted means that they've taken the application to review. That's it. That's all that means.
Yes. But to reach a level of, an NCE, a new chemical entity, which is a drug which is only produced by Wockhardt and could eventually get patented, the application to be accepted by the US FDA to review is also a positive step. But yes, eventually they will have to go through the US FDA muster to see whether or not they comply by the US FDA standards, whether or not there is any kind of complete response letter. But eventually, if they do pass that muster, then it will be a patented drug that Wockhardt will be selling in the US.
Correct. No, absolutely. But that's a massive move.
I think it's the first time in the history of an Indian pharmaceutical company that an NDA has been accepted for a review.
No, my only thing is that maybe we'll, but as Ekta pointed out, but I think they...
Do you think it's a binary event?
No, I'm just saying, no, it's not a binary event. I think this has been well anticipated, but I thought, when I first saw the move, I thought the FDA has approved it. But this is like, आपने form ले लिया है, accept कर लिया आपने form, अब देखेंगे, hopefully they'll get it. But my only thing is that when I saw it first, I thought, well, it's actually gone through. So not to take away anything from I'm just talking about the price action with which...
But as Ekta said, I think analysts are saying there is a 95% chance for Wockhardt to receive the approval after the application has been accepted. And they think it will be a $500 million product.
So that is the technicality, which is, does it acceptance mean that,
high probability,
high
seems
probability,
like.
or is it what I'm saying, which is layman's accepting a form to decide? But anyway, it's up, and it's up in a strong way as we speak. Deepan Mehta is with us of Elixir Equities. Deepan, good to have you with us here. Thanks very much. Any thoughts? Walk hard.
Yeah, I think it's a great day for Indian pharma, and a lot of investors have always been kind of disappointed with Indian companies not able to launch IP products globally. And if Wockhardt is successful, it'll be first out of this country. And 500 million is like a consistent revenue year on year. And it would be a big, big upside for Wockhardt if it is able to make it a success. So I think congratulations to the company. And certainly, I think we should be tracking this event and seeing exactly where it lands, and then perhaps look at the stock in that light. But if $500 million to $1 billion the revenue potential, then at these levels also, Wockhardt may appear to be cheap.
Do you own Wockhardt, Deepan?
No, I missed that one because of too much uncertainty around this product. But I'll tell you one more thing. It's not just this one molecule. Wockhardt perhaps has one of the best lineup of molecules which are in advanced stage of getting approval somewhere or the other, or so, whether in India or globally as well. And this is not just a one-off case. I think along with Sun Pharma and Glenmark, Wockhardt, these are only three companies where there's actually the potential for us to deliver a single molecule out of India for the first time for the global market, which will be totally, I think, IP driven and have its own patent.
Okay. So now, since you've missed the bus on Wockhardt, and there is immense potential, you're saying if it does come through, then even at the current market price, the stocks looks undervalued. So would you bet on it, or would you wait for the news to play out, or would it be too late? How should one go about thinking about investing in Wockhardt?
The option. You buy the stock, and if it doesn't happen, then the maximum loss is limited to whatever 30-40% lower it can go from here. But if actually the molecule does work out for Wockhardt, then who knows, 3x, 4x, 5x, what can actually come out. And then one could lead to another. So I don't know. I think the strategy here has to be unlike that of an option, where you assume that, at some point of time, it may become worthless. But if it does work out for you, then it can give very good returns.
Nigel's also joining in on the show. Nigel, good Finding Alpha show.
Well, excellent. I mean, a lot of good feedback coming in there with regard to Finding Alpha.
What was your big takeaway from?
The big takeaway that Sumangal, who is Sumangal Nevatia, he's been tracking the metal space for more than 15 years, I think. So, I mean, I've been here 15 years, so from Macquarie to Kotak. But the big takeaway was that he's quite very, very bullish on aluminium. Aluminium will be in a structural deficit for the next 4 years odd. Between them, he prefers Vedanta, which is surprising because most of the sell side prefers Hindalco to Vedanta. But for what's not worked for Hindalco is that fire, that capex that is spiked up as well. That's why he's betting bigger on Vedanta, because all the capital expenditure that they've done, now the fruits will come through. So that's why he likes Vedanta over Hindalco. And on ferrous space, he prefers Jindal, Steel and Power. And he's not too optimistic about getting a safeguard duty. That was another takeaway as well. So if it comes, actually, it'll be a positive. And from the recycling theme, he likes Gravita, which is corrected big time. 2,500, I think it's become 1,700. But he likes that. Deepan,
let's actually, Nigel, go across to Sud, who's now. We'll just go across to Deepan in the metal space. Sud is here. Auto sales numbers with what we've got so far. So take it away.
So sales for the month of November so far have been largely better than expectations. One segment we knew that it would do well because Vahan data was indicating a very strong demand, and that segment is commercial vehicle. Both the companies, Tata Motors commercial vehicle and Ashok Leyland, have reported numbers much better than expectations. In passenger vehicle, Maruti, Mahindra and Tata Motors passenger vehicle have reported better than expectations, but Hyundai's numbers were largely in line. In two-wheeler space, companies which have disappointed is Eicher Motors, and for Bajaj Auto it was largely in line, and the company which have done much better than expectations was TVS Motors. So I'll start with two-wheeler space. Bajaj Auto total sales have increased by 8%. Our expectation was also 8%, and the reason of drag is domestic sales. Domestic two-wheeler sales have seen a decline, while exports and three-wheeler continue to see a healthy growth. For Eicher, the segment which has not done well is models above 350cc segment, and that's seen a decline of 6%. 6%, and also exports growth have moderated this month. It just saw a growth of 6%, while the segment that is models below 350cc continues to see a healthy growth. For TVS Motor, it was an all-round beat. Total sales have increased by 29%. Our expectation was just 22%. All the segments have seen a double-digit growth. Three-wheeler has seen a growth of as much as 150%, and electric vehicle growth was almost 50%. Coming to passenger vehicle segment, Hyundai, largely in line, saw a growth of 9%. Our expectation was in the range of 6 to 7%. Maruti, it has seen a healthy growth of 29%. Now, the segment which has done well, unusually, it's the entry-level segment. Two cars, all two espresso. The growth this month in November was 66%. SUV continues to see a healthy growth. There also the growth was 22%. For Mahindra and Mahindra, continues to see a healthy growth, and it's being led by SUV segment. That saw a growth of 22%. Total growth was 19%. Tractor, as expected, has done very well. Both Mahindra and Mahindra tractor segment and Escorts Kubota have reported numbers better than expectations. In commercial vehicle segment, Ashok Leyland has seen a growth of 29%. Our expectation was 17%. Tata Motors commercial vehicle also saw a healthy growth. There also our expectation was 16%. So overall, the numbers so far, the companies have reported sales numbers are looking largely better than expectations.
Okay, all right. Let's get in. Deepan, what do you like from the space? You know, we've got some auto sales numbers that have come in. What's your preference out there? And also auto ancillaries, actually, you know, some of them are bracing for very, very good showing in Q3. So if you could give us your top picks.
And Nigel, I think TVS Motors, clearly again disclosure, we and our clients are invested in it, and great set of numbers and consistently outperforming the industry and able to maintain and increase its market share in a highly competitive sector as well. So that really is the pick when it comes to two-wheelers. Although I think Eicher Motors also the momentum is good. I think that longer term play, both these companies should do pretty well. I would prefer them over Hero MotoCorp and Bajaj Auto. And within the four-wheeler space, of course, M&M certainly, I think, takes the crown over there. The entire kind of outlook, the kind of model rollout is very impressive. And they are ahead of the curve when it comes to EVs. That is what I like the best. And valuations are still reasonable. So I would say that this is the sector to be overweight in. And specifically, I think auto ancillary also should do well. So if you want to play on a specific OEM, then go for the auto ancillary. I think the Uno Minda Corp, both of these companies are our favorites. And there's another small company called SJS Enterprises, which is into graphics for four-wheelers and two-wheelers. It's a small cap company. It's a company in which we and our clients are invested in. That's also a very interesting play on the entire auto industry, be it four-wheeler, two-wheeler, also on the appliances, and specifically on greater premiumization and focus on design for the auto industry.
Thank you very much for that. But the auto ancillary of the month is Rico Auto. It's up 3.5% today, but this month it's seen a 48% rally. Pull up Rico Auto's monthly up move. I think most of it has come through recently, but there you have it. Month to date, 47%, and that is the entire year's gains too. Thank you, Dipan, for joining in. Get into a break. On the other side, we'll invite Mihir Vora, Chief Investment Officer at Trust Mutual Fund, on the other side. Stay tuned. Welcome back. By the way, GST collections have gone up by a muted 0.7% on a year-on-year basis and come in at 1.7 lakh crore. This appears to be slightly disappointing. The November gross GST collections at 1.7 lakh crore, up just about 0.7%. So at odds, I mean, the post-festive demand perhaps is not showing up in the GST collections, though the auto numbers continue to look very good. But by the way, the big development today was rupee touching a fresh all-time low of 89.79 against the dollar, which made the Indian currency 34 paise cheaper over its compared to its overnight close. Now, dealers blame lesser supply of dollars from the RBI for the rupee fall. Lata joins in with what she's picking up from the market. Lata.
Well, the dealers at least tell us they don't have any fresh reasons. Probably it's yet again foreign portfolio investors pulling out, selling equities and taking dollars out of the country. It is possible that there is a slightly higher demand because the very strong GDP number indicates hints that probably there is no rate cut from the Reserve Bank. So further incentive to buy Indian stocks may not be there, and that's maybe making people go, or people are just taking position that maybe the Reserve Bank will not cut and therefore, people will pull out later. So, speculation is, people are just trying to outguess one another. Nobody is speaking of a very large FPI demand. It seems to be the usual demand, but it seems like the Reserve Bank has let go. Usually the Reserve Bank keeps supplying dollars, but once in a way it lets go, and there are various theories on why it is allowing, the rupee closed at 89.45 on Friday. It let go the 89.50 mark, which was a surprise. Everyone thought 50 was a line in the sand. Maybe because, once the rupee becomes cheaper, then the current account deficit will automatically correct, because every imported item, the dollar is being multiplied by 90 instead of 85. So you will not import. That would be a natural market-determined way of checking trade deficit. There is another explanation that, when people are moving out, why should they move out multiplying it by 89? Let them get only 88 when they pull the dollar out. So the Reserve Bank is allowing the rupee to fall. There are all these kinds of explanations that are trying to reason why the Reserve Bank did not support as much as it was expected to support, why it did not support up to 89.50. The other explanation was also, again, more a running commentary on the market. There is something called a fixing. That is, month ago contracts get rolled over. There is a particular time by which it gets rolled over. The explanation is that the Reserve Bank did not roll over all its sell contracts, and that also caught some people, on the wrong side, and they had to cover in a hurry. All told, the Reserve Bank is always of the view that we don't cut, we don't have a level of the rupee, we only control volatility. So you shouldn't be surprised with these one-off moves, which is more to trap speculators.
Lata, thank you very much for that. And of course, we've got a close watch on this one. Mihir Vora is with us for now, Chief Investment Officer, Trust Mutual Fund. Mihir, good to have you with us here. Thanks for joining us. This rupee dynamic, right? I mean, at the margin does influence equity direction as well. What is your sense? I mean, one way to look at it is, if you're a foreign investor, you're buying it closer to 90 is better than buying it closer to 88. But then, I mean, there is no certainty. This is it. But that's the minority and silver lining view. How would you look at this dynamic, Mihir?
Hi, Prashant. Always a pleasure. Thanks for having me. See, I think this rupee dynamic is what exactly Lata mentioned. The RBI will control volatility, but not the level of the rupee. Second thing is, we do have FII selling on a continuous basis in the equities market. So that's obviously not that great for the rupee. And third is, I think it's also the back of the mind of the RBI and the government, that we are facing stiff tariffs from the US, of course, while we hope that the trade deal will happen sooner rather than later with the US. But the exporters also probably do need some support to counter some of the tariff impact. So I think all these combinations put together, global uncertainty, FII outflows, and the tariff uncertainty is probably making the RBI to kind of let the rupee go, find its natural level, so that we have some buffer in terms of the exporters. Having said that, the government is doing its bit in terms of supporting the exporters, the MSMEs, etc. So I think it's a whole package that we are trying to give so that there is no major disruption as far as the exporters are concerned.
Mihir, you had the annual trust day on Friday, and what was did this come up in any way? Was this significant? There is some talk of liquidity being a little tight at the margin, while growth momentum is there because of GST cuts, it also means revenue collection has been hampered. You look at the tax collections of the government, April to October, it is growth of 4.5% compared to some 11% which the government had budgeted. So it's kind of both ways, right? And of course, there's a lot of supply because of welfare spending, etc. So just your thoughts. And I guess banks and financials, NBFCs will be the most impacted if liquidity remains tight. Go on.
Absolutely. So I think liquidity will not be an issue. The RBI has been doing, ad hoc or even unannounced almost OMO kind of operations in the market. So there is no way that liquidity will be allowed to remain tighter than required because we are still in the growth mindset. Let's face it, the situation or the mindset since April, May this year, or even from January, the budget where they cut tax rates for the first time for the middle class. The mindset is that we will do whatever is required to make sure growth doesn't falter. Because this currency, etc., is something that's a competitive devaluation, I would say, happening all over the world. So you have a situation where the mindset is that of money printing, and that's the reason why you see precious metals, etc., rally so hard in the last few months, because there is a money printing mindset. So I don't think beyond a point we need to worry too much about the currency. And that's the reason why, in spite of a good GDP growth print that we just saw on Friday, the consensus still seems to be on the side of 50-50, I would say, on the side of a rate cut. Normally, if you have 8% GDP growth, there's no need to cut rates. But I think people do understand that there is a deflator impact. GDP growth is not a given. There is still handholding required for business. So liquidity will continue to be provided as and when required. So I don't think we need to worry about that because globally also central banks and governments are on the fiscal, I would say, profligacy part. We are not profligate. We are just supporting to the extent required, but globally they are still on a fiscal and monetary profligacy part. So I think we should be fine as far as the currency as well as liquidity support the markets are concerned. I think the big debate is whether, because of a lack of interest in FIIs, both on equities and fixed income side, those expected benefits of inclusion in the bond index probably got pushed, by a few months. But that's fine, I think. We do have a healthy bond market in India. We do have the growth triggers required. So I think the consensus was in general, towards the side of growth rather than too much worrying about currency and inflation.
Mihir, hi. Afternoon. Exactly a year back, you all had launched the Trust Mutual Fund Small Cap when there was a lot of caution and skepticism surrounding small caps. In the index, your fund has done very well. The AUM has ballooned to more than 1,000 crore and it's delivered a return of 9-10%, outperforming the benchmark, which has been pretty much flat or maybe slightly lower. So tell us now, going ahead, about 1-2 stocks in the small cap universe that you like and why, with the appropriate disclosure.
Absolutely. So I'm sorry, I won't be able to comment on specific stocks, but the whole rationale of launching the small cap fund, even before we launched, say, a mid cap fund, the first was, of course, Flexi, and then the second fund we launched 1 year ago was the small cap fund. The whole rationale was that the canvas of the small cap universe, is very large. You have the top 100 stocks which are large cap. You have the next 150 stocks which are mid cap. So the universe of large and mid is pretty much restricted to 250 stocks. But then beyond that, there is almost another 800 to 900 stocks with a market cap of more than 2,000 crores. And that's where, in our view, a lot of the emerging segments, business models, the challengers or the untapped market potential companies come into the picture. And we found that when we are digging into the higher growth segments and sub-segments, for example, auto OEM is a normal growth segment, but auto ancillaries are a higher growth segments. Specialty chemicals, for example, is a higher growth segment. The cap goods part, where a lot of industrial capacity on the mid and large and the MSME side is happening. Machinery manufacturers, the electronic plays, etc. Those are all in the small cap segment. Some of the the new age companies also are starting as small or mid caps and then going into small caps. So we believe that to find growth at reasonable valuations is much easier, and of course you need to have a bandwidth of analysts, etc., which we do have. But once you put that bandwidth, once you kick the tires and meet companies, then there is enough number of choices out there, even in volatile markets, to make a portfolio of 50, 60 stocks, which is what we have done. So, we've really been focused on growth because our whole philosophy is growth at reasonable valuations. And the skepticism was that, growth is overpriced. But we always believe that out of 800-900 stocks, to build a portfolio should not be that difficult if we really get down to it, and that's what we've delivered. So even in volatile times when the benchmark was down for the last 12 months, our, as you mentioned, our fund has delivered good positive performance. And I can talk about some of the niche themes that we've held in the portfolio if you want.
Can you tell us about some of the niche themes that you continue to bet on?
Certainly. So our biggest, overweight typically tends to be in the physical investment space. So industrials is one big overweight that we hold in most of our portfolios, including the the small cap fund. And there we have plays in electronic manufacturing, in capital goods, in machinery manufacturing. So for example, we have companies which supply to the Apple, manufacturing ecospace in India. Then we have companies which are very fine precision machining in plastics, etc., which supply not only to local but global pharmaceutical companies, etc. So the point is that the good part about small caps is that they really don't need to depend on the GDP growth of India in the next 1 or 2 quarters. These companies have business models which are in segments which really are organically growing so fast, emerging so fast, that it doesn't matter whether Indian GDP next quarter is going to be 6% or 8%. These companies are kind of insulated from that, both even if they are exporters or if they are catering to the domestic market. For example, if you talk about auto ancillaries, so you might see auto OEM, whether it's 2-wheelers or 4-wheelers, growing at mediocre rates in some quarters. But the point is that within a vehicle, there is so much additional value engineering happening. There is so many additional features, whether it's in safety features or electronic features or the ADS anti-locking braking system, etc. More use of electronics, more use of this fancy decoratives and the LED lamps, etc. all around. So the value per vehicle is dramatically increasing, and that's where some of our niche companies in the auto end space cater to. So again, as I said, it doesn't matter if the car market grows at 5%. The value addition per car is so much, and these companies are specialized so well that they can easily grow at 20-30%, even if the car market or two-wheeler market grows at a mediocre level. So this is the kind of approach that we are taking to stock picking. In renewables, we have some exposure. In CDMO, we have a significant exposure. And if you really get down to it, most of the options in these segments happen to be in the mid and small cap segment.
Okay, all right. We'll leave it there. A good conversation as always, Mihir. Thanks very much for joining us with that color on what you own in the portfolio and what you are doing. We'll take a quick commercial break here. As always, we'll get you a quick sense of what's happening in dealing rooms with Nimesh. He's got a couple of stocks on his list as well. And of course, some trading ideas on the other side. There's 14 minutes, I beg your pardon, 24 minutes to go for market closing. Stay tuned. Two things have happened from the last time. Welcome back from the last time we looked at the index. The intraday should come up. We sold off sharply. The market from being absolutely flat sold off about 60, 70 points. And I'm not sure if that kind of coincided with the release of the GST numbers. I think almost sort of simultaneously, the GST numbers which have come through are showing they're basically down month on month. Of course, GST rates have been cut. So in terms of actual value collection, there is a hit. But I think these numbers are also the lowest since February of 2024. So there's a 0.7% growth in November. And the numbers come at about 1,70,276 crore rupees. So this is the number that we're talking about. Year on year is up a little bit. Month on month, of course, is down. And it's the lowest number since February of 2024. So the market sold off, and I think it's already come up a little bit, but we're still down about 30 odd points. 20 points, 26,187. Okay, let's talk about D Street chatter. Nimesh is joining us now with what he's picking up about the mood out there. Nimesh, take it away.
Hi, Prashant. So sharply off days high. I guess a large part of this fall today seems to be on the back of large FI selling. So I understand there's going to be a large basket selling at a leading FI desk. Some bit of it is MOC as well. So probably today's FI data could be quite interesting to watch out for. But again, despite a very strong GDP data, to have such a reaction is a bit surprising as well. Again, the trend of broader market underperformance continues. So mid-caps are under pressure as well. As I said, there is basket selling, and part of it has to do with a bit of selling in the PSUs as well. So select PSU banks as well as the OMC stocks is where I understand there is selling pressure from the larger FIs in today's market. I guess all eyes will be on the RBI policy later this week. Again, most of the economists are of the view that there is a potential 25 basis point rate cut, but the probability has come down by some of these analysts. So that policy will be quite interesting. Also because if there is no rate cut, you will see a bit of a bounce back in the bank names vis-a-vis the NBFC. So that's something from a positioning point of view to watch out for. But today's fall, I guess, has to do to some extent on the back of FI selling.
Okay, all right. Nimesh, thanks very much for that. In terms of specific stocks, what should you list?
Well, so I'll start with a couple of stocks where I'm expecting large block deals. Adani Green as well as Lakshmi Dental. Well, both stocks have been in a narrow range of late, but I understand there will be large blocks in both those names. In Adani Green, I understand the strategic investor will be a seller. And in Lakshmi Dental, a large FD holder, which is a private equity investor, they are likely to sell a large chunk in days to come. So these are the two names where expect large block deals. The second name is eMudra. Stock has been flat in today's market, but I understand the selling pressure from a large P is largely over. There was a clean out trade, there was a large block. So looks like today was a last block from that particular seller in eMudra. The third name is Kotak Mahindra Bank. Weak market that stands out today on the higher side. I understand the selling pressure is largely over, and also there is a small MOC buy as well at a leading FI desk today in Kotak Mahindra Bank. And the last is Concor. After a long time, some bit of buying seems to be back in this name as well. So expect high delivery volumes, and there is buying as well, is what I understand at an FI desk in Concor as well.
Thank you. Interesting list as always. And for now, let's move across to Nigel. He's at the F&O desk with the latest trends.
Well, that's right. In today's trading session, the Nifty seems to be in a bit of a range as we speak. And, we've seen a bit of a bounce from the lows of the day as well. Let's pull up the Nifty and the India VIX. Well, that's the India VIX has actually been cooled off even when we went to the low point of the day. And the India VIX being well behaved, that helps you out in terms of a bullish view. Moving to the Nifty, well, it's facing clearly resistance at around the 26,300, 26,350 mark. Because last week we went to around that 26,310. Today's high as well as ballpark 26,325 odd. And from there, we've done a bit of a U-turn. So in the near term, that becomes a bit of a congestion zone. Moving to the PCR, a few sessions ago, it had danced away to around 1.5. And from then on, we started this cooling off / consolidation phase on the Nifty. It's come down to around 0.85, which is good news. You want the PCR to cool down, and you don't want to see a very sharp correction on the Nifty. That's precisely what's taking place because the Nifty is going through a time-wise correction, which is good. But the call writers are gaining. If you look at the 26,300 call, the premium out there, at the start of today, it was close to around 60 rupees. It's come down to around 23 rupees. Also, if you look at the put side, even though the Nifty is trading in the red, the 26,150 put, the premium has come down from around 53 rupees to around 47 rupees. So writers, they are at play today. And, if you're a writer, you're making money in today's trading session. Moving to individual stocks, NMDC, the stock saw a bit of a correction. That one has come in for some fresh buying actually in today's trading session. The stock is holding mildly higher. And you have the open interest as well that surged up. Ashok Leyland, that's a stock for the second week running actually is seeing a good amount of open interest build up and it's continuing with a good amount of strength. And Sammaan Capital, that's the one that's seen a big correction. But, off late, you're seeing a bit of a short covering bounce that's playing out there because it's refusing to break that range of around 145 to around 150 odd. So that explains why that one as well, a bit of a short covering bounce on that one. But the options data suggests the writers, they are, making hay in the last few trading sessions as the Nifty continues to trade in this range of 26,000 to 26,350. Back to you.
Thank you. Indeed, very sideways. Auto ancillaries have started moving up, perhaps in reaction to the strong auto sales numbers. ZF Commercial, 12.5%. Autoline, 7.5%. Balu Forge, a small company, that's showing traction. NRB Bearings, momentum seen on that. Large volumes, close to about 13 lakh shares traded. Stock is up 4.5%. Most of these stocks have now moved to the day's high. So with autos, auto ancillaries also seeing some positive traction. Mitesh Thakkar is now back with us. Mitesh, any more stocks that you've noticed where you would trade?
So I think, very clearly the market is slightly negative, but as you were highlighting, it's the autos and TVS Motor, I think, leads the pack. Very strong candlestick pattern today, a bullish candlestick pattern near the day's high. So VTSC can be attempted, though slightly higher. Keep a stop below 3649. Look for a target of roughly around 3690, 3695 for. And on the negative side, I think, we'll go with the Ember. That's a SCVT with a stop at 7091 for targets of 7040.
Okay, TVS, Amber, some of these stocks on Mitesh's radar for trade. Sudeep Bandyopadhyay is now joining in for the last leg on the show. Sudeep, afternoon, Wockhardt, stock of the day. What have you made of the news flow surrounding Zanek?
Well, I think it's a very good development from Indian pharma point of view. This is the first time a company's independent research molecule product rather has been accepted for review by the US FDA, and this is a landmark day for Indian pharma. But as far as stock is concerned, I'm of the opinion that it's a very, very risky proposition to kind of bet on this and take fresh position on Wockhardt, at this point in time. However, if you are willing to take a risk, I think it's worthwhile. Look, what can happen? Assuming this doesn't go through and US FDA rejects, the price may correct by 20, 30, 40%. So if you are willing to take that risk, you probably should go and buy, because if it's successful, then probably the valuation will go up two times, three times. It's anybody's guess, because this will be the first patented drug by an Indian company. So I think it's in that realm of speculation and realm of uncertainty. It's going to be a binary event. So let's wait and watch the scenario. And I told you, if you're an aggressive investor, consider that 30-40% downside and go and buy.
Yeah, no, absolutely. 20% limit up now. So 1482 is where we are at this point in time. 25 points lower is what you have. One of the stocks which Nimesh mentioned with regards to blocks coming is, one was, of course, Adani Green. The other is Lakshmi Dental, which Nimesh mentioned. I was just looking at the price and the damage on this one. It came to the market in January of this year, and it opened at 540 rupees. That was January 31st, January 2000, not 31st, but basically January 25. From 540, it's now down to 270, as we close this year out. And if you just look at the list of institutional investors, etc., it's got pretty much everyone. And I think in a way, this kind of talks about the broader market pain that we've been discussing. I mean, Nimesh put out that data with many of these names as part of his editor's roundtable link, and there's more as you go down the list. Any thoughts on, on this one or what we're seeing out there in many of these mid-cap, small caps, Sudeep?
Well, I think, overall healthcare, we have been positive. This particular stock, unfortunately, has taken a severe beating. But by and large, the entire healthcare space has done well. Yes, there are some pain in the mid-cap space and small cap space. And, you have to be very, very selective. That's what I've been maintaining on the mid and small cap universe. In large cap, when you buy something, you may not get that extraordinary return overnight, but you are assured of a certain quality and certain progression. But mid cap and small cap, you have to be careful. I won't paint everybody in the same brush, but there is traction in a lot of segments and a lot of sectors. We were talking about auto ancillaries some time back, and look at what has happened in auto ancillary. There has been a kind of uniform upward movement across product categories. Look at, by and large, the hotel and hospitality space.
Sudeep, we'll just hold that thought on auto ancillaries for now. Let's go across to Parikshit. He's in conversation with the Union Minister, Jyotiraditya Scindia.
We're joined by Union Minister Jyotiraditya Scindia, who's handling crucial portfolios relating to telecommunications, to communications, India Post and Department of Northeast Region as well. Minister Scindia, thank you very much for joining us.
Always a pleasure, Parikshit.
This is a time when the government is brainstorming with the industry ahead of the union budget. There is also a discussion within the government on the next generation reforms after GST. Could you give us your thinking on what needs to be done now for the telecom sector in order to make it easier for companies to get into India, make investments for the future? What can they expect in the weeks and months to come?
So first of all, this is already a deregulated sector. Secondly, my process that we undertake both in the Department of Telecom and on the Department of Posts is an iterative process. We have set up 6 advisory groups in the telecom sector, covering the whole value chain within telecom, from equipment manufacturing to service providers across the board. And those 6 advisory groups meet with me on a regular basis. On a regular basis, issues are brought up, issues are facilitated, resolved, and we move on to the next items on the agenda. So for us, within the DOT, as well as Department of Posts, it's an ongoing process. For example, in the Department of Posts, we're coming out with 6 new products across mails and parcels. We're developing SLAs, service level agreements, in terms of responsiveness, delivery, across those 6 products. So it's an iterative process. So we always are, if you will, if I can give you an analogy, on a moving treadmill, static.
Welcome back. You're tuned in to Closing Bell. Well, Sudeep Bandupada is still with us. Sudeep, what's your view on these recently listed names? Lenskart, Bazooka up, that's up close to around 5%. Obviously, there's a large amount of stock that is actually still, in not the trading in the trading window. It's still curtailed. And also Physics Wala, the last time I checked, I think it's up 10%. Any of these names you like, or you believe that it's too frothy?
Well, Lenskart is definitely too frothy. I was pessimistic actually on Lenskart and have been recommending to stay away. Of course, I must admit that the numbers which they came up with were pretty decent. The quarterly numbers which they came up with was pretty decent. And that, I think, excited the market. But I still believe that once the lock-in period gets over for the large chunk of the shares, there will be significant selling in the market and price will probably settle at a much lower level. There's no fundamentally problem with the company. It's a good business, good company. They're doing good job. The only problem is the valuation. That's about it. I would say to an extent the same thing for Physics Wala. Edutech sector was not getting any money from anywhere for the last 1.5 years post the fiasco on Byju's. But I think Physics Wala set a different mood for the market, and everybody is watching what happens to Physics Wala. Everything is good except valuation.
Okay, just about a minute and a half to close, and it's going to be an absolutely flat closing, slightly lower on the Nifty and the Sensex, and this is after opening at record levels in the morning. The Nifty ending below 26,200 after scaling a peak of 26,325. The Nifty banked to top 60,000 mark for the first time ever, but ends about 85 points in the red, significantly off from the morning highs. The record low on the rupee of about 89.7879 against the dollar was a big dampener, and that offset the good news that we got from the Q2 GDP print and the auto sales numbers. If you look at the big gainers today, it's all autos on top. So Tata Motors, passenger vehicles, Maruti Suzuki, Eicher Motors, all gaining ground. But even outside of that, on the mid-cap end of screen, TVS Motors with a 30% increase in the auto sales, Hyundai also big movers. BEL higher in trade, Kotak Mahindra Bank had a positive tick. IT names like HCL Tech, Tech Mahindra saw some buying. On the way down, Max Healthcare, Interglobe Aviation, Bajaj Finance, Sun Pharma, Adani Enterprises were some of the stock losers.
Well, that's right, Rima. In terms of metal stocks, you had Hindustan Zinc that was up and about in today's trading session. The silver, HDFC silver ETF, that was up. Nippon India silver ETF, that as well was up close to around 6%. Take Solutions, not a stock we talk about very often, but that was up close to around 5%. Aegis Vopak, that's another stock that was up close to around 5%. And Lenskart as well goes home with a gain of close to around 5%. From the day of listing low at around 360 rupees, the stock is up close to around 20% from there. So massive move is what we're seeing on that one. Need to take into account that there's a limited free float out there as well. And IMFA, Indian Metals, a stock that we have been covering over the last year or so with regard to the deficit on chrome ore out there. And also we had told you on Friday as well that there's a bit of a supply hit that's taken place globally. The stock is up close to 2% after rallying close to 6% in Friday's trading session.
Well, that brings us to a close on Closing Bell. Thank you very much for watching. Don't go anywhere. Markets Forward comes up next.
Indian equity markets face selling pressure at record highs. The Nifty slips below the 25,200 mark and the benchmark indices ultimately end flat, reflecting caution at elevated levels.
The Indian rupee hits an all-time low of 89.78 against the US dollar, nearing the $90 per dollar mark. The currency has depreciated nearly 90 paise in a month.
Wockhardt gets approval from the US FDA for its novel antibiotic Zynic, making it the first by an Indian company to get a nod in the US for a new chemical entity. This follows the launch of its science-driven program in 2011. The stock jumps over 18%.
And Mahindra & Mahindra and Bajaj Auto meet estimates with November auto sales numbers. Commercial vehicles see a strong pickup with Mahindra Escorts and Ashok Leyland reporting double-digit growth. Hello and welcome to Markets Forward on CNBC TV18. I'm Vinny Motiwala. With me is my colleague Hormaz Pataki as well. Hormaz, it's been a day where we started near those record highs. We touched the record high level and then a different story played out after that, right? Maybe profit booking or rupee depreciating so much. Whatever factors came into play, we didn't close on a good footing as much as we started the day with.
The bulls will be disappointed for sure. And the gap up that was indicated by the GIFT Nifty earlier in the day, and of course the gap up that we opened with eventually, but then could not sustain at those levels. Similar was the case on last Thursday as well, when we had first hit that record high of 26,310, eventually making a new high today, but again could not sustain. Of course, a lot of the heavy lifting or the blame needs to be done by the rupee. The depreciation that took place towards between 11 and 11:30 this morning, and that caused the sell-off from the elevated levels. There you can see on the charts there. Of course, we began to cool off from the elevated levels from the start itself, but the bigger fall came in after the rupee began to weaken, and then it was just meandering in that very narrow range. But the only good part is that we mentioned about 26,100, 26,150 being a support for the Nifty. It's managed to close above those levels.
Okay, at least closing above those levels. So let's not panic too much. There's nothing to worry on that front, right? 26,150, if you're managing to hold on to levels, that's interesting to watch out for. The broader end of the market, when you look at that today, slight bit of a positive versus what we saw in the benchmark indices. So yes, that is what we'll keep an eye out on, though advance decline ratio still was in favor of the declines versus advances. So let's watch out for that. Metals clearly were the outperformers today. But let's move on and talk about what's on the show for y'all. We have a very exciting lineup for y'all today. We'll start with the top movers and shakers of the day with Sudarshan, and then move on, talk about Wockhardt. Those shares rallied in trade, and this came in after US FDA accepted the company's new drug application for its antibiotic. Meanwhile, November auto sales numbers came largely in line with expectations. Metal stocks, they were running away in trade, focus on the commodity prices as well that continued to surge. So we'll be talking all of that, as well as last but not the least, which are the key important market events to watch out for in tomorrow's trading session. We'll take you all through all of that. But first up, let's go across to our search segment to Sudarshan, who's waiting by to tell us the top movers and shakers from the big world. Sudarshan, over to you.
So I'll start with the stocks or companies from the auto space, because auto companies have reported sales for the month of November, and sales were largely higher than expectations, or say in line for few companies. So TVS Motor, it was an all-round beat. Company has seen a growth of 29% for the total sales, and some of the segments like three-wheeler has seen a growth of almost 150%. EV has seen a growth of almost 50%. On the back of that, stock was higher, up almost 4%. Eicher Motors, you can see it has closed in the green, but it has closed off highs because total sales have come in below expectations, and the reason was models above 350cc has seen a decline in the total sales. Bajaj Auto, total sales were up 8% in line with estimates, but domestic sales remain under pressure. Domestic two-wheeler sales for the month of November has seen a decline of almost 1%. That's the reason stock was off highs. CV space has surprised positively when expectations were that they would do good, but they have not done good, they have done better, and that's the reason both Tata Motors CV and Ashok Leyland were higher. Tata Motors CV closed with a gain of more than 1%. As you talked about, for US work hard, US FDA has accepted its application of antibiotic Xenic, and that's the reason stock has moved higher. It was up more than 19%. Positive brokerage notes were there for KFin and Paytm. Paytm, it had come on Friday. That day also stock had moved higher. It has seen follow-up buying, and today also it has moved higher, almost 4%. KFin Tech, there was a positive note from Jefferies, and that's the reason stock was up almost 4%. On Friday, if you remember, Appellate Tribunal of Electricity has released certain observations related to market coupling, and that day IX had fallen almost 3 to 4%, but it has regained entire losses, and today it has seen a gain of more than 5%. Metal stocks have moved higher, tracking the prices globally. Silver has moved to record high, even copper prices were higher, even aluminum prices were higher, and that's the reason two stocks I have selected: Hindustan Zinc, because it reacts to the move in silver, and Vedanta reacts to both copper, aluminum as well as silver. That's the reason both the stocks were higher in the trade. And lastly, realty stocks were under pressure. We still have few days to go before RBI policy comes. Will there be a rate cut or no rate cut? Whatever happens, we'll get to know in few days. But for today, realty stocks were under pressure.
The realty stocks under pressure. The broader market picture, though, not painting a pretty sight. Sudarshan, thank you for that update. And as Sudarshan was highlighting as well, it was a great day for Wockhardt. The US FDA accepting the company's new drug application for its antibiotic Xenic. This is the first time that an Indian company has received this nod for a new chemical entity. Ekta joins in with more on this. Ekta.
Well, yes, the news with regards to Wockhardt is that the US FDA has accepted Wockhardt's new drug application for their antibiotic Xenic, which is basically used to treat difficult infections in ICUs and hospital settings. Now, this new drug application was originally filed in September of 2025. Now, interestingly, Xenic has also been granted a fast-track designation by the US FDA, which basically means that they're going to prioritize the review. So as of now, they've just accepted the application. It still has to undergo the review process, but they've already put it under fast-track status. However, that might not change the outcome of what we can expect in terms of the review. However, the drug has already been used in India and the US on compassionate basis on critically ill patients. So this is something which, according to analysts, could possibly be an added advantage going forward for Wockhardt when they look at, when the US FDA looks at the review part of it. Now, in terms of what the company has said, that the drug will be manufactured by a third party in Europe. Peak revenues, according to them, will be significant. They could see around 150 crores in terms of revenue from Xenic in India itself. It saved around 51 lives in the past 1.5 years. As per the company. Now, the market size, according to them, in terms of, the antibiotics, the antimicrobial resistance market could be around $9 billion globally. These are earlier conversations, so that is something that we'd probably have to revisit. But they could possibly even consider out-licensing or maybe a partner when it comes to Xenic. Now, what are analysts saying? That the size could be around $1.5 billion globally for this drug. Wockhardt will be a patent holder if in case it eventually does get that approval from the US FDA. They think that it could be around a $500 million product for Wockhardt globally, and there could be an over 90% chance that they could possibly get approval from the US FDA going forward based on what they've seen in terms of the phase 3 data. So positive news for Wockhardt, but we'll really have to see what the review from the US FDA does. But the stock seems to be, factoring in a lot more at this point.
Thank you so much for that, Ekta. But let's go across to our guest for today. We do have Sudeep Bandyopadhyay, Group Chairman at L&T Trade Capital, as well as Richard Jain of Motilal Oswal Financial Services. Richard, let me start with you and ask you about first the market. Like Hurma started also and said that, we managed to hold on to 26,150 for the Nifty. But what are we keeping an eye out on? If it goes below that, what are the levels that we should keep an eye out on? And if this holds on, then where do we see that moving? Also, in terms of Wockhardt, have you looked at the charts as well?
Yeah, hi, very good afternoon, Vinny. Very good afternoon to everyone. Well, today's move, although we have seen some cool off from the highs, but that does not change the overall trend for the market, which has been positive, at least on the index and the large cap stocks front. Yes, there has been some divergence over last couple of months where the large caps are doing good, but there is no positive move coming in from the small cap space. So still there are no signs of trend reversal coming in the small cap space. So we believe that divergence would continue, where the fresh momentum or the buying momentum would continue only in large caps and to certain large mid cap names. But the small caps are not showing any signs of uptrend as of now. So given that more buying interest is keen towards the large cap names, I think that uptrend in the index should stay intact. The 20-day exponential moving average, where the recently markets took support, is now placed around 25,960, so roughly around the 26,000 mark. So I think till that 26,000, 25,960 is intact, we should see a continuation of the uptrend on the benchmark indices, and we could see an up move towards 26,400 to 26,500, where some call writing position is there. So I think the market should challenge that. So on the upside, 26,400, 26,500 is the level that we are watching for till this 20 EMA support is intact. Now, Wockhardt, yes, today, based on the news flows, we did see a good up move, and that too was supported by very high volumes. And ideally, the stock has already seen a good price-wise correction over last couple of months. From a high of 1850, 1900, stock had already seen a correction towards 1250. So I think a pullback move towards 1600 could be seen, which would be approximately 50% retracement of this entire correction. But given that good volumes there along with the price up move, I think that should lead to some further positive moves in Wockhardt towards 1600 mark.
Okay, let's move on then and talk about the auto stocks as well. November auto sales numbers, they've come in, which are largely in line with estimates. Now, commercial vehicles saw a strong pickup with both M&M and Ashok Leyland reporting a high double-digit growth. Let's go across to Sudarshan to get us the report card for what November's auto sales numbers look so far.
So sales for the month of November so far have been largely better than expectations. One segment we knew that it would do well because Vahan data was indicating a very strong demand. That segment is commercial vehicle. Both the companies, Tata Motors commercial vehicle and Ashok Leyland, have reported numbers much better than expectations. In passenger vehicle, Maruti, Mahindra and Tata Motors passenger vehicle have reported better than expectations, but Hyundai's numbers were largely in line. In two-wheeler space, companies which have disappointed is Eicher Motors, and for Bajaj Auto it was largely in line, and the company which have done much better than expectations was TVS Motors. So I'll start with two-wheeler space. Bajaj Auto total sales have increased by 8%. Our expectation was also 8%, and the reason of drag is domestic sales. Domestic two-wheeler sales have seen a decline, while exports and three-wheeler continue to see a healthy growth. For Eicher, the segment which has not done well is models above 350cc segment, and that's seen a decline of 6%. And also exports growth have moderated this month. It just saw a growth of 6%, while the segment that is models below 350cc continues to see a healthy growth. For TVS Motor, it was an all-round beat. Total sales have increased by 29%. Our expectation was just 22%. All the segments have seen a double-digit growth. Three-wheeler has seen a growth of as much as 150%, and electric vehicle growth was almost 50%. Coming to passenger vehicle segment, Hyundai largely in line, saw a growth of 9%. Our expectation was in the range of 6 to 7%. Maruti, it has seen a healthy growth of 29%. Now, the segment which has done well, unusually, it's the entry-level segment. Two cars, Alto, Espresso. The growth this month in November was 66%. SUV continues to see a healthy growth. There also the growth was 22%. For Mahindra & Mahindra, continues to see a healthy growth, and it's being led by SUV segment. That saw a growth of 22%. Total growth was 19%. Tractor, as expected, has done very well. Both Mahindra & Mahindra tractor segment and Escorts Kubota have reported numbers better than expectations. In commercial vehicle segment, Ashok Leyland has seen a growth of 29%. Our expectation was 17%. Tata Motors commercial vehicle also saw a healthy growth. There also our expectation was 16%. So overall, the numbers so far, the companies have reported sales numbers are looking largely better than expectations.
Largely better than expectations is what the key takeaway is. Sudarshan, thank you for that. Sudeep, you heard Sudarshan with the auto sales numbers, and by and large, it would be fair to assume that the GST cut related festive season demand boost has more or less sustained, if not across the board. But where among the autos does your preferences lie, whether it be PV, CVs, or even the tractors for that matter?
Well, Hormuz, we have been positive on M&M on the back of tractors as well as SUVs, and I think that is amply being supported by the performance on ground. So M&M continues to remain our favorite. It has given fantastic return to the investors over the last 1.5 years, and we believe that it will continue to give so. As far as commercial vehicles are concerned, Ashok Leyland continues to do well, and we again believe that it will continue to outperform and perform the industry as well. As far as two-wheelers are concerned, we are positive on Hero MotoCorp. I think the numbers which Maruti came up with very clearly shows that there has been finally some pickup in the lower end of the market, which is why the Maruti's low-end vehicles have shown a fantastic growth. Hero MotoCorp, as we know, operates in that segment as well in two-wheelers, and we are expecting good set of numbers from Hero MotoCorp as well.
Okay, thanks for the view there. But let's move on, talk about the metal space. Nifty Metal was a top sectoral gainer today. And mainly silver and copper prices hit an all-time high on the back of Fed rate cuts hopes. And shares of Hindustan Zinc were in the spotlight as well, as silver surpassed that $58 per ounce mark. Let's go across to Nigel to get more in terms of details for the metal stocks, what was leading to the run-up as well. Nigel.
Well, that's right. Metal stocks actually did well in today's trading session, and the metal index itself was higher in today's trading session. The key reason is that metal prices have moved up. Both base metal prices as well as precious metal prices, they had perked up over the weekend. And that's because the expectations that the Fed is going to go ahead and pull down rates by close to 25 basis points is rather high. So you had silver that made a fresh all-time high, and copper as well has fought back post the correction that we have seen. And both the core plays, on silver, you have just one listed play, which is Hindustan Zinc. And on copper, the only one that you can play the copper price up move is on Hindustan Copper. So both those two did rather well in today's trading session. On Hindustan Zinc, well, close to 40-45% of their EBIT comes in from the silver business. It's the pure play out there. And the street is building in expectations that possibly there will be a big ramp up in volumes in FY27, and that could be some kind of a spin-off as well that takes place. Hindustan Copper had corrected close to 10% from the recent peak, but that one pulled back in line with the bump up that we saw in copper prices. So net, you had silver and copper did well, and that's why Hindustan Zinc and Hindustan Copper did participate on the upside today.
Okay. That was the list of metal stocks that were buzzing around in trade today, and a couple of names that Nigel mentioned there. But let's move on, talk about Lenskart. That's another one that was buzzing around in trade. And this specifically came in after they reported their Q2 FY26 numbers. This is the first numbers they've reported since their listing as well. Good set of numbers that's coming from the company. Look at it. It opened up at 4% gains and came down and again back and closed with more than 4% gains. When you look at it in terms of the revenue of the company, good growth of around 20.8%. Margins, 300 basis point, more than that expansion in terms of EBITDA margins for the company. And when you look at the profits of the company, they also saw growth of almost 20%. Main impact a bit on that came in because of the depreciation being high. So that is something that we'll be keeping an eye out on. Apart from that, international business saw very strong growth. That was leading the growth, 33.6% growth over there. While in terms of the international business, they reported an EBIT profit versus an EBIT loss last year. So surely that EBIT margin on the international front is a positive sign as well. India business continued to see a double-digit growth of 13%, and margins over there also saw a bit of an expansion there. Same-store sales growth for the first half of the year came in at 15.3%. Even the India store-level EBITDA margins overall came in at around 33%. They've given a positive outlook or a strong outlook on the back of their current numbers for FY26. That is why the stock was perked up in trade as well. Good numbers was there, so nothing to worry about. But let's go across to Sudeep then on that front as well. Sudeep, what's your view for Lenskart first?
Well, I think the numbers were definitely quite impressive. I was not positive on Lenskart, and I still maintain my cautious view. I think, the company is doing good. Performance has been good. The business is rock solid, and a significant scope for expansion does exist. With their international business also doing well, I think they are on a good wicket. The only challenge is the valuation. I think the valuation does look extremely rich, and I'll be very, very careful at this kind of valuation. Also, remember, there are a lot of shares are under lock-in. That lock-in gets over in a short while. Once the lock-in gets over, I expect some amount of selling to come in the counter and price to settle at a much more benign levels.
Okay.
Sudeep, Ruchit, thank you so much for sparing time and joining us today. with your views on the index and specific stocks as well. Take a short break, get to the top corporate voices and some key events to watch on the other side. Stay tuned. Welcome back. Sriram Krishnan, the Chief Business Development Officer at NSE, told us that its share in equity options has improved by 10% after a shift in expiry to Tuesday. He also gave us an update on the exchange's IPO process. Listen in.
As far as NSE's IPO is concerned, that's dependent upon the regulatory clearances, and it will happen when it has to happen. See, the industry regulator has to approve first, and then SEBI has to approve. In our case, SEBI is both the industry regulator and the capital markets regulator. So that's what we are waiting for. As far as equity options are concerned, if you look at August 2025, our market share was 76.9%. And I'm picking August 2025 because effective September 1st, 2025, we changed our expiry day for index options from Thursday to Tuesday. But if you see since then, if you look at November 2025, for example, our market share in equity options has gone up about 10% to 87%. So I think the market participants have accepted well to the change of expiry day from Thursday to Tuesday. And Tuesday seems to be working well for us.
Now let's move on to some corporate voices that we had through the day. First up, M&M management has told CNBC TV18 that festive and wedding season tailwinds, along with the GST rate cuts, are driving strong demand across its entire portfolio. The company believes that GST cut may have triggered the start of a new 4-year commercial vehicle cycle.
L&T Finance is operating with a risk-first, tech-first philosophy backed by extensive use of AI. CEO Sudipta Roy said that the average AI collection call has about a 55% success rate. He also expects the second half of the year to outperform the first with around 20 to 25% AUM growth for the full year.
And before we wrap up this edition of Market Forward, let's go across to Sudarshan, who's here to tell us which are the key events to watch out for in tomorrow's trading session. Over to you, sir.
So it's getting tougher to find the events as we are getting closer to the year end. But nevertheless, for tomorrow, some of the events are lined up. First one is winter session of Parliament has begun today. So one bill that is likely to be proposed is Insurance Amendment Bill. And it might be important for one stock, that is Max Financial. Majority of the auto companies have reported sales for the month of November. But one company that is yet to report number and the expectation is very high is Hero MotoCorp. Trade deal talks have been undergoing for India with several countries, and with one country, that is Canada. India has started trade talks this week. So basically today they have started. Some of the stock that might be in focus, MSTC goes ex-dividend. Keep an eye on IT stocks, because if rupee fall continues, there might be an impact on IT stocks, positive impact we might see. And so the global macro events, Japan monetary base for the month of November is expected early morning tomorrow. Fed Chairman Jerome Powell is going to speak at 6:30 a.m. IST, and unemployment rate and CPI for European Union that we are expecting tomorrow as well.
Some interesting data points lined up. Sudarshan, thank you for that. Take your leave on this edition of Markets Forward. From Vinny and me, thank you for watching. And more news and updates continue on the other side.
Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the headlines that we're tracking for you this evening. Indian rupee sinks to a new low against the dollar. $1 now costs nearly 90 rupees. Foreign fund outflows and uncertainty over India-US trade deal hurt sentiment. Sensex and Nifty and marginally in the red after hitting record highs in early trade. Auto stocks gain the most. Real estate stocks see a sell-off ahead of RBI policy this week. A stormy start to winter session of Parliament. Government tables 2 bills to levy higher excise duty on cigarettes and tobacco products, along with a new cess on manufacturing of pan masala. The new cess bill gives government the power to hike rates and add other items to expand the taxation. A dozen of important economy-related legislation on the agenda this winter session. This includes bills to hike FDI on insurance to 100%, opening up civil nuclear energy sector to private companies, among others. Mahindra and Bajaj Auto meet estimates with November sales. Commercial vehicles see a strong pickup with Mahindra, Escorts and Ashok Leyland reporting double-digit growth. Vietnamese electric vehicles maker VinFast all set for the India Drive, set to launch a 7-seater multi-purpose vehicle called Limo Green by February next year. Also plans to roll out its full fleet from bikes to buses in a few years. Enforcement Directorate issues show-cause notices to Kerala Chief Minister Pinarayi Vijayan and former State Finance Minister Thomas Isaac, among others, cites alleged foreign exchange violation to the tune of 466 crore rupees linked to the state's masala bond issuance in 2019. The notices were issued a month ago and does not require the personal appearance of those named. More than 1,000 people have been killed across Indonesia, Sri Lanka and Thailand as storms and floods devastate the region. Death toll in Indonesia crosses 500, with 500 more people still missing. More than 350 people killed in Sri Lanka, with 366 still missing. The top story this evening, the Indian rupee hit an all-time low of 89.78 against the US dollar today, nearing the 90 per dollar mark. The currency has depreciated nearly 90 paise since November 3rd. So what can explain the fall of the rupee? Dealers say that the RBI restricting the supply of dollar could be one of those many reasons. Latha Venkatesh joins us now with the details. Latha, what are you picking up?
Well, the dealers at least tell us they don't have any fresh reasons. Probably it's yet again foreign portfolio investors pulling out, selling equities and taking dollars out of the country. It is possible that there is a slightly higher demand because the very strong GDP number indicates hints that probably there is no rate cut from the Reserve Bank. So further incentive to buy Indian stocks may not be there, and that's maybe making people go, or people are just taking position then maybe the Reserve Bank will not cut and therefore, people will pull out later. So, speculation is, people are just trying to outguess one another. Nobody is speaking of a very large FPI demand. It seems to be the usual demand, but it seems like the Reserve Bank has let go. Usually the Reserve Bank keeps supplying dollars, but once in a way it lets go. And there are various theories on why it is allowing, the rupee closed at 89.45 on Friday. It let go the 89.50 mark, which was a surprise. Everyone thought 50 was a line in the sand. Maybe because, once the rupee becomes cheaper, then the current account deficit will automatically correct because every imported item, the dollar is being multiplied by 90 instead of 85. So you will not import. That would be a natural market-determined way of checking trade deficit. There is another explanation that, when people are moving out, why should they move out multiplying it by 89? Let them get only 88 when they pull the dollar out. So the Reserve Bank is allowing the rupee to fall. There are all these kinds of explanations that are trying to reason why the Reserve Bank did not support as much as it was expected to support, why it did not support up to 89.50.
Right, Latha. Many thanks for those details. Now, the fall in the Indian currency weighed on Dalal Street as well. All benchmark indices hit record highs, but succumbed to selling pressure to end the day flat. Prashant Nair is here with the day's trading action. Prashant?
Well, the backdrop as we came into this Monday morning, new week, of course, was one of very strong growth, real GDP growth of north of 8%. But there was, of course, always a little bit of worry as to nominal growth being around, the gap between real and nominal being the lowest, I think, at least in my recent memory. Corporate earnings are a function of nominal growth, and between 8 and 9% nominal growth does not look all that great. One more data point, which I think got much lesser attention, is tax collections. April to October tax collections at 4.5% is way lower than what the government has budgeted. So that was basically the backdrop as we started the trade. Market, of course, opened higher, the Nifty making a new all-time high, above 26,300, and then selling off, not to recover. A 50-60 point cut. At one point, we came back into the green, only to sort of give back those gains as the GST numbers for November came out, which also kind of underwhelmed. It's the lowest number since February of 2024. Amidst all of this, there was, of course, also what was happening with the rupee making a fresh all-time low against the US dollar, very, very close now, of course, to the 90 mark. I'll just go through, the motions, just getting through the mid-cap, small-cap indices. Absolutely, the small-cap index actually looking better, about 0.25% higher. The mid-cap index was absolutely flat. Now, as far as the large-cap picture is concerned and what happened there, again, very, very evenly balanced. Tata Motors passenger vehicle, as a stock, was up 2%. Maruti was up about 1.5%. Eicher Motors was up about 1.25%. Auto sales for the month of November looking better than what many thought they would. On the downside, as far as Nifty is concerned, Max Healthcare down 3%, Indigo down about 1.8%, Bajaj Finance and Sun Pharma were the other casualties.
So flat close there for the last trade. Thank you so much for those details, Prashant. Gold prices hit a 6-week high, lifted by expectations of a possible U.S. Federal Reserve rate cut later this month. Silver extended its rally after touching record highs, driven by Chinese inventories falling to decade-low levels and a surge in China's silver exports, which hit an all-time high in October. India's factory output has eased to a 9-month low in November. This can be attributed to export pressure and lower rise in sales. This has also been the slowest improvement in operating conditions since February. GST collections in November came in at 1.7 lakh crore rupees. Remember, this was the first print for the entire month post the new GST reforms, which eliminates the cess component. India's auto sales slightly beat estimates in November. Commercial vehicles witnessed a strong pickup during the month, and this can be attributed to strong festive season and reduction in GST rates. In the two-wheeler segment, TVS Motor registered a 30% growth on an annual basis, while Bajaj Auto sales were in line with expectations. Mahindra's auto business continued to see healthy demand, and its tractor business registered 32% growth. Vietnamese EV giant VinFast is expanding its presence in India. The company plans to launch the 7-seater multi-purpose vehicle called Limo Green by February next year. The company's CEO told CNBC TV18 that EV penetration in India has multiplied this year. Take a look.
The experience is fantastic. We are very happy about the response of the market of India. Before last year, the penetration of EV into Indian market is very less. But since this year, it's multiple. It means that the future of EV in Indian market is huge. And someday it will be a very, very big number.
Shares of Lenskart rose in trade after the company reported a solid set of numbers in the second quarter. This is the eyewear brand's first earnings announcement since it listed earlier this month. Net profit jumped over 19%, while revenue surged over 20% on an annual basis. On a sequential basis, margins expanded 180 basis points, while EBITDA rose over 23%. Wockhardt surged 19% after U.S. drug regulator accepted its new drug application for its novel antibiotic Xenic. The drug has also been granted fast-track designation. Already used on a compassionate basis in India and the U.S. for critically ill patients, Xenic is expected to significantly boost Wockhardt's revenues, with the India business alone projected to generate around 150 crore rupees. Airbus says that of the 6,000 aircraft potentially affected by its recent safety alert on possible flight control system malfunctions, the vast majority have already received the required modifications. The company is now working with airline customers to complete upgrades on fewer than 100 remaining aircraft so they can return to service. Meanwhile, Indian carriers have successfully completed the critical software upgrades on 323 Airbus A320s across their fleets. The Enforcement Directorate issued show-cause notices to Kerala Chief Minister Pinarayi Vijayan last month over alleged foreign exchange violations linked to the masala bond issuance in 2019. Notices were also issued to the state's former Finance Minister Thomas Isaac and Kerala Infrastructure Investment Fund Board CEO KM Abraham. However, the notices do not require the personal appearance of those named. On that note, it is time for us to head into a short break. But coming up next, a stormy start to winter session of Parliament. Details when we come back. Stay tuned. Welcome back. You're still with us on Business 360. The Parliament's winter session got off to a stormy start, with the opposition uniting on the issues of the special intensive revision, the Red Fort car blast and the air pollution in Delhi. Lok Sabha was adjourned for the day amid sloganeering by opposition lawmakers. The government says that since SIR is an election commission-led exercise, it cannot take primary responsibility. It has, however, suggested widening the discussion to broader electoral reforms. The RE were fireworks in the Rajya Sabha as well. Congress President Kharge hit out at the Prime Minister for his statement ahead of the parliamentary session. Taking a jibe at the opposition, Prime Minister Modi said that Parliament is not a place for engaging in drama.
ड्रामा करने के लिए जगह बहुत होती है, जिसको करना है करते रहें. यहाँ ड्रामा नहीं, डिलीवरी होनी चाहिए. नारे के लिए भी जितने नारे बुलवाने हैं, वो पूरा देश खाली पड़ा है. जहां पराजित होकर के आए वहां बोल चुके हो, जहां अभी पराजय के लिए जाने वाले हो वहां भी बोल दीजिए.
प्रधानमंत्री बाहर बहुत जोरदार तकरीर करके आए और अपना प्रेस कॉन्फ्रेंस करें, और हमारे ऊपर भी बहुत इनडायरेक्टली हमला किए, लेकिन उसका जवाब तो हम मुंहतोड़ यहाँ पर देंगे.
The government has tabled 2 bills to levy higher excise duty on cigarettes and tobacco products, along with a new cess on manufacturing of pan masala. The new cess bill gives the government the power to hike rates and add other items to expand the taxation. Timsy Jaipuria is here with all of those details. Timsy?
Well, yes, as you know, Finance Minister Nirmala Sitharaman today tabled two bills in the Parliament. Firstly, the Central Excise Amendment Bill 2025 and Health Securities and National Security Cess Bill 2025. The two bills, as you rightly said, aim to change the composition of the indirect taxes levies on tobacco products and pan masala. To begin with, firstly, under the Central Excise Amendment Bill, the powers that the government is seeking through this amendment is to realign excise duty on cigarettes, cigars and tobacco products like gutka. Also, the excise on cigarettes, as per the proposed bill, is at between 2,700 rupees per thousand stick to as high as 11,000 rupees per thousand stick. Now, this will mean a substantial hike from the current tax incidence. When it comes to the other bill, that is on the health securities and national security cess, well, that is being proposed to be levied only on pan masala right now. But yes, in the bill itself, Centre has reserved the powers to expand the list of items on which these two cesses can be levied anytime later in the year, and also to hike the rates that are proposed currently only on pan masala. When we talk about these two bills, we have to see that these two bills, once they come into action, they will actually change the entire composition of taxation of indirect taxes on these three items, that is tobacco products including cigarettes, cigars and chewing tobacco, and pan masala, because currently they are under 28% GST plus the compensation cess. Remember, the compensation cess is only to repay the back-to-back loans that were taken to compensate the states due to losses on account of GST in terms of the COVID losses. So what we are picking up from sources is the fact that once the debate is being initiated in the Parliament, more clarity will emerge as to by when these new rates will kick in, because once the new rates kick in, the taxation on the GST side will be 40%. That is the highest slab that is being proposed on these items, that is cigarette, pan masala, gutka, cigars, etc. So all the tobacco products and pan masala will be at 40% once the new rates kick in. To discuss further, we are joined by our experts who are talking about these two new bills, how they will function and what are the powers that the government is getting through these two new bills.
Sure, absolutely, Timsy. Thank you for taking us through those details. But, you know, as she pointed out, to take this discussion forward, we are now joined by Najib Shah, the former chairman at the Central Board of Indirect Taxes and Customs, and Abhishek Rastogi, the founder of Rastogi Chambers. Gentlemen, thank you so much for taking time out and being here with us on the program. Mr. Shah, let me start by asking you about these new bills and what you sort of make of it.
Well, this was expected because the last GST Council meeting had recommended that the levies on these tobacco products will kick in after some time, because remember, the compensation cess, as Timsy pointed out, it comes to an end, and obviously the government needed to raise taxes. So 40% is what is proposed to be levied as decided by the GST Council, and the rates proposed that in the amendment of central excise are quite steep. I assume these are the maximum rates that the government is taking on board, and the actual rates could be a little lesser than this because it is substantially higher than the existing rates. The existing rate components consist of basic excise duty, NCCD, GST, a compensation cess, and a specific element. So what has been proposed in the Central Excise Act amendment is the specific element. Then we have also taxes proposed per machine for gutka. Now, I don't think that's a good idea because our experience in central excise has been very poor. It leads to great enforcement challenges, but that's what has been proposed in the cess amendment proposed for health and security purposes.
I would like to break you over there, sir, just a moment. As you said, this idea is not new when it comes to taxing the production capacity when it comes to the pan masala, that is health security and national security, the two cesses that the government is proposing. And as you said, this particular regime existed pre-GST also in the erstwhile indirect tax regime, and you saw a lot of leakages happening there. Do you think that leakages will continue in the coming months once this new regime kicks in? And what is it that the government will see in terms of revenues?
Yeah, technologically, we are far superior than what we were. But remember, the tax element on a production basis linked to machines would mean necessarily enforcement challenges. It will necessarily mean registration, visits to the factories, etc., etc. So I think it will be challenging. I'm sure they have thought through this. They have learned from the experience in the central excise regime when this regime was there, and hopefully they would have ensured that the same amount of leakage which happened in the Gutka regime in central excise does not take place in this new proposal.
Bringing in Abhishek Rastogi in this conversation, when it comes to the the amendment in the excise plus this new cess. Abhishek, coming to you now, considering that till now the share on indirect taxes on these particular items were going to the states and centre equally. But now with this new bill, that is the health securities and national security cess, the two cesses will continue to remain with the centre. The collections will be with the centre and they will not be shared with the states. Do you think there is a little bit of unfair treatment that the states may feel because they agreed on bringing the tobacco products, including pan masala, on board in the GST regime, only because they said that there will be a 50-50% share which will be shared with the states and the centre, but now, and the compensation cess completely going to the states, but now the cesses will be completely with the centre.
I think, Timsi, 2 points very clear. The writing on the wall is very clear. Tax sin goods as high as possible. That is one. Secondly, as far as the compensation cess is concerned, it was very clear that the compensation cess will be given to the state for the revenue loss for a stipulated period of time. Now, the government is not shying away. The central government is not shying away to make up for those loans or interest which is becoming due or which has become due. So only after this particular time, this new regime will kick in. That is part one of the question. The second part is we must understand that the revenue collection also has to happen from different sources, and taxing sin goods is a good idea. Now, while there is an indirect tax in the form of central excise duties, which has now gone up, there is an equal addition in terms of the GST number as well, in terms of the rate which has increased on these several products. So even the state portion from the collection would go up. At the end of the day, we must also look the intention of the government to impose this cess, which is called the health securities and national security cess. And it is the cess which will be levied in an indirect way to collect an indirect tax by imposing tax not only on the machines which are installed, but also the processes which are undertaken. And that is the key. The government is trying to make even the production expensive, and by recovering some sort of cesses, which will, and the collection of these cesses, rightly, as you mentioned, will go to Consolidated Fund of India. And all of this collection would be used in the best wisdom of the central government. The funds may still go in exceptional situations, depending on need, depending on the requirements of different states. The states may still be the beneficiary of these cess in certain circumstances. But yes, the amount will go to the Consolidated Fund of India, and hence the federal government will have the right way to allocate this cess further. There are certain issues which are also very relevant. So, for instance, when we talk about the health securities and national security cess, what happens in case of leasing companies? So there could be challenges, as what Mr. Najib Shah also mentioned, that taxing this or collecting this cess may not be easy because there will be a lot of complexities. The imports, you will have to see whether how individuals are getting these products into India. The leasing companies, what are the impact on the leasing companies? And of course, when we talk about the compensation cess going off, there could be a lot of transitional issues and availability of credit. Those will remain a challenge. I think once this is proposed, those issues must be addressed by the government so that there are less of leakages.
All right, Mr. Shah, Mr. Rastogi, thank you so much for taking time out and being here with us on CNBC TV18. And with that, it is a wrap on this edition of Business 360. But before we go, here's a sneak peek into Change Makers of Tomorrow, a campaign spearheaded by CNBC TV18 and Shell. Many thanks for watching.
Let's talk about Changemakers of Tomorrow. This is the third edition. What was exciting about this round particularly?
I think we just wrapped it.
Let's talk about Changemakers of Tomorrow. This is the third edition. What was exciting? Let's talk about Changemakers of Tomorrow. This is the third edition. What was exciting about this round?
Really?
Presented by Policy Bazaar.
CNBC TV18, the Policy Bazaar Insurance Show.
Hello and welcome to the Policy Bazaar Insurance Show. I'm your host Yash Jain, and today's episode is indeed very special. So far, we've brought to you insights on how insurance can protect you and your loved ones. But this week, we're focusing on something more powerful, and that is your questions. In today's episode of the Policy Bazaar Insurance Show, we'll be answering real viewer queries who faced tough times but found strength thanks to expert support. And to help us understand and answer these queries, today we are joined by Siddharth Singhal, the Business Head Health Insurance at Policy Bazaar. Welcome, Siddharth, to the show, and let's begin straight away with the first story itself. This one's coming in from Murali. He's from Bangalore.
Hi, my name is Murali. I work for an IT firm in Bangalore as a global manager. And my question is, my initial claim was rejected. Why does this happen? And what steps can I take to avoid such rejections?
Sure. Thank you. Thank you so much, Yash, for having me here. It's always a pleasure to be on this show. So I think just straight away addressing the question why the claim can get rejected, in what are the typical scenarios in which a claim can get rejected. So, the policy terms and conditions are different from the and largely when I say policy terms and conditions, it has to do a lot with the waiting period. So if example, somebody is filing for a claim while the disease could be in a pre-existing disease waiting period, generally which is for 3 years now, or it could be in a specific illness disease, which is 2 years typically. So in that scenario, a claim may get rejected. That is one. The second thing could be, I would say a suspicious, when typically in a fraud kind of a situation with the insurance company is looking for the documents, suspect a fraud. And thirdly, I think in a lot of cases where the cases are genuine also, so initially a claim, I would say the cashless request may get rejected when the claim is in a close proximity. So by close proximity, what I mean is somebody has taken a policy today and, just maybe, 30, 40, 50 days later, there's a major claim, a major critical illness claim coming in. In that scenario, insurance companies, typically reject the, maybe a cashless request, but that does not mean the claim is fully rejected. It may require some in-depth verification. It may require some extra documentation to assess the the genuineness of the claim. So I think apart from these scenarios, most of the claims get passed through. Or if there are any issues, then there are redressal mechanisms available to the customer.
If a claim is denied, what is the exact process to appeal and get it reviewed?
Sure. So, Yash, I think that's a very important question. If a claim is denied for any policyholder, I think the first and the foremost is the role of the channel, the distributor, and a person can obviously reach out to the channel, to the distributor, to the broker from which they have purchased the insurance policy, or directly to the insurance company as well. So one, that is very, very important. And second is you can always reach out to the insurance company. There are grievance cells specifically related to the claim inquiries, and any thing related to the claim. If a person is still not finds complete satisfaction from the resolution provided by the insurance company, then the person can move on to the ombudsman and file a complaint in the ombudsman, and a lot of cases get resolved. And then comes in the regulator, and finally the court, in which these are the hierarchy, I would say, how a person can look at getting their satisfactory answer at different forums. So I think it's very, very important that you read the policy documents very carefully, buy it from a very reliable, very strong distributor, so that your case can be adequately represented in front of the insurance company. So I think that these are the certain mechanisms which are available.
My father's policy has already been used for high claims. Will the renewal premium shoot up?
I will just break that into two parts. One is the premium part, and the benefits in the policy that get accrued over a period of time. So I think so. One part is the no claim bonuses, etc. So a lot of insurance companies, there are a lot of plans which kind of reward a customer with an additional sum insured if there is no claim in the policy. So if somebody has made a claim, so there could be a chance that the sum insured is not added. For example, if I bought a policy of 10 lakh, then it can go up to 20 lakh, 30 lakh if there is no claim. But if there is a claim, then I don't, move from 10 lakh to 20 lakh. On the premium side, I think mostly the insurance companies assess at the portfolio level, keeping in mind the medical inflation as such, how the medical inflation is playing out, how the, overall sustenance of their books is playing out. So I think that gets decided more on the, I would say the premium and the portfolio levels. I think that's how it's. But I think what is also very, very important is, I think in that question is to first have a right sum insured, a higher sum insured. Because most of the people, I think they make a mistake that they take a health insurance policy but mostly it's of, let's say, 5 lakh or 10 lakh rupees, which is grossly inadequate in the times that we live in. And in a city like Delhi, Mumbai, if you go to any major hospital, I think even a week of hospitalization can cost you much more than 10 lakh rupees.
Thank you so much, Siddharth, for rounding that up so well. And the good news today is that Murli's father is recovering very, very well. And we wish him a speedy and a complete recovery. It's stories like these which remind us why the right kind of policy features are so important in any health insurance policy. Well, the next question is coming in from Sakshi. She's from Hyderabad, a lead auditor whose 55-year-old mother was diagnosed with myeloid leukemia. So, Sakshi, what roadblocks did you really face in getting the claim approved? And, you can have your question answered directly from the expert.
Can you help me understand why do insurance companies reject the claim sometimes citing in-depth investigation? What is the process involved here?
So I think, there are few cases, I would say, about 2-3% odd cases to our assessment that, are move into in-depth verification. So I think I would just want to kind of, clarify that in-depth verification does not mean that the claim is denied. It may mean that, the cashless request at that particular point is, moved into a reimbursement mode, which also in many cases, insurance company complete that in-depth verification within the, hospital stay itself. So in-depth verification would mean that, for example, 2-3 things. One could be, let's say, the declaration that you made at the time of policy purchase vis-a-vis what is declared at the time of hospitalization. If there is some sort of a dissonance between that, then the insurance company may call in for in-depth verification. Verification may not necessarily mean that the claim is denied. A lot of claims are paid and paid within a certain time frame, so that the customer does not suffer.
Just curious to know if there is a way to track an ongoing claim in a real-time basis so that I'm not left in dark.
So I think, yes, absolutely. Now with the advent of digital technologies, you can very well, track your claims, status of your claims, where your claim is currently there. On Policy Bazaar application, our customers can track what is the current status of their claim. They can file their claim, they can track the status, and they can upload the documents as well. And similarly, on the all the insurance companies have enabled that facility on their mobile applications, on their different platforms. So it's very much possible for a customer to track their claims.
On that note, let's take a very short break. But when we come back, we speak about more customer queries, which we've lined up for our viewers on the other side of this very short break.
CNBC TV18, the Policy Bazaar Insurance Show. CNBC TV18, the Policy Bazaar Insurance Show.
Welcome back to the Policy Bazaar Insurance Show. And as promised, we move on to the next customer query. And for this, let's head to Pune to meet Rakesh Soni. His 66-year-old father was hospitalized 9 times in a year, and this was due to kidney failure. With the expenses of this nearly going to 17 lakhs, his claim was initially rejected due to something called close proximity. Rakesh, welcome to the show. And of course, our expert is right here with us to answer your query.
My claim was first rejected because of close proximity. What does that mean in insurance terms?
Close proximity means, as the name suggests, that if there is a claim which is right after or very soon after the policy is purchased, which means I bought a policy today and maybe 2 months, 3 months down the line there is a claim in the policy, in which is generally classified as close proximity from an insurance company point of view. What it means is that insurance company tries to ascertain whether that condition was already pre-existing, which was not declared in the policy, or whether it's a genuine case. So typically, this kind of a situation needs some sort of a verification at the insurance company end, and this is generally happens for such or such scenarios only. Obviously, this does not include accidents. So accidents typically can happen at any point in time. But if somebody has bought a policy and 2 months, 3 months down the line has filed for a claim for cancer or any major heart transplants or knee replacements or any other kind of conditions. So in that scenario, these claims can get categorized as close proximity, and the insurance company may call in for verification.
If a disease is diagnosed soon after the policy inception, does it always fall under pre-existing conditions?
No. So in fact, pre-existing condition by the name, as the name suggests, is the condition that you are suffering at the time of policy purchase, or you've been suffering in the past. But if somebody purchases a policy and maybe 2-3 months down the line develops a disease, then it does not qualify as a pre-existing condition, which obviously can happen to anybody for that matter. I think pre-existing by definition is very clear that it is at the time of purchase what you declare. So on that basis, the insurance company takes a decision to put up a pre-existing disease waiting period. But if it is diagnosed post-purchase, 2 months, 3 months, 4 months, or maybe a year later, then it does not qualify as a pre-existing condition.
How can I prove to the insurer that the illness started after the policy purchase?
I would just break that into 2 parts. One part is at the time of policy purchase, it's extremely important that you declare the medical conditions for any member which are being covered in the policy. Be it that condition happened a while back, maybe a few years back, or you're currently suffering, or you had any kind of a surgery. That is one part of it. The second part, if you if there is a condition which got developed post purchase, you can submit all the medical documents which are available at your disposal to the insurance company, stating that this disease got developed at a later stage. And at this point in time, if there is a kind of a disconnect or dissonance between the insurance company, that is where a strong broker, a strong distributor like Policy Bazaar comes into play, which can independently assess and obviously support the customer to represent the case rightly to the insurance company. What the team also does a lot of I would say hand-holding for the customer, so that the claim is adequately paid and is also kind of proven that the illness may be started later on. I think that is very, very important. And lastly, I would say is claim samadhan is a opportunity for the customer, and at Policy Bazaar, we take a great pride in terms of bringing the customer, the insurance company all together under one roof. Any dissonance is kind of dissipated. So, a person and a customer is given a fair platform and is given a fair hearing to, kind of present the case rightly.
For conditions like kidney failure that requires multiple hospitalizations, What's the ideal sum insured and policy type?
See, I think it's a very, very pertinent question because a condition like kidney failure can require multiple hospitalization, and each hospitalization can, really cost a whole amount, which is a significant amount. So I think in that scenario, what we recommend to each and every customer is now two options. One, you can go for at least 25 lakh rupees as a sum insured. If you're living in a metro, that I would say is a minimum. But ideally recommended would be, 1 crore sum insured or unlimited sum insured now, which is available in a couple of plans, so that, all your scenarios are covered or most of your scenarios are covered, because each of one, see, any such chronic illnesses can require multiple hospitalization, and the bill can run into 40, 50, 60 lakhs or even higher depending on the severity of the condition. In fact, there are so many guests on the show that the claim amounts have gone up to 70 lakh or even higher, even up to a crore or more. So I think that is a, I would say, a humongous amount of money, which any family in India, it's very, very difficult to pay that money, and specifically, when you're right there at the hospital, it's extremely difficult. So I think it's very important that you take at least 1 crore of sum insured, so as to kind of prevent any scenarios. And ideally, now you can move on to unlimited sum insured, so that any such scenarios or any major scenarios are covered and your family is financially protected.
Given my father's age and health, how can I make sure further claims are not delayed or denied?
So I think a couple of things that one can take is, one, obviously ensure the right sum insured, that is there. The second is, in case there is a planned hospitalization, do inform your insurance company and obviously your broker distributor, or if you are a Policy Bazaar customer, you can inform us, so that accordingly the insurance company is intimated about the claim and the pre-approval can come in, and the hospital admission is seamless. That is one thing. Second thing is, I think, look at if your policy currently has any kind of a co-payment or a sublimit, so that you don't come in for a shock at the time of claim. So I think it's very, very important that you should assess that if there is any room rent restrictions, if there is any co-payment, if there's any deductible, if there are any sublimits on certain diseases. So I think all these 4-5 things one must take care of. The third thing I would say is, in case there is any disease that is developed during the policy, it's always good to inform your insurance company as well about it. So I think once you have all these things in place, there is no reason for the claim to be for any adverse impact on claim.
Well, let's move to the last policy holder for today's episode, and that is Mr. Siddharth Sethia from Mumbai. He's president at Peninsula Land.
Yeah, thank you for having me. So, one of the questions that I would like to ask is that, even if a policy has a higher coverage amount of, let's say, 30 lakhs, and if the hospital submits an estimate of, let's say, 15 lakhs, normally what I've seen in my experience is that the insurer gives a pre-authorization of only the 50% of the estimate that's been submitted. So, insurer might give a pre-authorization of only 7.5 lakhs. In this kind of a scenario, during long hospital stays of more than 20 days or so, this leads to a lot of out-of-pocket expenses for the insured person, because the pre-authorization is only 50%. So why do insurers only go for a 50% of the 50% of the estimate as a pre-authorization, while even though the sum insured is far higher?
So I think it's a very, very important question, and I think it addresses a large part of the consumer market. And in fact, as a policy holder we feel. See, I think any hospitalization, in many scenarios, there are two types of scenario. One is a fixed length that, for example, if somebody is going for a 2-day hospitalization or a 3-day hospitalization, whereas the estimate is fairly accurate, vis-a-vis certain treatments wherein the length of stay may or may not be ascertained at the time of admission. Pre-authorization is provided by the insurance company basis the initial estimates by the hospitals. I think in this scenario, what can happen is, since the customer should not be in a situation to pay the money from their own end, I think the customer can reach out to again the broker distributor to get the pre-authorization amount extended, so that it can very well cover the daily expenses, and the customer does not need to pay from the from their own pocket. And that's the whole point of health insurance. In certain cases, what happens is, since the estimates are very initial, there are also a lot of I would say contracts between the insurance company and the hospitals. So I think basis the initial estimates, insurance company does provide certain pre-authorization amount. And at the time of discharge, once the treatment is completed, the customer is ready to be discharged, the whole that estimate is turned into an actual basis, which the insurance company, if somebody's treatment finally ends up at, let's say, 15 lakh, then the insurance company, adjusts that entire amount basis that. Now, the second part of it is that what are the amounts? So now, in fact, and this is where I would come in, that a rider like consumables can help you get a lot of amount, because that's generally a deductible. That was, let's say, 10% of the hospital bill. So if 15 lakh is the hospital bill, then 10% would be about 1.5 lakh would be dedicated towards consumables amount, which was earlier, pre-COVID era, that amount wasn't payable because the insurance companies was not covering those expenses in their in their policy. But now a lot of insurance companies in their plans have consumables as a rider, which makes this 1.5 lakh also a payable amount. So I think in this process, I would say that if in case the customer feels that the bill is running past the pre-authorization amount, then the customer can, or the policy holder can, reach out to the broker, to distributor, and request the insurance company to increase the pre-authorization amount, so that the customer does not need to pay from their end. And like I would say that a lot of customers do come, and we request all the Policy Bazaar customers to come in case they face any such issues, or the person can be sent to the hospital from Policy Bazaar end to ensure that these nitty-gritties are solved. The customer faces a completely hassle-free claims experience.
With that, we come to a close as far as customer queries and the answers from our expert are concerned. It was very insightful in understanding certainly these queries and how they were answered real time. Thank you so much, Siddharth, for answering each of those questions in so much details. I'm sure they were helpful to, of course, all the people asking those questions and all the people, of course, watching the show itself. And as always, we come to a close as far as the episode itself is concerned. We tried putting some positive stories in today's episode, claim stories rather, because the belief certainly is that only positive stories will attract more policyholders, and hope that happens. Thank you so much, Siddharth, again. And we'll come back soon with the next episode very soon with new guests. Till then, keep watching and stay safe, stay insured. Thank you so much.
CNBC TV18, the Policy Bazaar Insurance Show.
We're joined by Union Minister Jyotiraditya Scindia, who's handling crucial portfolios relating to telecommunications, to communications, India Post and Department of Northeast Region as well. Minister Scindia, thank you very much for joining us.
Always a pleasure, Parikshit.
This is a time when the government is brainstorming with the industry ahead of the union budget. There is also a discussion within the government on the next generation reforms after GST. Could you give us your thinking on what needs to be done now for the telecom sector in order to make it easier for companies to get into India, make investments for the future? What can they expect in the weeks and months to come?
So first of all, this is already a deregulated sector. Secondly, my process that we undertake both in the Department of Telecom and on the Department of Posts is an iterative process. We have set up 6 advisory groups in the telecom sector, covering the whole value chain within telecom, from equipment manufacturing to service providers across the board. And those 6 advisory groups meet with me on a regular basis. On a regular basis, issues are brought up, issues are facilitated, resolved, and we move on to the next items on the agenda. So for us, within the DOT as well as Department of Posts, it's an ongoing process. For example, in the Department of Posts, we're coming out with 6 new products across mails and parcels. We're developing SLAs, service level agreements, in terms of responsiveness, delivery, across those 6 products. So it's an iterative process. So we always are, if you will, if I can give you an analogy, on a moving treadmill and never static.
All right. So let me ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done. But that is still work in progress. The judgment, as you know, is a very recent one. Once the contours of that environment can be shaped, then we will certainly bring it into the public domain. But right now the judgment needs to be evaluated, and against the judgment, what is possible, what is not possible needs to be evaluated, which is what the Department of Telecom is working on right now.
Right. Now, as per reports, the AGR dues of Vodafone amount to around 83,500 crore rupees. Now, what would be the contours of the package? How would you look to reducing the liabilities for Vodafone?
I'll repeat what I just said. It's being worked on within the department at this point of time. It's too early for me to comment on that. Once the department comes up with what is possible and what is not possible, at which point of time I will exercise my own opinion on that. But we are a little early in the process for me to make a comment on that at this point.
By when do you plan to complete this assessment and maybe come out with a decision?
I think in the next couple of weeks we should be in a position to be ready to make a comment on it.
Right. So maybe a final decision on how the government will give a relief package and its contours to and the contours of that relief package, that will be clear by year end?
Certainly so, hopefully, yeah.
All right. I would also like to ask you, the government is a 49% equity holder in Vodafone Idea. How do you see the growth of the company here on? What are your expectations? Because you're a major stakeholder.
So I do believe that they have a robust capex program in place. They also have raised one of the largest public offerings in the last 6 to 8 months in terms of their equity. They've done an FPO, follow-on public offer. There is certainly the overhang of the dues to Government of India. They're a very low leverage company at this point of time. And the reason for that is because the dues of GOI are considered as leverage by banks. So I think once we are able to shape the contours of what can be done, it will also give them space to maybe raise some amount of debt. The cash flows are fairly robust going forward as well. But certainly they will look at investing in the network as well. But I think that's all for management to look at. We are a shareholder and our responsibility ends at that. The management of the company, the future roadmap of the company has to be fixed by the management and not by shareholders.
Right. You had told us in our recent interaction that you don't want to make this a PSU. Now, after the Supreme Court judgment, has the view changed?
Not at all.
So no further increase in stake?
Not at all. The minute you cross the 49% Rubicon, you are then tethering on the border of making it a PSU. And that certainly is not the intent of Government of India.
Right. I would also try and understand from you, because there have been a lot of reports on the contours of this proposed relief package. And those reports said that the Telecom Ministry is looking to significantly reduce the AGR dues liability for Vodafone. And there is a plan to include in the relief package the interest, penalty on interest, and interest on penalties as well. Could you give us a confirmation?
I have said that to you, and I'm saying it again. It's too early for me to comment. Let the Department of Telecom work on the contours of the judgment of the Supreme Court. Based on the contours of the judgment of the Supreme Court and the rubric that they have defined, see what is possible and not possible. It's too early for me to comment on that.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
Right. You know, I would like to ask you about some other developments that have been taking place within the telecom industry. This is with regard to the SIM binding initiative that you've just launched. And this is for all messaging apps such as WhatsApp, Telegram, Signal. All of them have to comply with the SIM binding norms within 90 days. Why has this been done? And what is the larger intention? Because the industry is saying that there should be a pause on this for some time to allow for wider consultation.
So let me say this, that technology is a wonderful unifier. And just look at both the breadth and depth of technology permeation in India. You have today close to about 1.2 billion mobile connections in our country. We have crossed 1 billion internet connections in our country. And today telecom is more than a digital highway. It really opens up the vista for every single person, urban or rural, north, south, east or west, from any part of our country to connect to the world. And therefore the digital carriageway is, even though it's an invisible carriageway, in many ways is an even more, or rather bigger propellant of economic growth than possibly physical highways. Having said that, it does also carry with it the ability for non-social forces to be active. And that certainly is in the area of fraud, in the area of cybercrime, across the board. And I think it's extremely important to be able to, whilst providing the gateway for every single citizen in our country, also protecting them from cybercrime, from fraud, and so on and so forth. And this is consistently an issue that has come up. The fact that I can insert a SIM in my mobile, get a WhatsApp connection, remove the SIM from my mobile, and be without an identity, using it for cybercrime and cyber fraud. In the last fiscal alone, people across the length and breadth of our country have lost close to 22,800 crores to cyber fraud. It is my responsibility as telecom minister to protect my consumers. And this indeed is a step towards that. As far as consultation is concerned, we've had 5 to 6 rounds of consultation, starting in early April into June, latest even close to November. Across the board, there has been a clarion call for this. From a security perspective as well, it's extremely important. And therefore, this is something that is the need of the hour. It also dovetails into all the other steps that we have taken to protect our consumers, from Sanchar Sathi to Astra to Kayor to across the board. And I think it's important to be able to know the identity of the person who is using these platforms.
Right. So clearly no pause, because industry is seeking that we need to think about large volumes of frauds originating from outside the country. Fraudsters can obtain Indian SIM cards via mule accounts or remote devices, and therefore there should be a pause. So there is going to be no pause now?
There is always a view of looking at every protection clause as a glass half full or a glass half empty. So what you are saying to me in your answer or your query to me is that there are other ways to do it. Does that mean that I should not circumvent the most obvious ways to do it? I don't buy that.
All right. The next question, there are reports coming in that the Telecom Ministry has asked private mobile phone makers to preload a government-owned cybersecurity app before selling phones. Now, this is for the security of customers all around the country. Has that been done? Have the directions been issued? And what exactly is the expectation?
So all of this ties in with the security of the customers. So Sanchar Sathi portal and the Sanchar Sathi app has done a yeoman service. And let me say this on television with you, and let me thank our consumers also, because the success of this could not have been possible unless there was a Jan Bhagidari approach. And it is due to that Jan Bhagidari approach that we've been able to protect our consumers. This is a step in that very direction. If you're able to load this on, then if I lose my phone, immediately that app is on my phone, which I can then register and make sure that my phone is not used by any fraudulent individual. It's a step to protect the consumers at the end result. If they have lost their phone, they can then locate their phone in a much quicker way. And we've got many stories of, we've traced almost 7.5 lakh phones, recovered almost about 6.5 lakh phones through this portal, and therefore this will be a step in being for customers to be able to help themselves from a security perspective.
So is this mandatory, and by when do they have to comply, all phone makers in the country?
I believe that this is being issued in the next couple of days, and it will give people time to be able to adopt it.
All right, so it will be mandatory and everybody will have to comply within a certain timeline. Now, speaking on the issue of spam calls, you know, there are days when you get more spam calls than genuine calls in a day. As telecom minister, how irritated do you get with this, and
so
what customers can expect?
Parikshit, let me tell you that this was certainly the case about 6 months ago. In the last 6 months, the steps that we've put in place, Sanchar Sathi portal has had close to about 10 crore hits. Sanchar Sathi app has almost about 1 crore hits. Our Astra software, in terms of recognizing people who use multiple, the same credentials to get multiple lines, has disconnected close to about 82 lakh people. Our financial fraud risk indicator has been adopted by the RBI and mandated all banks and financial institutions to be part of it. We have a digital intelligence unit with 750 stakeholders on board. to be able to protect people's financial resources, because this digital expressway is now also used as a banking expressway. So I think all of those steps are in place which are yielding great dividends to the consumer. Let me give you an example. Kaior, which was a calling line identification software that we put in place, we had close to about 1.35 crore spoofed calls when we started it off. Today, those running these rackets, both domestically and internationally, have realized the efficacy of the software. And the number of spoof calls coming into India or from within India being generated has dropped from 1.35 crores a day to only 1.2 lakhs a day. So there's a 97% drop. Why? Because you put a firewall in place to protect your consumers. And that's also my job as Telecom Minister, which all of these elements, Kaior is only one element, all of these elements together are putting in place to protect my consumers.
On the issue of satellite spectrum allocation, there are still some consultations going on between the Department of Telecom and TRAI. By when can we expect the final decision and the spectrum to be awarded?
So that depends on TRAI. We've sent a back reference to them. As soon as TRAI examines it and reverts back to us, we'll be ready. But I also think that there is a justification for deeper, wider, and extensive consultations, both between DOT and within TRAI. Both have very, very deep reservoirs of knowledge. There must be that exchange so that when we come out with a policy, everything has been explored. The other option is to come out of the policy with alacrity without doing your due diligence. And if you do that, then someone like you will have another 100 questions for me, right? So I'd rather wait and do my due diligence properly before I come out with the policy.
So what is the current point of difference, which is taking time?
There's no point of difference. It's a point of extensive discussion and consultation in terms of what the rollout of this system should be. What should the percentage of AGR be? How do we ensure maximum inclusion? How do we make sure that those who are not connected get connected? So all of those factors require deep consultation. You may aspire for a certain policy. There may be drawbacks of that policy. That needs to be examined. So all of those dimensions need to be examined before you enunciate a policy.
Right. We read that the DOT is planning to impose a 5% annual spectrum usage charge on satellite internet providers. Will you be looking to give a discount too in order to connect hard to reach and remote places?
So let me not comment on it. There are a lot of ideas that are on the table within the department, from me. So let that all be refined, let that be distilled, and we will come out with an efficacious policy.
By year end, or you think this is going to spill over?
Again, this is something that's on TRAI's plate. I do not want to speak on behalf of them because they are a regulator and I must respect their time and their judicious judgment based on the policy that we have come up with.
Just a prima facie view on the demand for digital Bharat Nidhi, subsidy for user terminals for satellite broadband services. How important is that?
Well, I think it's important to understand that DBN is a Nidhi which is not individual focused. it is area focused. Telecom is an industry which is area focused, not individual focused. So I don't think it would be either wise or pertinent to look at DBN as an alternative for that subsidy. As I mentioned to you, we are examining various modes for that inclusion. So let us come out with a policy which may be sounder than that.
Right. To speak to you about the telecom PLI scheme, you recently gave an analysis, the results of the PLI scheme, and you said it has generated 91,000 crores in production, 96,000 crore worth of production, 18,100 crore worth of exports, 30,000 new jobs. What about the next support for the industry in the form of PLI scheme, in the form of PLI 2.0? What is being considered for the future?
Let us first get the granular results for PLI 1.0. We still have a year to go. Based on that, there's been a great fillip that has come to the telecom equipment manufacturing cluster based on this PLI 1.0. And then we will certainly see what else can be done going forward.
Right. Speaking about India Post, a project that you've been working on very keenly over the last 2 years, you want to make this a public logistics giant. In terms of gaining a market share in the delivery ecosystem in the country, what's really the vision that you're working with?
So the vision that we are working with is that this must become the logistics powerhouse of the country. We have close to about 1.65 lakhs points of presence. No distribution channel, may I dare say, not in India, but in the world, has that delivery pipeline that India Post has. The world is moving very, very rapidly towards delivery of product at doorstep. We believe that we can be a huge fulfillment aggregator on that, not only directly, but for other fulfillment agencies as well. So mail and parcel, even though mail worldwide is going through decreasing volumes, but we see that very targeted timeline-specific mails have a very, very important revenue niche still in India. We're coming out with 2 products. One is a 24-hour speed post and one is a 48-hour speed post with guaranteed SLAs. Our aim is to capture close to about 20% and 40% of that market over the next 5 to 6 years, taking our cumulative market share to about 8 to 10% in this space. The same in parcels. Not only are we working at directly delivering parcels, but also becoming the fulfillment aggregator for a lot of front-end firms, like an Amazon or a Shiprocket or a Flipkart. And we've tied up with a number of them. Third, we're also looking at citizen-centric services, where through our 450 Passport Seva Kendras, we've garnered close to about 250 to 300 crores worth of revenue over the last fiscal. Through our Aadhaar card services, almost 13,000 centers there, close to about another 250 crores in terms of revenue. We've tied up with AMFI to become the mutual fund distributor for a number of mutual funds, which will again become a revenue growth area. So 5 years down the road, we're looking at turning India Post from a cost center into a profit center, fired mainly on 3 engines: mail, parcel, and citizen-centric services. PLI and POSB both are the financial sector verticals, which will remain a very fundamental part of our play, but really becoming a fulfillment aggregator for delivery across the length and breadth of our country.
Growth plans, what are your expectations from BSNL going forward?
So
what can we expect in FY26 end and FY27?
BSNL is charging forward. Our H1 numbers, we've increased our top line by almost 14% compared to H1 of last year. Our EBITDA operating margin H1 of this year is up almost 34% compared to last year. Last year we closed at 5,139 crores operating margin. This year we hope to take it up to close to about 7,000 crores. So on a cash basis, BSNL certainly has turned the corner. There is a huge depreciation hit because of the 25,000 crore capex that we underwent last year, which is almost a 2,500 crore non-cash item on our P&L. So as long as my operating margin is increasing at a fast clip of greater than 50% year on year, that's something I'm extremely satisfied about.
Right. My final question would be about your message to the industry. Out of all these hearings related to Vodafone and AGR dues that have been taking place, while the government considers something for the future, considers a resolution plan, for the overall health and the growth of the sector, what message would you leave us with?
Telecom industry is extremely robust in India. Please look at the worldwide comps. And it's only India that is growing at such a fast clip in terms of customers, in terms of top line, in terms of bottom line, at the cheapest cost. India is a great example of high volume, low cost. We are the lowest voice carrier in the world. We are the lowest data cost carrier in the world, at close to about 8.47 rupees a GB, which is 11 cents. On the world pricing index, India is at 1.49, the international pricing index, compared to a country like the United States of America, which is at 49. So we by far are the cheapest provider of quality voice and data across the globe.
All right. Thank you very much for speaking to us, Minister.
Hello and welcome to Finding Alpha. I'm Nigel D'Souza in the Mumbai News Center. Well, global steel markets are at crossroads. China's cutting production, but exports are staying elevated. Trump's tariffs are adding fresh uncertainty, while Indian steelmakers are seeking safeguard duties as domestic capacities do rise. We have with us today in our studio Sumangal Nevatia, the Director of Kotak Institutional Equities, who joins us to break all of this down and tell us what it means. Well, Sumangal, first of all, thanks a lot for coming down. It's been close to a decade, I think, so that we have been talking and understanding the sector, and your inputs have been very, very valuable. But today, you're going to be shedding light on a lot of these stocks that we're going to be talking about and also on the sector. But thanks a lot for coming down.
Yeah, thank you, Nigel, for having me here. So you're right. I mean, China has been a weak part and a drag on the overall commodities demand this year, right? But if you see what is holding commodities is the dollar weakness, right? Yes. So if you look at last 1 year, dollar has been lower by around 8-9%. So what a weak dollar does, it raises the cost curve. Because in the in terms of dollar, the cost curve increases because most of the producing countries are non-US.
Yes.
At the same time, it also increases commodities demand because commodities become a bit more cheaper for the non-US currencies, right? So a weak dollar has helped both in raising the cost curve in dollar terms and also boosting demand, which has held up the commodity prices this year.
Okay.
Right? Now, coming to your question on China.
Yeah.
So if you see, China set a 5% GDP growth target this year, and it is very close to achieving that, right?
Correct. But the stimulus really hasn't lived up, right?
That's right. That's right. So at the start of the year, we all were expecting a big property stimulus by China,
yes.
But that has not come. And despite that, they are close to achieving their GDP growth target.
Correct.
So what has helped is very strong exports, right? And that has been a big surprise element,
yes,
given all the noise around the US tariff war.
Yes.
Right? So if you see from a top-down perspective, what China is doing is it is on a two-speed growth trajectory.
Yes.
So you have exports and manufacturing on a strong track, and you have domestic consumption and real estate on a weak track.
Yes.
So till the time exports are strong, they are delaying the stimulus as far as property is concerned, right? So if you look at this year, exports are up 5%.
Yes.
US exports are down 20%, and they are diverting to non-US at around plus 9%. So this diversion is underway, and it's not just a 2025 phenomena. Now, this is happening since 2018 when Trump came in for the first time and the trade war started, right?
Yes. Yes.
So that time, if I remember correctly, US was around 20% of China's exports. Today, it is 10%. Latin America and ASEAN are the main diversion countries. That was around 18%. Today, it is almost 30%.
Yes.
Right? So till the time exports hold up, right, you will not see a property stimulus.
Got
right?
it.
In our view, next year also, with the pickup in industrial activity, exports will remain strong. China will try to delay as much as possible the next stimulus in terms of property.
Okay, all right. But this, this Chinese exports are 10 million tons odd. That's a little bit of an issue, but let's see how that goes in the time to come. All right, let's focus, since you mentioned Trump, let's focus on the United States Section 232. The tariffs out there, that's got implemented, and that's what's affecting aluminum price, players globally.
Yeah.
Particularly a company like Hindalco, which is listed here, because they get indirectly impacted or directly impacted by a Novelis. But there's some confusion. Does Novelis get hurt, or does Novelis gain? Because the Midwest premium on aluminum, that's moved up from what, $500 to more than $1,500. So what is this call with regard to Midwest premium moving up? Beneficial for Novelis, or is it hurting them?
Yeah. So see, China has put almost 50% tariffs on aluminium, right?
Yeah.
And it's quite irrational and impractical to continue. I mean, China is still importing, US is still importing around 80% of its aluminium requirement, right? So aluminium has become 50% more expensive in US. And this should ideally reflect fully in the local physical premium, which is the Midwest premium.
Correct.
Right? Now, earlier, Midwest used to be around $500, as you said. If you add 50%, it should be around $2,000.
Right.
But Midwest premium is still around $1,700 to $1,800. So a part of the market still hopes that this irrationality will reverse.
Yes.
There will be some exemptions or some rollback, right? Now, in the interim, what is happening is the only company which gets directly impacted is Hindalco through its Novelis business.
Yes.
So Novelis is into downstream rolling business. Ideally, aluminium prices does not impact them, right? But what is happening here is they are importing aluminium, paying 50% duty, and on the end product, they are getting only up to 45% pass-through. So there is some bit of an under-recovery, which is impacting the profitability of Novelis.
Right. It hits them negatively, that is. Right.
On the other side, scrap is also a raw material for Novelis, and scrap is exempted from Section 232. Right. So for them, raw material is becoming much more cheaper. You will hear the term scrap spreads.
Yes.
That is a net beneficiary. But combining these two, they're still losing out. Right. So our sense is, had these tariffs not been there, the margins would have been somewhere around $520, $530.
Right.
Our estimate for FY27 is somewhere around $460. So we are expecting the tariffs to continue and have a dent on the profitability.
Okay, all right. Let's delve a little bit more into aluminium itself. What's the near-term outlook for aluminium, and do you expect a deficit on the global front? Is it? I mean, what would your positioning be basically in the aluminium space?
Okay, so among all the commodities which are relevant for Indian metal equities, right, which we really care about, aluminium is the commodity with the best fundamentals, right? So on the demand side, you have structural tailwinds in terms of the entire energy transition drivers, right? So be it EV adoption, be it renewable energy build-outs, be it grid upgradation, everything is aluminium intensive, right? So they have structural growth tailwinds. On the supply side, it's not catching up, right? So China 8 years back had put a capacity cap of 45 million tons. They are still walking the talk. And now they are operating at 95% utilization. So they cannot grow beyond a point, right? Remember, last 20 years, China was the biggest culprit in impacting the aluminium cycle because they were relentlessly adding aluminium capacity. Ex-China, in the developed countries like US, Europe, and even Africa, there's a big issue of power supply contracts, right? The aluminium companies are not able to secure power contracts, and they are competing with the likes of data centers who are competing for the same power, right? So supply is not catching up. So from a medium-term perspective, you are in a structural deficit as far as the commodity is concerned, right?
On aluminium, there's going to be in a deficit for the next 2-3 years, you think so?
Yeah, I think it could be 4 to 5 years, and it depends how the supply reacts, right?
Okay. So, and then, you believe that aluminium prices will remain elevated then? Since we have a power scarcity, there's a battle for power, which is in short supply as it is globally. There's going to be a deficit on aluminium. So then you expect LME to remain at elevated levels?
Yeah, so it has to be elevated beyond the cost curve, right? The cost support is around $2,400.
Okay.
This year, we think it is slightly gone ahead because of the favorable macros which we discussed in terms of weak dollar, right? Today, the spreads are around $1,700, which were the spreads in Feb 22. And that time, if you remember, the entire Russia-Ukraine war had started, and there was massive uncertainty with respect to how will aluminium supply continue from Russia and Ukraine, right? So maybe near term, there could be some pullback or some consolidation, but the medium term story is very strong.
Okay, aluminium looking strong. Give us your, your picks then, your preference in the aluminium space. I believe, unlike most sell-side brokerages, you're not very positive on Hindalco. So what is the preference? We have 3 players, Vedanta, Nalco, as well as Hindalco.
Yeah, so I mean, you're right. I mean, so Hindalco is one of the leaders in cost and margins, right? And we've been very positive in the past. But today, we don't see the risk reward very attractive for Hindalco. Our preferred play is Vedanta, right? So just to share some thoughts on Vedanta, their aluminium and power business is undergoing very impressive growth, right? So aluminium capacity is going up from 2.5 to 3 million tons. They are becoming much more backward integrated. So alumina refineries are coming up, coal mines and bauxite mines are coming up. So the cost will become much less volatile and settle at a lower level. Right? And this is growth over the next 2 years, not future out. Even on power side, they are going from 2.5 gigawatts capacity to 5 gigawatts by the end of this year, right? So these are the 2 businesses which is roughly around 55% of the value, which we are really constructive on, right? Number 1. Number 2, in the last 5 years, the debt at the parent, VRL, was a big overhang, right? So that has got deleveraged from $10 billion to today around $4.5 billion. And now very sustainable, given the brand fee and the dividends it gets from the India entity, right? And then you have the demerger trigger, right? NCLT recently concluded the hearings. You might have an approval in the next 2 or 3 weeks. And by March, you will have 5 different entities, right? And
so there's an upside trigger then to that 550 rupees odd, if once the demerger goes through.
Yeah.
That could be the case. All right. And I think Nalco is almost at par with, your target price is almost at where the current share price is at. What about Hindalco? What don't you like? And just tell us a little bit about this capex. Going up by double in such short time. Give us a quick comparison over there.
Okay, so one is, so Hindalco over the next 2-3 years is in the peak of its capex phase, right? Yeah. So they are spending and growing across businesses, but all the growth is coming in FY29.
Yeah.
Very back-ended, right? Number one. Number two, there's been a lot of lapses in the project execution, right? Yeah. So they are undergoing this major expansion in US, putting up a greenfield capacity of around 600,000 tons. When they announced it was $2.5 billion. Today it is $5 billion, right? That capacity at max will make around $600 million. So the post-tax ROCs are somewhere around 6-7%.
Yes.
Now this is lower than their WACC, right? So this project is return dilutive on our numbers. So if you compare the execution of few peers like Steel Dynamics, they have announced the project 6 months later and now completed the project 1 year in advance at around $2.6, $2.7 million.
Got it.
So versus peers, execution has been disappointing. Yeah. Okay. Over the next 2-3 years, it will be negative free cash flow. Growth in India is coming from 29.
Yeah.
So these things, I think, are still not priced in the valuations at around 7 times. So that is why I think we look for a better entry point in future to get constructive on the name.
Got it. So that's about aluminium. Let's focus now on the steel space. The government has withdrawn that quality control order.
Yeah.
If you could help us out, the rationale behind that, and also that provisional safeguard duty that was in place, that got expired. In fact, I had a chat with the steel secretary. I'm sure you would have had a look at that conversation.
Yeah.
Could you tell us, what are you factoring in? Do you believe the safeguard duty will come?
Okay, so first on the quality control, right? So it was a recommendation by Niti Aayog to remove all these non-tariff barriers, right? So you had quality control orders, steel import monitoring system, you had NOC.
Yeah.
So what these barriers were doing, Nigel, was creating an artificial friction and bottlenecks, right? There was a lot of requirement of finished steel, downstream steel, which was not sufficient in India, but imports had these bottlenecks in between, right? And these measures were condemned a lot of international forums as well,
okay,
right? Because few requirements like certification at the factory gate of an exporter. I mean, India did not have the infrastructure to adhere to these compliances which it put, right? So it is good for the overall economy. Now, steel prices had gone from a discount to import parity to a premium to import parity because of these artificial barriers, right?
Yes, quality
so it will take some bit of a softening on that front, right? And then on your question on safeguard duty, right? I mean, that's $1 million question, right?
But what are you all factoring in? It comes?
So, I mean, before I give you a final answer, right? Let's go a little bit in the background, right? It was introduced 6 months back. Now, till FY24, India used to import around 6 million tons. FY25, we imported 9 million tons. So it was a 3 million ton increase on a 150 million ton base, right? Just 2%.
Yeah.
Right? Somehow the case of measure was very weak, but steel industry somehow pulled it off, right? Last time when these barriers were imposed in 2016-17, that time the entire steel industry was bleeding.
Yeah.
Right? Balance sheets had immense leverage and the banking sector shared the pain. So that time the case of an import duty, anti-dumping duty, MIP, all these things were much stronger. This time the case was much weaker, right?
But yet they managed to pull it off.
They pulled it off, right? So we were surprised that time. I mean, currently everyone's expecting it to be notified very soon. This year, even we are building in, but we are not building in from next year, right? Okay. So in case it doesn't come, which the likelihood is increasing with each passing day, right? Yeah. And given all the discussions the country is having in terms of FTA agreements with all the countries, there is a case of it not coming through,
okay,
right? So we are looking at some 5-7% kind of earnings downgrade for FY26 in case it doesn't come. Today, steel prices are at 2-3% premium to import parity without the duty. there will be some softening in terms of 2 to 3%, not very significant.
So you're not sounding very, very enthused that it's likely to come out, or not very, very hopeful. But let's see whether or not it comes about. And if it doesn't come, then there could be some softening. What is the preference in this space between JSPL, JSW Steel, Tata Steel as well as SAIL? What do you like the top pick?
So I think before we get into stocks, right, let me, if we have time, explain the framework on how we are looking at the steel sector. And from a medium-term perspective, we are very constructive on the entire space, right?
Okay.
So one, there is a lot of, the entry barriers are very significant, right? So steel is the most complex manufacturing process and most land-intensive and capital-intensive, right? So for a single steel plant, you're looking at 2,000 acres of land, right? That is
just to come in on that point. When was the last time? I mean, in the last 10 years, if you have a rough number on greenfield steel capacity that came on stream, how many projects came on, since you're saying it's so difficult?
Yeah, so in the last 15, 18 years, you can actually count. There's been only 3 greenfield projects in India.
Oh, okay.
You had NMDC, you had JSPL's Angul, you had Tata Steel's Kalinganagar, right? So you had the likes of POSCO and ArcelorMittal trying for a decade to acquire land, eventually giving up after 5-6 years. POSCO looks like it has given up the India dream. ArcelorMittal entered India through acquisition of SR, right? And then JFE is playing the India growth through its equity in JSW.
Yes.
Right? And India is one of the only large countries which is growing at this pace.
Yeah.
So the market is consolidating in a big way, right? You have only 4 private companies who are able to add capacity. JSW, JSPL, Tata Steel and ArcelorMittal, and they are taking all the incremental demand, right? So first is on the this. Second, you have a structurally growing demand, right? So last 5 years, it's been 8-9%. And given where India is in terms of infrastructure and manufacturing push, it looks like this high single digit can continue, right? And the third point is that you have a very favorable policy regime, right? So you have 7.5% import duty. The government taxes exports of iron ore at 30%, right? So when China is bleeding since last 3 years of the steel industry, Indian steel industry is still making mid-cycle margins because of this.
And balance sheets are in good condition as well.
Fourth point, yes, balance sheet is in very strong condition. I mean, currently, because of 2-3 good years post-COVID, these companies have reached to a level where they don't have to lever up to grow. They can just use the operating cash flows to add capacity.
Got it.
So with these 4 things, I think there is a very strong case of re-rating, and one has to use a slightly different lens to value steel companies versus the historical commodity lens.
Got it. Got it. All right. And I think the top pick should come up for our viewers on the screen. We should just pull up a chart with regard to all the steel companies that Sumangal covers with their target price as well. I think JSPL is one of the stocks that Sumangal has liked in the past as well. That's the target price out there. And JSW Steel rather closer to that target price. So I think JSPL would be Jindal Steel and Power now, as it's called, is one of the top picks out there. I'll tell you what, take a short break, come back. We'll focus a little bit on the recycling theme as well as on graphite electrodes. Don't go anywhere. Welcome back. You're tuned into Finding Alpha, and we have with us Sumangal Nivatia, Director of Kotak Institutional Equities, who's helping us with what's going to shine in the metals pack. Well, Sumangal, when we talk about metals, a lot of people remember that golden run, I think 2017 to 2019, on graphite electrode stocks. And we get a lot of queries. We've got a lot of queries as well. What about HEG? What about Graphite India? You know, the management tells us when HEG joins in, they say that that was a golden period. We're never going to see 67%, 70% margins. But what about now, between the two? We have two listed players. What's the outlook out there? And what's the call on graphite electrodes?
So, Nigel, we don't cover it. So, I will not have a view on the stocks. But let me just share some thoughts on the sector, right? Now, graphite electrode has a chronic issue with respect to competition with China, right? 10 years back, it was not there. In the last 4-5 years, Chinese electrode quality has caught up in terms of the quality, and now they are competing with the ex-China companies. So if you look at GrafTech, which is listed in US, which is the leader, and which is backward integrated with needle coke, they've been into EBITDA losses since last 2 years. Only recently, with some help from the tariffs, they are making positive EBITDA, right? So competition from China is a real thing, which a lot of industry players do not appreciate, number one. Number two, the expectation of a lot of EAF capacity coming up and then the demand getting boosted is a gradual thing, right? I mean, we don't see it happening suddenly. It will happen over the next 3 to 5 years, but nothing in the next 1.5 years, right? So this space has always seen a very strong narrative after that 2018-19 bull years, right? When they made $10,000 per ton margin, right? But I think the reality will be lacking a little bit at least. So investors have to be a little bit more patient. So that's my view.
So that's interesting because I think the Chinese quality actually is catching up with, normally we have a graphite electrode guys that say quality is a big differentiator. And maybe in the near term, they're still not out of the woods. The story could play out in the longer term. For the next 2 years, there could be some pain. Did I summarize it okay?
Yeah. Okay. And just one more point, sorry, Nigel. Last time when they did that $10,000 margin, right, versus historical average of $700-800, it was more of a timing arbitrage, right? Their needle coke, which is the raw material, was locked for 1.5 years. But graphite electrode, they could sell on spot basis at the lower prices. So that is why the margin. So we will never see those levels again.
That was a beautiful phase, and I think the managements admit as well, they may never ever see that again because the selling price went up and the raw material was secured at lower prices. But another space that you track is the recycling space. And we have Deepak, who writes to us from Jaipur. He holds around 100 shares of Gravita, 2,115. Wants to know what's the outlook on the stock. You were positive on this name. The stock has seen a fair correction, but it appears there is an industry tailwind. What's your view now?
Yeah, so we picked up this theme sometime 1.5 years back, right? So the entire regulatory regime for recycling is turning out very favorable, right? So government is quite focused on pushing the circular economy and sustainability. And if you look at metal recycling, lead recycling, almost 70% of the industry is unorganized, right? In the organized space, you have Gravita, which a 6-7% market share. Last 20 years, they've grown at 20% CAGR. And because of these policy tailwinds, battery waste management rules 2022, EPR, you will see a gradual formalization of the industry, right? So Gravita is doubling its capacity from 3.5 lakh to 7 lakh in the next 2.5 years. So over the next 5-7 years, you will keep getting that 20-25% CAGR on volumes and earnings from this company, right? They also have a very strong presence in Africa, right? Which gives them access to cheap scrap. And they have invested for last 10-15 years in developing a supply network, which is the key business moat in the recycling industry. So we have a buy rating here, and we look at the space and the company very favorably.
All right. So just to sum things up, Sumangal, from the, we'll be watching out for a Chinese stimulus. Maybe or maybe not, we get a domestic safeguard duty on steel. From the aluminium pack, Vedanta over Hindalco, at least as of now. And from the ferrous pack, you have Jindal Steel and Power, which will be your top pick. And graphite electrodes could still be in a space, a bit of a flux for the next few years. But between the two, HEG over Graphite India. Did I get that correct?
Yeah, I mean, we don't have a preference between two. But HEG is the one which is more aggressive. You'll get better growth. Graphite India is one where you will get better balance sheet.
Correct. And as you told us, Gravita is something that you like as well. A pleasure having you in the studio, Sumangal. Thanks a lot for joining in and helping us out with all that we need to understand in the metal space itself. Well, thanks for joining in.
Thanks, Nigel.
Well, on that note, we'll wrap up on this edition of Finding Alpha. I hope it was helpful. We told you all you need to know in the metals and mining space. Thanks a lot for watching.
Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the headlines that we're tracking for you this evening. Indian rupee sinks to a new low against the dollar. $1 now costs nearly 90 rupees. Foreign fund outflows and uncertainty over India-US trade deal hurt sentiment. Sensex and Nifty and marginally in the red after hitting record highs in early trade. Auto stocks gain the most. Real estate stocks see a sell-off ahead of RBI policy this week. A stormy start to winter session of Parliament. Government tables 2 bills to levy higher excise duty on cigarettes and tobacco products, along with a new cess on manufacturing of pan masala. The new cess bill gives government the power to hike rates and add other items to expand the taxation. A dozen of important economy-related legislation on the agenda this winter session. This includes bills to hike FDI on insurance to 100%, opening up civil nuclear energy sector to private companies, among others. Mahindra and Bajaj Auto meet estimates with November sales. Commercial vehicles see a strong pickup with Mahindra, Escorts and Ashok Leyland reporting double-digit growth. Vietnamese electric vehicles maker VinFast all set for the India Drive, set to launch a 7-seater multi-purpose vehicle called Limo Green by February next year. Also plans to roll out its full fleet from bikes to buses in a few years. Enforcement Directorate issues show-cause notices to Kerala Chief Minister Pinarayi Vijayan and former State Finance Minister Thomas Isaac, among others, cites alleged foreign exchange violation to the tune of 466 crore rupees linked to the state's masala bond issuance in 2019. The notices were issued a month ago and does not require the personal appearance of those named. More than 1,000 people have been killed across Indonesia, Sri Lanka and Thailand as storms and floods devastate the region. Death toll in Indonesia crosses 500, with 500 more people still missing. More than 350 people killed in Sri Lanka, with 366 still missing. The top story this evening, the Indian rupee hit an all-time low of 89.78 against the US dollar today, nearing the 90 per dollar mark. The currency has depreciated nearly 90 paise since November 3rd. So what can explain the fall of the rupee? Dealers say that the RBI restricting the supply of dollar could be one of those many reasons. Latha Venkatesh joins us now with the details. Latha, what are you picking up?
Well, the dealers at least tell us they don't have any fresh reasons. Probably it's yet again foreign portfolio investors pulling out, selling equities and taking dollars out of the country. It is possible that there is a slightly higher demand because the very strong GDP number indicates hints that probably there is no rate cut from the Reserve Bank. So further incentive to buy Indian stocks may not be there, and that's maybe making people go, or people are just taking position then maybe the Reserve Bank will not cut and therefore, people will pull out later. So, speculation is, people are just trying to outguess one another. Nobody is speaking of a very large FPI demand. It seems to be the usual demand, but it seems like the Reserve Bank has let go. Usually the Reserve Bank keeps supplying dollars, but once in a way it lets go. And there are various theories on why it is allowing, the rupee closed at 89.45 on Friday. It let go the 89.50 mark, which was a surprise. Everyone thought 50 was a line in the sand. Maybe because, once the rupee becomes cheaper, then the current account deficit will automatically correct because every imported item, the dollar is being multiplied by 90 instead of 85. So you will not import. That would be a natural market-determined way of checking trade deficit. There is another explanation that, when people are moving out, why should they move out multiplying it by 89? Let them get only 88 when they pull the dollar out. So the Reserve Bank is allowing the rupee to fall. There are all these kinds of explanations that are trying to reason why the Reserve Bank did not support as much as it was expected to support, why it did not support up to 89.50.
Right, Latha. Many thanks for those details. Now, the fall in the Indian currency weighed on Dalal Street as well. All benchmark indices hit record highs, but succumbed to selling pressure to end the day flat. Prashant Nair is here with the day's trading action. Prashant?
Well, the backdrop as we came into this Monday morning, new week, of course, was one of very strong growth, real GDP growth of north of 8%. But there was, of course, always a little bit of worry as to nominal growth being around, the gap between real and nominal being the lowest, I think, at least in my recent memory. Corporate earnings are a function of nominal growth, and between 8 and 9% nominal growth does not look all that great. One more data point, which I think got much lesser attention, is tax collections. April to October tax collections at 4.5% is way lower than what the government has budgeted. So that was, that was basically the backdrop as we started the trade. Market, of course, opened higher, the Nifty making a new all-time high, above 26,300, and then selling off, not to recover. A 50-60 point cut. At one point, we came back into the green, only to sort of give back those gains as the GST numbers for November came out, which also kind of underwhelmed. It's the lowest number since February of 2024. Amidst all of this, there was, of course, also what was happening with the rupee making a fresh all-time low against the US dollar, very, very close now, of course, to the 90 mark. I'll just go through, the motions, just getting through the mid-cap, small-cap indices. Absolutely, the small-cap index actually looking better, about 0.25% higher. The mid-cap index was absolutely flat. Now, as far as the large-cap picture is concerned, and what happened there, again, very, very evenly balanced. Tata Motors passenger vehicle as a stock was up 2%. Maruti was up about 1.5%. Eicher Motors was up about 1.25%. Auto sales for the month of November looking better than what many thought they would. On the downside, as far as Nifty is concerned, Max Healthcare down 3%, Indigo down about 1.8%, Bajaj Finance and Sun Pharma were the other casualties.
So flat close there for Dalal Street. Thank you so much for those details, Prashant. Gold prices hit a 6-week high, lifted by expectations of a possible U.S. Federal Reserve rate cut later this month. Silver extended its rally after touching record highs, driven by Chinese inventories falling to decade-low levels and a surge in China's silver exports, which hit an all-time high in October. India's factory output has eased to a 9-month low in November. This can be attributed to export pressure and lower rise in sales. This has also been the slowest improvement in operating conditions since February. GST collections in November came in at 1.7 lakh crore rupees. Remember, this was the first print for the entire month post the new GST reforms, which eliminates the cess component. India's auto sales slightly beat estimates in November. Commercial vehicles witnessed a strong pickup during the month, and this can be attributed to strong festive season and reduction in GST rates. In the two-wheeler segment, TVS Motor registered a 30% growth on an annual basis, while Bajaj Auto sales were in line with expectations. Mahindra's auto business continued to see healthy demand, and its tractor business registered 32% growth. Vietnamese EV giant VinFast is expanding its presence in India. The company plans to launch the 7-seater multi-purpose vehicle called Limo Green by February next year. The company's CEO told CNBC TV18 that EV penetration in India has multiplied this year. Take a look.
The experience is fantastic. We are very happy about the response of the market of India. Before last year, the penetration of EV into Indian market is very less. But since this year, it's multiple. It means that the future of EV in Indian market is huge. And someday it will be a very, very big number.
Shares of Lenskart rose in trade after the company reported a solid set of numbers in the second quarter. This is the eyewear brand's first earnings announcement since it listed earlier this month. Net profit jumped over 19%, while revenue surged over 20% on an annual basis. On a sequential basis, margins expanded 180 basis points, while EBITDA rose over 23%. Wockhardt surged 19% after U.S. drug regulator accepted its new drug application for its novel antibiotic Xenic. The drug has also been granted fast-track designation. Already used on a compassionate basis in India and the U.S. for critically ill patients, Xenic is expected to significantly boost Wockhardt's revenues, with the India business alone projected to generate around 150 crore rupees. Airbus says that of the 6,000 aircraft potentially affected by its recent safety alert on possible flight control system malfunctions, the vast majority have already received the required modifications. The company is now working with airline customers to complete upgrades on fewer than 100 remaining aircraft so they can return to service. Meanwhile, Indian carriers have successfully completed the critical software upgrades on 323 Airbus A320s across their fleets. The Enforcement Directorate issued show-cause notices to Kerala Chief Minister Pinarayi Vijayan last month over alleged foreign exchange violations linked to the Masala bond issuance in 2019. Notices were also issued to the state's former Finance Minister Thomas Isaac and Kerala Infrastructure Investment Fund Board CEO KM Abraham. However, the notices do not require the personal appearance of those named. On that note, it is time for us to head into a short break. But coming up next, a stormy start to winter session of Parliament. Details when we come back. Stay tuned. Welcome back. You're still with us on Business 360. The Parliament's winter session got off to a stormy start, with the opposition uniting on the issues of the special intensive revision, the Red Fort car blast and the air pollution in Delhi. Lok Sabha was adjourned for the day amid sloganeering by opposition lawmakers. The government says that since SIR is an election commission-led exercise, it cannot take primary responsibility. It has, however, suggested widening the discussion to broader electoral reforms. The RE were fireworks in the Rajya Sabha as well. Congress President Kharge hit out at the Prime Minister for his statement ahead of the parliamentary session. Taking a jibe at the opposition, Prime Minister Modi said that Parliament is not a place for engaging in drama.
ड्रामा करने के लिए जगह बहुत होती है, जिसको करना है करते रहें. यहाँ ड्रामा नहीं, डिलीवरी होनी चाहिए. नारे के लिए भी जितने नारे बुलवाने हैं वो पूरा देश खाली पड़ा है. जहां पराजित होकर के आए वहां बोल चुके हो, जहां अभी पराजय के लिए जाने वाले हो वहां भी बोल दीजिए.
प्रधानमंत्री बाहर बहुत जोरदार तकरीर करके आए और अपना प्रेस कॉन्फ्रेंस करें और हमारे ऊपर भी बहुत इनडायरेक्टली हमला किए, लेकिन उसका जवाब तो हम मुंहतोड़ यहाँ पर देंगे.
The government has tabled 2 bills to levy higher excise duty on cigarettes and tobacco products, along with a new cess on manufacturing of pan masala. The new cess bill gives the government the power to hike rates and add other items to expand the taxation. Timsi Jaipuria is here with all of those details. Timsi?
Well, yes, as you know, Finance Minister Nirmala Sitharaman today tabled two bills in the Parliament. Firstly, the Central Excise Amendment Bill 2025 and Health Securities and National Security Cess Bill 2025. The two bills, as you rightly said, aim to change the composition of the indirect taxes, levies on tobacco products and pan masala. To begin with, firstly, under the Central Excise Amendment Bill, the powers that the government is seeking through this amendment is to realign excise duty on cigarettes, cigars and tobacco products like gutka. Also, the excise on cigarettes, as per the proposed bill, is at between 2,700 rupees per thousand stick to as high as 11,000 rupees per thousand stick. Now, this will mean a substantial hike from the current tax incidence. When it comes to the other bill, that is on the health securities and national security cess, well, that is being proposed to be levied only on pan masala right now. But yes, in the bill itself, Centre has reserved the powers to expand the list of items on which these two cesses can be levied anytime later in the year, and also to hike the rates that are proposed currently only on pan masala. When we talk about these two bills, we have to see that these two bills, once they come into action, they will actually change the entire composition of taxation of indirect taxes on these three items, that is tobacco products including cigarettes, cigars and chewing tobacco and pan masala, because currently they are under 28% GST plus the compensation cess. Remember, the compensation cess is only to repay the back-to-back loans that were taken to compensate the states due to losses on account of GST in terms of the COVID losses. So what we are picking up from sources is the fact that once the debate is being initiated in the Parliament, more clarity will emerge as to by when these new rates will kick in, because once the new rates kick in, the taxation on the GST side will be 40%. That is the highest slab that is being proposed on these items, that is cigarette, pan masala, gutka, cigars, etc. So all the tobacco products and pan masala will be at 40% once the new rates kick in. To discuss further, we are joined by our experts who are talking about these two new bills, how they will function and what are the powers that the government is getting through these two new bills.
Sure, absolutely, Timsi. Thank you for taking us through those details. But, as she pointed out, to take this discussion forward, we are now joined by Najib Shah, the former chairman at the Central Board of Indirect Taxes and Customs, and Abhishek Rastogi, the founder of Rastogi Chambers. Gentlemen, thank you so much for taking time out and being here with us on the program. Mr. Shah, let me start by asking you about these new bills and what you sort of make of it.
Well, this was expected because the last GST Council meeting had recommended that the levies on these tobacco products will kick in after some time. because remember the compensation cess, as Timsy pointed out, it comes to an end. And obviously, the government needed to raise taxes. So 40% is what is proposed to be levied as decided by the GST Council. And the rates proposed that in the amendment of central excise are quite steep. I assume these are the maximum rates that the government is taking on board, and the actual rates could be a little lesser than this because it is substantially higher than the existing rates. The existing rate components consist of basic excise duty, NCCD, GST, a compensation cess, and a specific element. So what has been proposed in the Central Excise Act amendment is the specific element. Then we have also taxes proposed per machine for Gutka. Now, I don't think that's a good idea because our experience in Central Excise has been very poor. It leads to great enforcement challenges, but that's what has been proposed in the cess amendment proposed for health and security purposes.
I would like to break you over there, sir, just a moment. As you said, this idea is not new when it comes to taxing the production capacity when it comes to the pan masala, that is health security and national security, the two cesses that the government is proposing. And as you said, this particular regime existed pre-GST also in the erstwhile indirect tax regime, and you saw a lot of leakages happening there. Do you think that leakages will continue in the coming months once this new regime kicks in? And what is it that the government will see in terms of revenues?
Yeah, technologically we are far superior than what we were. But remember, the tax element on a production basis linked to machines would mean necessarily enforcement challenges. It will necessarily mean registration, visits to the factories, etc., etc. So I think it will be challenging. I'm sure they have thought through this. They have learned from the experience in the central excise regime when this regime was there, and hopefully they would have ensured that the same amount of leakage which happened in the Gutka regime in central excise does not take place in this new proposal.
Bringing in Abhishek Rastogi in this conversation, when it comes to the the amendment in the excise plus this new cess. Abhishek, coming to you now, considering that till now the share on indirect taxes on these particular items were going to the states and center equally, but now with this new bill, that is the health security, national security cess, the two cesses will continue to remain with the center. The collections will be with the center and they will not be shared with the states. Do you think there is a little bit of unfair treatment that the states may feel because they agreed on bringing the tobacco products, including pan masala, on board in the GST regime, only because they said that there will be a 50% share which will be shared with the states and the center, but now, and the compensation cess completely going to the states, but now the cesses will be completely with the center?
I think, Timsy, 2 points very clear. The writing on the wall is very clear. Tax sin goods as high as possible. That is one. Secondly, as far as the compensation cess is concerned, it was very clear that the compensation cess will be given to the state for the revenue loss for a stipulated period of time. Now, the government is not shying away. The central government is not shying away to make up for those loans or interest which is becoming due or which has become due. So only after this particular time, this new regime will kick in. That is part one of the question. The second part is we must understand that the revenue collection also has to happen from different sources, and taxing sin goods is a good idea. Now, while there is an indirect tax in the form of central excise duties, which has now gone up, there is an equal addition in terms of the GST number as well, in terms of the rate which has increased on these several products. So even the state portion from the collection would go up. At the end of the day, we must also look the intention of the government to impose this cess, which is called the health security cess, national security cess. And it is the cess which will be levied in an indirect way to collect an indirect tax by imposing tax not only on the machines which are installed, but also the processes which are undertaken. And that is the key. The government is trying to make even the production expensive and by recovering some sort of cesses, and the collection of these cesses, rightly, as you mentioned, will go to Consolidated Fund of India. And all of this collection would be used in the best wisdom of the central government. The funds may still go in exceptional situations, depending on need, depending on the requirements of different states. The states may still be the beneficiary of these cess in certain circumstances. But yes, the amount will go to the Consolidated Fund of India, and hence the federal government will have the right way to allocate this cess further. There are certain issues which are also very relevant. So, for instance, when we talk about the health securities and national security cess, what happens in case of leasing companies? So there could be challenges, as what Mr. Najib Shah also mentioned, that taxing this or collecting this cess may not be easy because there will be a lot of complexities. The imports, you will have to see whether how individuals are getting these products into India. The leasing companies, what are the impact on the leasing companies? And of course, when we talk about the compensation cess going off, there could be a lot of transitional issues and availability of credit. Those will remain a challenge. I think once this is proposed, those issues must be addressed by the government so that there are less of leakages.
All right, Mr. Shah, Mr. Rastogi, thank you so much for taking time out and being here with us on CNBC TV18. And with that, it is a wrap on this edition of Business 360. But before we go, here's a sneak peek into Change Makers of Tomorrow, a campaign spearheaded by CNBC TV18 and Shell. Many thanks for watching.
Let's talk about Change Makers of Tomorrow. This is the third edition. What was exciting about this round particularly?
I think we just wrapped it up and the energy is still with me. I'm still like vibrating. Really heartwarming to see close to 10,000 participants. And we had 80 plus speakers. We had about 60 new startups over there.
Yeah.
And again, an 80 plus new ways of doing digital and AI work in the energy ecosystem. So it was very, very exciting.
What gives you hope about the fact that we're heading towards a better, brighter, cleaner, smarter future?
In our plant in Bombay, in Taloja, we have been able to use in the last 6 months a new technology on IO2, which absolutely monitors the energy consumption in every part of the plant.
Okay.
And in real time, on its own, it's able to optimize and switch to, depending on which is cheaper and more efficient, and close down parts of things which are not getting used. And
so no human intervention
needed.
No
human intervention needed, yeah. And in just those 6 months, we've been able to reduce about 25% of our energy consumption, which then in turn means it's, we are also then offsetting carbon in some way,
and
using
cost.
more cleaner and cost and more cleaner, just as a starting example, right?
Globally, there seems to be confusion. There seems to be a retreat, at least as far as the large markets are concerned, a political retreat from the agenda of climate, from the agenda of climate change. How is that going to result in the decision making in the boardroom?
Every molecule of, kind of like fossil fuel, which we are able to replace with every electron, is going to add not only to our resilience overall, it is more cost efficient, and it provides that extra energy which is needed. So I think for India, it's an and story, right? And we'll have to do both to get there. Substitution, right? But in India, it's an and story, and the faster we can be in that. So in our boardrooms, at least in India, I don't think there is a debate. So it's usually a good and story and a substitution story along the way.
and welcome to Startup Street. I'm Shruti Mishra, and with me is Arundhati Ramanan. These are the top headlines from the startup space. The Department of Telecommunications directs online messaging platforms to enforce mandatory SIM binding for all users. A move is set to affect WhatsApp, Telegram, Signal, Snapchat and others. Telecom Minister Jyotiraditya Scindia tells CNBC TV18 the rule is the need of the hour and there will be no pause in mandates for SIM binding rules.
Wakefit files red herring prospectus with the Registrar of Companies. It is set to launch nearly 1,300 crore rupees initial public offering on the 8th of December. It's a mix of fresh issue of up to 377.2 crore and an offer of sale for up to 4.68 crore equity shares.
Atomberg Technologies is preparing for a $200 million IPO. The talks with investment banks has begun and is expected to appoint advisors soon, Bloomberg reported. The IPO is likely to include a mix of fresh issue of shares and an offer for sale. The listing may take place as early as next year.
Lenskart turns bullish on Singapore. This after the eyewear company said it has become the largest eyewear company in the Southeast Asian country. It's looking to double down on the region and strengthen its market leadership by offering 2-hour deliveries in Singapore.
Vietnamese electric vehicles maker VinFast, all set for the India Drive, set to launch a 7-seater multi-purpose vehicle called Limo Green by February next year. Also plans to roll out its full fleet from bikes to buses in a few years.
Those were the headlines that we're tracking for you this evening. On the hot seat today, Lightspeed Photonics, a deep tech startup building the next generation of ultra-high-speed optical interconnects for AI and high-performance computing, has raised $6.5 million in a pre-Series A round led by Pi Ventures. The funding comes at a moment when AI data centers worldwide are hitting a hard ceiling on speed, power consumption and scalability. Lightspeed claims it has a breakthrough, the world's first 200 to 400 Gbps solderable optical interconnect, promising 4 times faster data movement and half the energy use, all without redesigning existing system architectures. It's a story that sits right at the intersection of India's semiconductor mission, future-ready AI infrastructure, and a global race to solve the world's biggest data bottlenecks. Joining me now to discuss this further is Rohin Wai, the founder and CEO of Lightspeed Photonics. Rohin, thank you so much for taking time out and being here with us on Startup Street. You know, you are building the world's first 200 to 400 Gbps solderable optical interconnect, right? If you could explain to us what real-world bottlenecks in today's AI and HPC data centers are you solving for, and if you could sort of lay it out for us in layman's terms.
Well, the data center at the end of it is the primary real estate for people to get as much compute and as much bandwidth processing capability as possible. So today's biggest bottleneck is the systems and the compute that is sitting in the data centers is becoming increasingly divisive. So everybody wants to build their own systems and they don't want to play well with others. And that's where we become the bridge. So basically, an optical interconnect is kind of a glorified Ethernet cable, if you might. So it's about 100 times more data transfer capable. This, what I'm showing in my hand, is a 100 Gbps interconnect, for example, which is typically coupled with a fiber optic cable. And what we are building at Lightspeed, the solderable one, which you mentioned, is this tiny thing. This is 20 times smaller. So it's literally, it is coming down, bringing the real estate to as small footprint as possible and making data centers get as much per square foot area. And that is basically what we had a breakthrough with, and we have a lot more vision to go forward to.
Absolutely. And, you know, congratulations on the $6.5 million that you've raised, right? But what are your top deployment priorities? How much of this capital goes into commercialization versus expanding the R&D pipeline?
It's almost an equal split between the both, because as a deep tech R&D company, we have to stay ahead of the curve and stay internationally very relevant. Now, some of the bottlenecks typically a hardware company faces is, getting it right for the customers in the first go. We have done that. We did the launch. Now it is time for us to get into the pilots where we can deploy in smaller volumes, where customers develop real confidence in how the product is functioning on their premises. And this is one of those, phases which is a little different from a software company journey, where you have to do a strong pilot, and that's where the capital will be deployed majorly between R&D to getting into the customer's hands. And that's where major focus is going to be for 2026 and beyond.
Sure. And, speaking of your customers, if you could take us through your customer pipeline, are you already doing paid pilots with these OEMs or ODMs? When do you sort of expect to make any meaningful revenue?
Well, we did one paid pilot last year, and we have 2 more in the pipeline for the next year. And what the revenue target is going to have a major impact is when we hit the volumes, right? And that's where these pilots are very important for us, where we get the maximum pull out of these customers. So effectively, we work with the data center OEMs and also Industry 4.0 near edge on-premise solutions as well. So in those kind of scenarios, typically the questions immediately come down to what is your volume production capability? What is the price that we can work best negotiated on? Optimizing every piece of operations and every piece of production and leading it to the integration onto their board. So that is the dynamic that we will be figuring out 2026, and 2027 is where we will start expecting, at least 50 to 60% of what we have raised in the first year itself as revenue.
All right. And you are promising 4x faster speeds and 2x lower power, right? So what new capabilities or form factors can we expect over the next 12 to 18 months as you sort of scale towards full commercial launch?
That's a really good question. Maybe just for the audience, I can just show what we are talking about, really, why I said it's a real estate problem. A typical compute chip looks something like this, right? Like you would see like an Intel chip or an NVIDIA chip. This is actually not a chip. This is a chips package, as you call it. And this sits on a motherboard or a network card where the traditional plug-based interconnects used to go in. And if you want to get, say, 1 terabit data out of this, so you have to literally put tens of this all around it, and you really don't have that kind of space in here. And what we are building, and to go to the next stage, is where the miniaturization is. So you talked about the 20 times reduction in the footprint is the major value add, rather than just the power consumption and increasing the data rate. Basically, what that means is, if I reduce the form factor by 20 times, that means I can actually increase the bandwidth in the given footprint by 20 times. It's not just a 2x or a 4x increment, but actually it is a lot more multiple of that. That being said, power consumption is also becoming very prominent, especially the networking part of it, the one which I talked about, the connecting between multiple compute engines. None of the problems are a single compute, single server problems anymore. So they all have to work together with each other. And that's where the networking power is on the rise. It can go as high as 20-25% to 40%. So now that's where our targets are. We are trying to reduce the power consumption downwards to up to 10 times lower than what the current data centers are consuming in networking. And of course, the form factor reduction means that you can increase the bandwidth capabilities by up to 10-20 times higher. And the future R&D looks very exciting for us. There are multiple patents, and the technologies that we have developed are truly international and interdisciplinary.
Absolutely. So exciting times ahead, and you've done a very good job of explaining that for all of us. All right, Rohan, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much, and I look forward to great things for photonics in India, and we are one of the pioneers, and thank you for giving us a platform.
Absolutely.
Well, moving on and continuing with our hot seat segment, one of India's largest domestically owned contract food services providers, Sensex, has reported a 29% revenue jump to 471 crore rupees while serving more than 3.25 lakh meals a day across factories, campuses and corporate parks. From investing in AI-led operations and robotics to rolling out one of the most inclusive employee ownership models in the industry, Sensex is betting on scale, governance and technology to power its next phase of growth. To tell us what's driving the company's expansion, its roadmap to 564 crore rupees in revenues, joining me now is Sanjay Kumar, the Managing Director and CEO of Sensex. Sanjay, welcome to Startup Street. Now, like I mentioned earlier, Sensex has reported a 29% year-on-year jump to 471 crore rupees in FY25. What were the biggest growth drivers this year, and what is the current valuation of the company?
Thank you very much, Shruti, for having me on this show. To the two questions that you just asked, well, the growth driver was partly because of the initiatives that we put in place, but there was also a crying need in the market for an Indian company to work professionally and deliver contract food services across the country. It's ironical that 78 years after independence, India still is in a situation where no Indian companies even got listed in this space.
Yes.
So the market was expecting, that sooner or later somebody comes into the space. So we kind of were there at the right place at the right time. And I think that has helped us in driving growth.
Okay.
But additionally, if you see, the economy also has done well because we serve the sectors which essentially are consumption driven. So manufacturing is our core, focus area. And that's picked up really well in the last, 2 years.
Yes.
And we believe that it will continue to grow. So that's been the other driver. And of course, the fact that because we believe that the business is no longer about food, that technology will play a very important part in what happens in this sector. And we invested significantly in that space where the differentiation could then be visible to our customers.
Oh, and what's the current valuation?
Well, if you look at the market valuation in terms of what the current multiple on our stock market is, we would come in at 1x revenue. But it's anybody's guess, as you know, you can't predict the markets and you can't run ahead of them. Our basic focus has always been to build a strong, robust business. Within 2 years, we are profitable. We generate free cash of about 1.2%, so we don't burn cash for growth. And that will continue to be our focus, even though a significant part of our revenue goes in investing in technology.
Yes, yes. And picking up from what you just said, you currently serve 3.25 lakh meals a day across, factories, corporates and institutions. So, Sanjay, tell us what ensures client stickiness in such a large-scale, low-tolerance environment. And you've also maintained a 3.6% EBITDA margin. So how do you balance operational efficiency with quality at scale?
Partly. And also, we have let go of our ambition at times. There's always a desire to get more revenue, but we have had to measure, do trade-offs of revenue versus margin because we are not, a large multinational and our competitors are amongst the largest in the world. We are like a rounding off error on their balance sheets. So what's helped us is keeping this semblance of order. At the same time, to your question, what has helped us survive is moving away from the same story about responsiveness, availability, to actually making visible difference by using technology.
Okay.
When I say that, it is right from the production process down to consumption. So how we buy raw materials, we have our own digital platform around that. How we build recipes by using the data of 7 years that we have on SAP, linking that to the consumption, which means how does waste correlate to the recipe? And trying and seeing whether there are tweaks there to bring down wastage, because that's the contribution then we make to the environment as well as to our margins. So it's much more complex than I thought it was when I started the business. But yeah, I'm beginning to learn.
All right. So, in fact, you've invested 2% of your revenues in tech. And thanks for sharing with us how you've automated or optimized your kitchens and supply chain today. But you are targeting revenues of 564 crore rupees next year. What are the new verticals, regions or partnerships that will drive this next phase of growth? Are you looking to diversify beyond institutional catering, towards food tech, supply chain optimization, or even meal analytics as platform?
That's a very good question, and it's very tempting to want to do more beyond what your core business is. But we have to keep reminding ourselves that let's not jump the gun. So let's first do what we are good at and do that well. Alongside that, continue to invest in technology. You'll be, happy to know that we've just copyrighted a digital technology that we deployed for material tracking, which is the first time in the world, this is not about India, that a material tracking tool has been developed, which we have already deployed across the country, where we produce these 330,000 meals. Sure. Now, you can argue that, in the rest of the world, material rejection is not significant. But in India, it's important because we focus on buying local produce so that we reduce the carbon footprint.
Okay.
And if you have to do that, you have to invest in technology to track what you're buying real time. So within 1 hour, across our sites where we produce 300,000 meals, we know the quality of our raw materials.
Sure. We're pressed for time. Very quickly, you've rolled out a share dilution program for employees, extending equity to site-level managers, something far more inclusive than traditional ESOPs. What impact has this had on productivity, retention, and culture? And also, I believe you have plans to raise some funds. If you could quickly answer these questions.
Okay, the rollout of ESOPs is something I personally don't believe. So we have actually given OCPRS, which is shares, because ESOPs, you never hit the, the target price. This is way much more, secure than that. This is the first time in India since it became a country that a food service company has given OCPRS or shares to employees. And in terms of future, we do get a lot of interest from both strategic investors and funds to want to invest in our business. But we believe we've already had one round of debt raised for the leveraged buyout, which was the first in the country, which was with Spark Capital.
Yes.
But for now, what we are thinking is that we will look at the next round more towards adjacencies to our core business, as also on in terms of inorganic, so that the business does not lose sight of the fact that free cash is important at the end of the day, no matter what you do.
Absolutely. And on that note, I'll have to wrap up our conversation. Many thanks, Sanjay, for joining us on Startup Street, and wish you the very best with all your growth plans.
Thank you. Thank you very much, and all the best to you as well. Take care.
On that note, it is time for us to head into a short break. But coming up next, home and furnishings company Wakefit is gearing up for its IPO on December 8th. My colleague Ritu Singh visited one of the company's factories to speak with its co-founder ahead of the big debut. That special report on the other side. Stay tuned.
Wakefit started out as a small D2C company that wanted to change the way Indians buy mattresses. Now, a decade later, it is a 1,200 crore rupee plus business that is preparing to enter the public markets, which is a very different arena with much higher expectations. At the center of that shift is this place here in Hosur in Tamil Nadu, where this factory behind me didn't just build the brand, it now has to prove that Wakefit can operate at the scale and efficiency and discipline that public investors will expect of it. But is the company ready to make that leap? We're going to go inside to find out. Now, inside this factory, you can see how Wakefit has built its business around vertical integration, which means cutting, assembly, finishing, all of it under one roof. And this is the model that gives the company more control over cost and quality, especially as it looks to scale offline. Now, the real test is going to be whether this model can deliver Wakefit the kind of scale and margins that public markets will come to expect. Chaitanya, thank you very much for inviting us to your factory here and for speaking to us today. You know, it's now been a decade since you started out to now, looking to enter the public markets. Just to begin with, for our viewers, as you reflect back on these 10 years, what are some of the 2 to 3 sort of turning points, inflection points that stand out for you that have shaped the way the company has grown?
I think when Ankit and I started about 10 years ago, we were both failed entrepreneurs. So every learning that has happened has been by following customers and what they wanted.
Yeah.
So if you really ask me about 2 or 3 inflection points, the first is we pioneered the 100-day trial policy for our mattresses so that customers could take it, try it in the privacy of their home,
Yeah.
decide whether they like it or not.
Yeah.
The second big thing was to look at a true omni-channel experience.
Yeah.
So we were a purely online company,
Yeah.
which was available on marketplaces and our D2C website. But about 3 years ago, we ventured offline in company-owned, company-operated stores.
Yeah.
That really gave a great experience to consumers, and our philosophy of educating them before they buy was a very big thing to be done offline.
Okay.
So these two were something that's very important for us.
A bit more about the IPO before we move on. Both you and Ankit are also selling shareholders in the OFS. You're offloading about 12.8 million shares together. What kind of message is that going to send to investors? What would you want to tell them about how invested you are in the growth story?
I think more than the specifics of that, what is more important is that post the listing, we both still own a significant amount of company. I think it's closer to 35% if my memory is right. So we are here for the long haul. We have built it for the last 10-11 years. My third venture, Ankit's second venture. For us, Wakefit has been our life's work till now. It's a very small portion given that it is a liquidity event after so long, but we want to continue doing this for a while.
So it is just that, it is just a liquidity event. There's no other message, so to speak.
Yeah, because when you have 35-40% still left, you still maintain creative control, financial control, skin in the game. So we are here for building this.
Okay, let's also talk about the proceeds, because a large portion is going towards, 1, your offline expansion, and 2, your marketing expenses. I mean, rather than say, looking to build your digital channels or invest into the factories. So, what is the sort of thinking there? What are you trying to achieve?
Every company goes through its phases of different investments in different parts of its life cycle. So we have the Greenfield project that you see here. It's one of the largest furniture factories in India. So during that period, a lot of the company's investments went there. Today, as it is scaling up, we need to invest in marketing. But as a company, we've always invested very frugally. In the last few years, marketing has been between 8 and 12% of the overall revenue. So we've been very frugal, make sure that the company customer acquisition cost is low, repeat is very high. And so we've never been a company that's reliant on marketing for survival. It's necessary, you do it. So even that, if you look at the amount that we have put in the IPO proceeds, it still amounts to the same 8 to 10% kind of a range. It is very, very sustainable as a company.
So, how do you project payback from the kind of investments you're making? Your losses have widened this year from the previous year to about 35 crores. What would you guide investors? I mean, while your losses have come down over the years, how soon before Wakefit is a fully profitable company?
So, out of the 9 odd years that when we filed the DRHP, about 7 of them were profitable, EBITDA and PAT positive. The 2 years that we did go into losses was because of the huge investments we made into the Greenfield project. That was never existing in India itself by any company. So today we've reduced that completely, and you will see that even in the coming years we will continue to focus on structural efficiency, ensuring that we are very, very frugal. So you'll see us, even when the full year financials come out, you will see that things have continued to improve.
Okay, let's talk about your omni-channel strategy, because you're spending a lot of energy into going offline as well. You have about 130 odd stores already. What is the plan over the next 3 years? What is an ideal mix for the company post-IPO?
The plan is to continue to open stores, but it is always going to be calibrated. We don't take a store opening target, because that is the wrong incentive to give to the retail team. You will, in your hurry, you will choose the wrong micro markets, you will choose the wrong building, because you are trying to achieve a target. So what we want to do is open a steady 3 to 5 stores every month. Make sure that they pay off very well, the payback period is very low, and you choose the right place, right building. So that is the target. So it's not to open a X number of stores. In terms of the mix, we are not going to be measuring ourselves on that. We are going to be measuring ourselves on the own channel revenue. Because own channel would mean our D2C website and our